it had too much rapid growth in a short span of time. It was literally a pump up. The support line, I believe, for that would be somewhere around $8. I don't think it's going to dip below that.
Warren Buffett dumped all his Wells Fargo, and I put a put on that shit.
Did he do that because he was getting more than 10% shares in finance? He can't have more than 10% of a bank.
Yeah, there was that to consider too, because if he does, then other problems arise for his other stakes.
I just thought he knew shit was hitting the fan, but I guess that's true.
Yeah, otherwise he becomes a bank himself.
He talked about it in an interview with Bloomberg, I think, and a couple others.
Hold on. I want to share something to memes. Now, no matter what your political difference is, I suggest you really watch this. Really, I suggest you watch this.
This is Q, I'm out.
I like your style.
Yo, McDonald's, I don't know how much money they paid to make sure that McCafe was represented. But yo, I suggest you watch it.
Damn it, dude, that's 20 minutes long. Fuck, this is too early to open, or too soon to open. Come on, Cass.
It's gonna be like fucking 3 hours. It's 9:01. I got my coffee on brew. Like, I have yet to even pour myself a cup of coffee.
You guys grab ABB?
Hey, fellas, don't look now, but AMC is running.
Wait, AMC is running? Holy shit, I got some calls.
AMC was still going up?
AMC is running.
I made a shitload of money off of AMC, but I sold out like a fucking week ago.
Hold on. Don't mistake that for... I mean, that's sense, dude. I mean...
Yo, Sundial is killing me. Sundial is killing me right now.
I got puts on Sundial, but I'm getting IV crushed.
My Sundial.
No,
Go load some money at Sundial.
Memes.
I made a ton of money in Sundial.
I sincerely do not know how the fuck Sundial got in my portfolio. I don't remember ever intending to buy it.
Guys, AMC is like, it's running like crazy right now.
Yeah, word. I just looked at...
Look at the volume.
I looked at 611, now it's 628.
640.
Holy shit. Yo, my calls may actually print.
AMC's mooning!
That's why I go long term. I don't really care about making faggots delight. The only faggots delight I have is
we like the stock.
I don't know if you hear it, but my coffee's almost done. Yes.
Bro, if this is doing this in pre-market,
watch that shit fucking crash.
Look at the other days in pre-market. It does run up because there's limited on buying and stuff like that because of platform restriction. Not platform restriction, but just because like Robinhood doesn't allow trading up until a certain point.
Guys,
and
if I hit like 100 grand, all of you are invited to my boat.
Hell yeah.
I'm getting a boat.
This could be a good one for Coder's thesis on the pre-market high and see how it looks during the morning.
Wait, what was his thesis?
Let me tell you, they're fucking panicking right now. They're
what
like,
was Coder's pre-market thesis?
GameStop today is going to fuck up their entire chart.
Bang stocks.
It's gonna fuck up everything that they're doing. Like GameStop is gonna be, they're gonna bring Roaring Kitty. So Roaring Kitty, why are you the ringleader of Wall Street bets? You know what he's gonna say? I like the stock.
I like the stock.
He should, if he was a pro gamer, he would pull this. He would fucking do a Batman voice and say, "Why are you the ringleader of the Congress?"
I will donate to his defense, even though he's rich.
No bullshit though. We like the stock.
AMC really no bullshit.
AMC, 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 AMC.
650.
In the middle of the fucking meeting, you says pump AMC.
I'm down 50%. Let's roll.
Let's roll, baby.
Oh shit! Somebody sold.
Wait, you guys didn't sell your AMC yet?
What are you looking at? AMC? Oh, I found it.
He said, "What are you guys
646,
looking at?"
somebody
AMC.
is selling off hard. They're
This
like,
bag
"You
is
know what?
heavy."
I want my profits, and I want my profits now. Call JG Wentworth.
877 cash
shit.
no.
Hold AMC, AMC, AMC.
Bro, who's this retard just saying MC over and over?
I wish I didn't sell out a week ago.
What a quad.
That's
Yeah.
why I get long
I was
term.
about to say,
Fuck it.
it's looking kind of nice right now.
Dude, fucking X1, what the fuck is this stock?
Bro, I'm
I don't
buying
know,
a
though. Let's
550
see what
fucking
happens.
put on it. Fight me.
In 45 minutes.
It's by GME and
Yeah, that's crazy. I don't know what
Wait.
X1's doing, man.
Have you guys
Yo,
seen the
GameStop
new
fucking
space
came
stock?
back from the dead. GameStop came back
Which
from
one?
the dead.
It's Black Sky.
$56
Public
on a
bias back.
put on it? Hopefully.
Yo, Robinhood just alerted me. They're like GameStop. How? Oh,
Damn,
shit, where's
that
note?
AMC rally is pretty big, though.
No, GameStop is running, bro. I'm telling you, deep fucking value.
Today's the day.
We're about to give them the whole
I
fucking
mean,
shaft.
I hope.
I'm gonna predict a 20% drop
We're
on a
about to
dip
take
4 minutes into the
we're about to take the
trading
MC and give
session.
them the meat ends.
Yo, what the fuck?
GameStop is,
GameStop
bro.
ain't taking no prisoners. Like,
four minutes into trading session, it's gonna drop 20%. My prediction.
Yeah,
And then
bro.
I
go
hope
up
so.
because
Yo,
they
that's
take
a
a lunch
buying
break.
opportunity. We're buying up GameStop stock. 'Cause
Buy the
Roaring
dip,
Kitty
Cass.
should
Buy
never.
the dip.
Roaring Kitty should never be on fucking trial. What the
Cass,
fuck did
8
he do
candles.
wrong?
8 candles. Or wait, no, it's 16, right?
yeah, right. I was hit with 8 candles logic. If I see 8 red candles, I buy.
I mean, I'm not hating. I think it's great. Like, I love it.
Nah, yo,
Watch out, we got waterfall, short
how you
squeeze,
gonna put a
pogo
fucking
attacks
Redditor,
coming.
A guy on Reddit, a guy on YouTube. How are you gonna put him on trial? And you're not gonna ask, why did the hedge fund put so many puts?
Yeah, they're gonna try to go after him because he's got securities licenses.
Yeah,
Exactly.
He had more professional investor experience than he was letting on to, is what they're gonna say.
Exactly. And you know what? As soon as they say it, we're gonna fucking buy.
As soon as I say it, we're gonna buy.
Yo, I'm telling you right now, I got some cash on the side.
You wanna know what'd be crazy? What if the big
my
winners?
coffee's done.
What if the big winners donated like 1 million out of their stake of the win to buying him the best attorney and all that shit to fucking just fuck off the Congress?
Oh my god, guys, I gotta tell you, coffee in the
Did I just
morning
get rid of my
is
Tesla?
amazing.
Did you get rid of your
Coffee in the
Tesla?
morning is
1 billion.
really fucking amazing.
Kathy just bought more.
What, Tesla?
The thing is, I bought it at
Well,
870,
now
and
you
now it's at
don't
like
do much.
779 pre-market.
Oh,
I feel
man.
like I should just sell
What,
out.
870?
Yeah, I bought it pretty fucking high, man.
Damn,
It's
dude.
dude. I
Oh, it's just
think
been
you're all right.
the whole time, but I'm
In the long term, I think you're gonna be fine, but it still sucks to look at.
thinking I want to like pull it out and make money
Where's the
elsewhere, and
fucking?
No, if you believe in the company, buy the dips.
Look at all that Bitcoin they
Please
got
don't
too.
tell me she finished out the milk. I swear, did Maria finish out? I'm gonna be so mad.
Don't be mad, Cass.
Maria, wake the fuck up. Do we have any milk or do I have to go buy?
Dude, I love your fucking energy and like it's time to make money. Wake the fuck up.
Yo, seriously, I made coffee and I have no milk. So now I gotta drink
Oh,
black
no.
coffee.
Is that why you're waking Maria up? Jesus Christ.
Dude, he's such a diva.
Yo, I'm
Maria,
I'm
wake
mad,
up! I
like,
need some milk.
Jesus Christ, Marie, they're minerals.
I'm the asshole who has to go to the fucking supermarket and buy milk. Now I have no.
That's some terrible life.
A milker.
You're bad at decision making if you go to supermarket for one item.
No, I mean it's right around the corner. Shit.
Hey man, sometimes you just need to go pick up some lube.
Well, I'm gonna give you a pass for that one, but what the
But see, when you do that, you got to go pick up like a thing of bananas too or something, just so you don't look like you're just going there for lube. You got to go there for like something else. Like a box
This
of
is
Pop-Tarts.
really interesting.
Yeah,
Is that a thing people do? Like, I'm gonna go to the store and get milk, but I'm gonna buy bananas.
This is interesting. Futures is down almost to exactly what it was yesterday, and the Ultra VIX is kind of lagging.
Now I gotta go find fucking milk. Jesus Christ. You know.
Heavy
least
cream,
I-
my guy. Heavy cream. Do you have any?
his
No,
wife does.
I have nothing.
Yo, I got a story about
I'm
heavy
gonna put
cream,
some
but not like
butter
this.
in my
I can.
fucking milk.
Fucking the
We're gonna have
by
butter.
my office where I work, there's this pizza place that apparently has the spiciest pizza in the entire Northeast U.S. And we decided
That's
to try it one day.
interesting. Spicy pizza. I like that.
You in
flavor.
New York?
New Jersey. When I tell you this
Ew.
shit is the hottest thing I've ever looked at,
What makes it spicy?
everything, dude.
Like, do they have like ghost peppers on that?
It was
shit?
one of yeah. It was one of those things. You ever look at something and you just know it's hot because like the color of the paper,
Right,
like
right.
The sauce on it, dude. This stuff just looked like hell.
Did you say you're from Jersey?
Yeah, man.
Oh fuck, we're gonna have to get some pizza.
Yo, it's an Indian.
Dude.
The place I'm talking about is an Indian fusion place. They have like Indian pizzas, and this one was.
Love Indian food. I did not-
Indian
Yo.
pizzas. Let me tell you. You know what?
We had to sign a waiver to order this pizza.
My friend.
Yo, you
I'm
just
from
let me know.
India.
Let me know, dude. I'm down.
Hell yeah, man. Nah, dude, so we all grabbed a slice at the office, and one of my coworkers, when he bit into it, he ran to the fridge, he grabbed a fucking thing of heavy cream and started fucking chugging it.
That's great. That's great. Arteries are fucked, but his mouth is
Dude.
cool.
It was, the thing is, it was still, it was actually really good, but man, it was fucking hot.
I go to this place called Zika, and it's kind of like
Wait, Indian
The
place?
butter ain't working.
Yeah, it's like Chipotle
Yo, no
for Indian
way.
food.
The butter ain't working.
You order from there, bro.
Yeah, Zika's my shit, man.
Are you, wait, so you're in Central Jersey?
No, actually, I'm across the river.
Oh, okay.
Is New
Either
Jersey
way.
a nice place to live?
Hold on. I'm
It
gonna
can be if you're making enough money.
So, do you know where Rutgers is? Like the
Yeah, buy a place right in the middle
Which
of
one,
Canada.
though?
You're gonna
like the
love it.
Which one,
Rutgers, like the Rutgers, New Jersey Medical Center.
Which one though? Because their medical center, I think, is New Brunswick, right?
Yeah, I
I'll
think
tell you
so.
a
Is that
couple
like a
Okay,
decent
yeah,
place?
yeah.
The first couple times I went to New Jersey.
Yo,
you-
I skateboard by Rutgers all the time.
Nice. 'Cause
Oh,
I
you fucking
might.
skate, Chris.
I don't know how to rank that place because I've
How
never
old
been
are
to
you,
Jersey. What's like the vibe of that area in your opinion?
I mean, it's chill. It's definitely a lot more chill here than a lot of places. But one of the reasons why I didn't go to college in this area is because of fucking SJW bullshit. That's one thing my friend told me about with
Right.
that, like this Rutgers. And man, I'm glad I did not deal with that bullshit.
Quarantine. Mm-hmm.
Let's hope it continues, but I'm not holding.
There's gonna be, there's gonna be a massive sell-off in the morning.
Yeah,
Like-
right.
covering your loss or like gaining or taking a gain? I know, but I mean, a lot of people are still like losing money.
Yeah. My average price on AMC is like $9, but I only bought 5 shares, so I don't care.
Oh, you didn't average down when it was like 4? I would have done that if my cost basis was that low.
No, because I spent all my money averaging my GameStop down and like buying other stuff. I don't really care about AMC, to be honest. I did it for a joke.
Yeah, I feel like AMC might have like a
I was like,
good way.
all right,
to
so I spend $50 and the potential that this goes to like 25 or 30, you know, for 5 shares. Not bad. Pretty safe too.
Yeah, right now it seems AMC has like the best option to like get in and then or recoup your losses if you like dilute it enough.
There's a lot of there's because of the price, AMC actually got bought up by a lot more retail investors, and a lot of them are still pretty confident in their holdings.
Yeah, everyone's banking on like an acquisition from like Netflix or whatever, and they just assume that it's like the bump would be really nice once COVID's over. They make all valid points. Like, don't get me wrong, I truly believe it will bump up, but I don't know how much.
There's valid points to any argument as long as you know just use the brain that God gave you.
Yeah, but I don't remember AMC trading that high pre-COVID.
No, but I mean, this is all what I was going back to. Like, just because AMC wasn't trading that high, like before COVID, doesn't mean they can't use COVID as a wake up call to change their business model.
See,
I exited some of my positions. Like I got out of SOS because I just think it's a little bit memey. Like
I thought you were big on SOS yesterday.
I was, and I was up like $50 on it. Now I woke up this morning, I'm down $40 on it. It's like, what the fuck?
Your opinion shifted so fast.
Dude, I was looking at Bitcoin last night, and I thought SOS was gonna pop off today.
I know, same. Like, it makes no sense. Like, it is what it is.
I was doing a Bitcoin at a pair for fucking weekend, and yeah.
What the fuck was that? Was that a bird?
Good evening, gentlemen. Are you guys prepared for the Deep Fucking Value Congress here?
Oh, is that Shitron? Let's go. I'm ready to lose some money.
Send me a link.
Morning, good morning.
Good morning, Shitron.
Guys. Do you know what AMC is up?
Thank you for your influence on the pullback yesterday.
Shitron, is the market gonna tank today?
No, I think it's gonna moon, boy.
God damn it, fuck you!
I'm selling all my
Fuck you!
Shitron.
Oh, Shitron, should I sell
sold all my MCs gone.
You fucking shit.
Hey guys, Camber Energy up a fuck.
The reason AMC is up today, there's a lot of talk about Amazon actually purchasing AMC. And that's why a lot of people are buying shares in this company. Now, if an acquisition happens, what would that do to the stock price? Let's find out.
Portfolio is red right now. I've never had this happen before.
Yo, that was me for the last 2 days.
You gotta be a gay bear in this market. So let's get it, boys.
Come here. Come here.
It's been a rough 2 days. Like yesterday.
Who's hot linking? They're saying come here in a weirdly seductive way. It's like, bro, get the fuck out of here. What the fuck? Who is this guy?
Nah.
IRS says it's done sending checks. What are we? Did we just get our fucking checks? What's going on?
Come here, turn.
Oh, good question.
Yo, Palantir drops to 24. That's GG for it.
I was reading that.
maybe that's the reason for the push. Then so that word getting out that it might be possible.
Yeah, I think if Amazon buys them and they create a better online platform, they're gonna skyrocket.
Yeah, AMC has really nice theaters. I don't know what Amazon would do with them though, unless they try to do some streaming cloud service, and just get their titles and put it on Amazon Prime Video.
I mean, they
they
can
have
probably use their theaters maybe as brick and mortar Amazon stores. That'd be cool. And just take AMC to the whole online platform.
Does AMC own its property or are they leasing? Because I know a lot of them are connected to malls.
pretty sure a lot of them are leases. But
yeah, I'm not sure on that actually.
But I mean, Amazon has a bunch of originals, right? That they usually don't like go to theaters. They might have like bank on that. Like, oh,
Yeah,
check
they
out these
do have a lot
originals.
of originals. On like
Check
Amazon
out these.
Prime, there's a gang of originals. They're like indie films type of shit. Some are cool.
Yeah, I mean, if things go back to normal, it wouldn't be too surprising if they were trying to get in on the, on the return to going to theaters. Not that it's been that strong in the last few years, but I mean, it still has its place.
You know, there's gonna be a huge surge after this is all over.
I mean, mine is open over here where I'm at, but I know it's not, it's not densely packed or anything.
Not open to its full capacity.
Yeah, people are still scared though, so it's like consumer confidence isn't there. But like once people are like, oh, it's safe now, let's all do something we haven't done in a minute.
Not gonna it's a little bit of a hard decision. It's like I kind of want to get rid of it because I hate having money tied up in it, but at the same time, it's like it could really go up though.
What's nice is it seems to have found its bottom in that $6 range, that $5.50 to $6 range. So holding at this point, I mean, it can't get much worse, hopefully.
I might do a sell off.
Somebody asked why we believe AMC will drop when market opens. When market opens, it usually has a larger volume of trades, and when people see that price jump, they might want to unload some shares.
Yeah, people bought in when it was like $4. Either trying to jump in on the residual hype, but when they see this type of gain, I mean, I would.
I can't believe OCGN closed negative 666%. That's such a good sign.
Is it?
If you love Satan.
Apparently, their church does really good in the world.
In advance, but does he have a little bit of
We
brown
got 5
hinted to
minutes,
him?
boys.
No, he's all white.
Okay, then he's not going to Guantanamo. He's going to the same prison that fucking what's his name went to
It's
from
9:30.
He's the fuck.
Wolf
He's
of Wall
Vlad.
Street.
Vlad and Crypto Kitty. Are
Guys,
the
we
same
got
people.
5 fucking minutes. 5 fucking minutes. Don't tell me you shut the fuck up. You shut the fuck up.
We get to see them kill all 5 people. They're deposing live on TV. They're just gonna
Making
line them
money.
up in the shooting gallery.
What the fuck, Cal?
What? Is that the way they used to take care of things?
It's too early to be this edgy.
Well, that's what they used to do.
It's never early to be that edgy.
called the market for
Who's
today?
buying FDs today?
I got some faggots.
Yeah, he said a green day.
Yeah, shit.
Uh-huh.
I just think we should bring it back to the good old days with shooting galleries and things, you know?
Oh, shit,
If
wait.
today is anything like previous dips were, it could turn into a green day because
That
everybody's
doesn't
gonna
work,
just buy
Siri.
in.
Where's my fucking
Lemmings,
phone?
man. Lemmings. They're gonna hear some shit on the news and come to lose their.
How's your $800 calls on GME doing?
Terrible.
That seems like a good call.
I got a negative $2 put on GME. I'm gonna win the bankruptcy battle.
Are you gonna sell that to the bank?
Yes, for premium plus interest. Tilray was dropped down to neutral.
Check out ONTX.
Fucking Tilray. I think I'm red on Tilray too.
Dude, ONTX is that stock people are trying to pump. Who's this guy?
I'm not trying to pump anything. It's just doing well pre-market.
Oh, on Kova? That was like big from like a week ago, wasn't it?
Mm-hmm.
Seagate Technology was upgraded to a buy with a $90 target range, so if you want to be a bull, there's a chance.
CCSIV to the moon.
Holy shit.
AMC back under $6.
I know. I know.
Look at AMST.
Look at CAKE, cake.
Wait, was it you talking about it yesterday?
Oh yeah. Oh yeah.
Yo, I could buy fucking Cheesecake Factory, dog.
Bro, I'm only gonna buy Cheesecake Factory if you sing Cake by the Ocean.
That was my week, bro.
Fucking Q's. Yo, fucking Q's Pound Cake by Drake in the background.
We'll only buy it if we can propagate.
I'm
literally tricked. Like,
Bad again a little bit, but it was up. It was good.
Hey, everybody in the YouTube chat. We got a lot of people there. Did everybody read the testimony from Melvin Capital and also from Roaring Kitty?
I read enough of Roaring Kitty's testimony to be like, yep, he's pretty legit.
I love his testimony. It's so like precise. It's like
He doesn't beat
on
around the bush. He gets right to the point. Look, I worked at Mass Mutual, but I wasn't a financial advisor.
Yeah. If you haven't gotten a chance to read it, everybody, like especially those in YouTube, yeah, please go read it. And also read the Melvin Capital one.
Do you have a link for that? Do you want to drop it in the chat for the people?
It's like on the, I think the government site. Let me see.
Yeah, you guys can read it
I'm sure
in
you
the
can
chat.
easily find it if you typed up like Keith Gill testimony, but not everybody knows his name.
Yeah.
He,
Nice. Tame's got it in.
Yeah, he's gonna be speaking in like 2 hours. Man, he got slaughtered.
Okay, 6:30. I mean 9:30 for you guys on the East Coast. Market open.
Why does that bleep?
I know. The bleeping, and somebody's not using push to talk, I think.
I try to press the push to talk. I was using my phone, and like the mic mute button is literally right above it, so I keep pressing.
AMC's got a huge little pop here right now.
Yeah, it's nice. It's maintaining now that market's open.
I thought it was going to drop it open. It's really holding the strength.
Are people planning to like cut AMC when they break even, or like make a profit if there is one?
I'm hoping for at least a 20% profit before I cut in some profits.
Yeah, I want a profit for holding it this long. It's true.
I mean,
This
it's
is
been like a
another
few
play.
weeks, right?
I mean, yeah, the thing is that AMC was a $30 stock, you know, a couple of years ago. It's gonna go back up there. I think it was deeply undervalued. That's my opinion.
Well, it's breaking that 6 mark right now.
Well, there's so
Yeah.
many competitions to AMC. In my city, we have like Regal Starlight, and it's really top notch. It's Chinese owned.
Yeah, I don't know.
Yeah, we were talking how like before COVID, AMC was still like trading pretty low, just due to like the emergence of like
Yeah.
streaming services. Because like
Yeah.
the difference between like a few years ago and now is like we got Netflix and stuff now.
This is true, definitely. But I think that they have the ability to use this time to like reevaluate how to turn the business and profitable. Like there is really no alternative other than staying at home. What are you supposed to do? And people really do like going to the movie theater. What?
Oh, it's gonna blow up.
Nice. Wait, who is Stan the Man? Oh, that means that they've probably had him on like to talk about something once.
And letters to the editor doesn't make you a contributor.
We're being mean.
Technically, it does because you contributed a question.
It's not the same.
In a school project, one guy does all the work and somebody writes their name. I contributed.
Hell
Mean
yeah.
girls and guys.
Technically, he did.
Without him,
Par-
you wouldn't have that last name and you would have failed the project.
That's right.
Look at Peridot go. Peridot. PDAC. I did buy into Peridot. This one is an acquisition company. Blank check. That's geez, I can't even remember what they're doing right now. I think they're doing batteries. Yeah, the life cycle. That's what they're doing. The lithium recycling.
Maybe they were trying to drop the price of AMC to get those Chinese investors out of the company. What do you think about that?
Are there? You mean they're stock investors, or they're actually investors in just the business?
Oh, it's a whole company. They had tons of shares of AMC. It's not on Open Insider yet, but they've already converted their shares to sell before.
Cinema is a big thing over there, though. Like even like for like on the U.S. side, like we aim for like the Chinese market, and like because it's so big, they like bleed in over here as well.
Neo is on sale today. Right now, pretty good price.
So is Plug if you can buy in.
I think Space was too. Oh, Space is up. Space was down to like low 47 just before market opened. It's back up now. Sorry, that was late.
I just can't wait to hear Keith Gill speak. It's going to be brilliant today. Because he's not really a financial advisor. He was just like education. I did a similar job before, so I know what he's talking about.
It's so good. It's so good.
Totally, man.
And he is like a really good speaker. He's like, when he's doing his videos and stuff, he's like captivating to listen to. Like, he's so passionate about it. It's going to be really interesting.
I gotta get some popcorn.
I thought when you work at like a financial institution, you have to get clearance to even enter into the stock market, don't you?
I have a good idea. Who's the best person at reading here or speaking? I wanted to post a link and then have somebody read out his speech.
Oh. Yeah, I don't feel like that.
Me either.
Maybe after some coffee.
So moved. My heart.
No, because I'm very vivid imagination. So when I saw the part about the winter, going back to see the family, but then the sister
I
died.
literally just opened the link. Don't spoil it for me yet.
Oh, you have to read it. Read it. Read it.
No.
So good.
Read it. I put it in
You gotta read it out loud. You volunteered yourself.
Just read it out loud.
Definitely not. Nope.
Share your first time reading it with us. Share your first time with us.
No way. I am not gonna be peer pressured into reading something.
Wanna bet?
Do not
I'll read it.
double dog dare me.
Okay, cool. We got a volunteer.
Guys, in the YouTube, I put the video link where you'll be able to watch it live. 2 hours at 12 p.m. It's going to be very boring in the beginning, but after Keith Gill and Vlad start talking, and you'll see a lot of questions being asked by the financial committee.
Did you guys see the testimony from the Melvin Capital dude though? He basically like said Wall Street Bets was anti-Semitic.
Because he's a Jew, we're all attacking him.
Man, he said that he's gonna get.
He did. He did.
Yeah, I had no
said
idea
that.
of his race, and nor did I care. It was
Nobody gives a fuck.
What a straw man argument. Fucking bullshit.
I'm not anti-Semitic. I believe in free capitalism where you don't prevent people from buying and only allow them to sell. If I went to the grocery store and they did that to me, I would be pissed off and not shop there again.
You know, but he tried to say that there was like no collusion between them and Citadel. I'm gonna pull up his testimony here. Let me.
Bunch of lies. You know, we all know. We know what's up.
Yeah, it's not very like long. His. Yeah. Again, if anybody wants to see the testimony, you just Google it. Just do like Melvin Capital testimony. It's all on. I think it's house.gov, docs.house.gov. That's all uploaded. His is literally like 2 pages long, 2 and like a little smidgen.
Yeah, it's right there.
I'm looking at it right now.
House.gov.
I think he severely underestimates how many people on Wall Street Bets just YOLO'd their money into it. Like there were a few people that did due diligence, but most of the people were just like, "Yeah, okay, let's do this." That's Wall Street Bets. That's what they do all the time.
But I think the way that he's presenting it is that he is trying to gain sort of sympathy. I don't know if that's a clear, but he's trying to gain, sort of paint this picture of people losing their money because of Wall Street bets and not actually focusing on anything that they were doing, which is this is what he said over here. I'm actually just gonna, if people are cool with that, I'll just read it. So
that is cool.
This is the testimony of Gabriel Plotkin, founder and chief investment officer of Melvin Capital Management. Chairwoman Waters, Ranking Member McHenry, and members of the committee, I would like to thank you for this opportunity to share Melvin Capital's perspective on the recent trading activity in GameStop. I am the founder and chief investment officer of Melvin Capital. I am humbled by these unprecedented events. Many investors on all sides, on all sides, I love this. Many investors on all sides have experienced losses. I am here today to share my personal experience and to be helpful in this conversation. I understand that part of the focus of this hearing is the decisions of stock trading platforms to limit trading in GameStop. So he already shifts the focus away from him onto the decision of stock trading platforms to limit trading. Okay, so anyway, he goes, I understand that part of the focus of this hearing is the decisions of stock trading platforms to limit trading on GameStop. I want to make it clear at the outset that Melvin Capital played absolutely no role in those trading platforms' decision. In fact, Melvin closed out all of its positions in GameStop days before platforms put those limitations in place. Like you, we learned about those limits from news reports. I also want to make it clear at the outset that contrary to many reports, Melvin Capital was not, quote, bailed out in the midst of these events. Citadel proactively reached out to become a new investor, similar to the investments others make in our fund. It was an opportunity for Citadel to, quote, buy low and earn returns for its investors and when our fund's value, if and when our fund's value went up. To be sure, Melvin was managing through a difficult time, but we always had margin excess and we were not seeking a cash infusion. So now it goes on to my background, Melvin Capital. I am here testifying today far removed from my background. I grew up in a middle-class family in Portland, Maine. I went to a public high school, I studied hard, and got into a good college. Upon graduation, I did not have a job. Today, I am married with 4 children, and my time is spent with my family and on Melvin Capital, which I founded 6 years ago. I named Melvin after my grandfather, who ran a convenience store. I wanted the firm to represent his values, integrity, hard work, taking care of customers and employees, and commitment to excellence. Melvin Capital manages a hedge fund. Investors such as academic institutions, medical research, and other charitable foundations, pension funds, retirees, and others invest with us. We have 36 employees and hundreds of investors, and I feel a personal duty to all of them. Melvin Capital's long-short investment strategy. Melvin specializes in the consumer and technology sector, including companies like GameStop, AutoZone, and Expedia. Most of our investments are, quote, long. In other words, we buy stock in companies that create jobs, grow the economy, and develop new products for consumers. We do this after extensive fundamental research, sometimes literally for years. When her research convinces us that a company will grow relative to expectations, we make a long-term investment. When our research suggests a company will not live up to expectations and its stock price is overvalued, we might, quote, short a stock. Like with other long positions, our practice is to short a stock for the long term after extensive research. We also short stocks because when the market goes down, we have a duty to protect our investors' capital. There are laws governing shorting stocks, and of course, we always follow them. In addition, it is very important to understand that absolutely none of Melvin's short positions are part of any effort to artificially depress or manipulate downward the price of a stock. And nothing about our short positions prevents a company from achieving its objectives. It's just Melvin's view about whether it will. GameStop position. Specific to GameStop, we had research supported view. We had a research supported view well before the recent events. In fact, we had been short GameStop since Melvin's inception 6 years earlier because we believed and still believe that its business model, selling new and used video games, they just like contradict themselves. Anyway, selling new and used video games in physical stores is being overtaken by digital downloads through the internet. And this trend only accelerated in 2020 when, because of the pandemic, people were downloading video games at home. As a result, the gaming industry had its best year ever, but GameStop had significant losses. January frenzy untethered to fundamentals. In January 2021, a group on Reddit began to make posts about Melvin's specific investments. They took information contained in Melvin's SEC filings and encouraged others to trade in the opposite direction. Many of these posts were laced with anti-Semitic slurs directed at me and others. The posts said things like, quote, "It's very clear we need a second Holocaust. The Jews can't keep getting away with this," end quote. Others sent similarly profane and racist text messages to me. In the frenzy during January, GameStop stock rose from $17 to a peak of $483. I do not think anyone would claim that this price had any relationship to the intrinsic value of the company. The unfortunate part of this episode is that ordinary investors who were convinced by a misleading frenzy to buy GameStop at $100, $200, or even $483 have now lost significant amounts. When this frenzy began, Melvin started closing out its positions in GameStop at a loss, not because our investment thesis had changed, but because something unprecedented was happening. We also reduced many other Melvin positions at significant losses, both long and short, that were subject of similar posts. Looking forward, I am personally humbled by what happened in January. Investors in Melvin suffered significant losses. It's now our job to earn it back. And while I do not think that anyone could have anticipated these events, I have learned much from them, and I am taking steps to protect our investors from anything like this happening in the future. I look forward to answering your questions.
What a fucking loser.
I'll play
Seriously.
that sad violin in the background.
He's being so fake.
Oh, poor fella.
It's unbelievable. It makes me
Wolf
like
of Wall
so
Street.
angry. I'm sorry.
It's just
like
Mine
yeah.
really played the victim card. Hella
Yep.
good.
they didn't focus
Because
anything on their positions and like, oh, actually the part that they contradicted themselves though. We had been short GameStop since Melvin's inception 6 years ago because we believed and still believe that its business model, selling new, is being over. So what did they just say? we
They,
short.
they sent me text messages and they threatened my family, and it just made me sad.
I never saw anything like that on Wall Street Bets. I never saw anything anti-Semitic. I don't know what they're talking
Yeah,
about.
I mean, Wall Street Bet's kind of toxic. I mean, I wouldn't put it past them.
They're not. I never
I
saw
wouldn't.
anything about like no racial shit like that.
You could probably find something.
You,
or anything like that. We're
you
toxic
must
to
have had
ourselves.
to. You must have had to dig really hard for something like that. Like that
Yeah, it
wasn't
would probably
like
in
the
like the comments.
It's the
That was
internet,
not like.
though.
Sorry,
Like,
go
it's
ahead.
going to be there. The internet's always going to have shit like that. Like, you know what I'm saying? You can't just say
Yep.
that. That's the internet.
Yeah, that's the thing, right? So we know it's the internet, right? But like, if you're talking to a bunch of suits, they can be like, well, this is just human decency. So even if it's a forum, you should at least like uphold your moral values. We understand it.
Hella literal.
Yeah, I mean, they have the option to do it, right?
You know, with bots or anybody else, like who's behind Reddit? Anybody can post anything on Reddit.
Exactly, but you still have to like like that's what they're doing, right? That they're taking advantage of like the fact that the people they have to appeal to don't assume the best in people or the normality of people, right? So it's like they don't have to convince us; they have to convince, I guess, whoever they're like talking to. So it's like we get it, we understand what they're playing at, but like, do the people they're talking to know?
And the idea that none of Melvin's short positions are part of any effort to artificially depress or manipulate the downward price. This is like what hedge funds do. This is like known. They do this. It's like just lies. I hope
It's
they
not
get
a
the
lie until it's proven wrong or whatever.
right. Right. It's true. Oh my god, it's so upsetting. It's so upsetting.
It's like correct logic.
Two things. That guy is a total wiener. And two, CCIV just hit 59.20.
Yes.
Let's fucking go.
Yeah, I'm not gonna lie, I didn't want to average up because I went from a $30 average now to a $40 average price per share, but I added another 30 shares right at the low this morning. Let's go.
Let's go. KMPH also shooting up.
Come on, $60.
Did you guys see that post on Wall Street Bets about there was an Interactive Broker CEO who was on there, and he admits that had they not stopped or pushed the pause button on us, GameStop definitely would have gone into the thousands, plural, thousands
Yep,
per share.
I believe
Dude,
so.
that would have been awesome.
I think that was like the bet that a lot of people were making when they were investing at that price, is that
Yep.
unless folks had intervened, that's what seemed like was going to happen.
So even
This
if you had
idea,
bought, yeah, even if you had bought at the high, those people
right?
were still right. They were still correct.
Yeah. This idea also that he says right in the beginning about Melvin Capital was not bailed out in the midst of these events.
Yeah,
Citadel proactively reached out to become a new investor. Why would they do that?
Why would they have any? I don't. Is there a nuclear
Dude,
bomb
Diamond, this
about to
makes me
go
feel
off?
so better hearing that.
Why would you decide to spend any investment
Exactly.
at all in a nuclear dump that's about
Exactly.
to be set off? It makes no sense. The full
It makes no sense. It makes absolutely
proactively
no sense.
decided to throw us a lifeline so that we didn't flounder and take a whole bunch of people with us because we got dirty secrets in our vault.
Yeah, it makes absolutely no sense.
Well, anybody with a half a brain would agree with that, and I think a lot of stuff's going to come to light. To be honest, just the hearing in general could be another, catalyst for the interest to be regarnered and people to pick up new positions.
He says that we had margin excess and we were not seeking cut, but then he also says that they had to liquidate their investments to be and they at a loss. So what is he talking about?
Yeah, why are you looking at anything in law? You still have playroom with margin and other assets in play. Why would you feel the need to take a loss on any holding?
Yes, Desnet Donko says no one ever got rich by telling the truth.
Yeah,
It's
this is a
really
dirty game. Super dirty game.
like his testimony, they did not get into like any details. They didn't get into any specifics that really indicate that they were not colluding or they weren't doing things wrong. It's very sort of
Churchill hit 60.
yay. Is that a new hire?
For what? Oh, no, CCIV.
New high, new base.
CCIV, no, it's already, I guess it already hit 60.25, huh? Today's high. Oh no, that's it, 60.25. Yes. I gotta look at Weeble. Oh yeah, 52-week high. Yeah, it's getting some resistance up there, so but it did pop up and make it to 60.25 for like a second. Half a second.
So, since you did so good reading that letter, you're gonna read Keith Gilling's letter.
Do people want to hear Keith Gills now?
Yes.
Lauren Kitty, DFE.
Yes.
Okay, let me pull it up.
Thank you, much appreciated.
No problem. I really love that letter. I'm gonna get something to drink. Give me 1 second.
No,
I don't know.
I hear it too.
I heard like a spoon maybe hitting a cup.
Yeah, nobody's moving right now.
I think they got like super paranoid or something.
No, I heard something for sure.
Like, oh no, the jig is up. Put down your spoons.
They're putting their things on mute. Everybody's going on mute. Are we ready for the testimony of Keith
Yes.
Patrick
Yes.
Gill before the U.S. House Committee on Financial Services? Thank you, Chairwoman Waters, Ranking Member McHenry, members of the committee. Before I go further, I want to be clear about what I am not. I am not a hedge fund. I do not have clients, and I do not provide personalized investment advice for fees or commission. I am an individual investor. My investment in GameStop and my posts on social media were entirely my own. I did not solicit anyone to buy or sell the stock for my own profit. I did not belong to any groups trying to create movements in the stock price. I never had a financial relationship with any hedge fund. I had no information about GameStop except what was public. I did not know any people inside the company, and I never spoke to any insider. As an individual investor, I use publicly available information to study the market and the value of specific companies. I consider a complex array of factors and track hundreds of stocks, all in search of market inefficiencies. Like many people, sometimes I post on social media my thoughts and analysis about individual stocks and whether they are correctly valued. I did that with GameStop. I believe the company was dramatically undervalued by the market. The prevailing analysis about GameStop's impending doom was simply wrong. A little about my background. I grew up in Brockton, Massachusetts. My father was a truck driver and my mom a registered nurse. I was one of 3 kids and the first in my family to earn a 4-year college degree when I graduated from Stonehill College in 2009 amid the Great Recession and without a long-term job. My first post-college job was in operations at WB Mason, an office supplies company headquartered in my hometown of Brockton. Between 2010 and 2014, I worked for a family friend at a startup company in New Hampshire, trying to build a software program that would help investors analyze stocks and offer related research. We also tried to start an investment firm, which dissolved not long after it was created. My salary never exceeded $40,000, but I did learn something about investing. I learned how to do the tedious work of digging through a company's financials and focusing on its real long term value, not prevailing market sentiment or headlines. I married my wife, Caroline, in 2016, and I found a job working operations and compliance at LexShares. I left that job in March 2017, and for the next 2 years, I was effectively without a job. During that time, I began actively analyzing a wide array of stocks to try and keep and increase our limited savings. It was both a way to make money and an interest that I pursued passionately while I lacked a job. In April 2019, I accepted a marketing and financial education job at MassMutual. Carolyn and I were both happy about our prospects. I had never made a salary over $100,000 a year before, and I was thrilled just to be working and to have benefits again. My title was Director, Financial Wellness Education. My job was to help develop financial education classes that advisors could present to prospective clients. I never sold securities, and I was not a financial advisor. I continued analyzing stocks on my own time and investing my family's funds. In early June of 2019, the price of GameStop's stock declined on worse than expected earnings, and it began trading at a deep discount, below what I thought was its fair value. I was aware from public reports that a well-known investor, Michael Burry, was interested in GameStop. Because I thought the stock was undervalued, I purchased call options on June 7th, 2019. I increased my position throughout much of 2019 and 2020 because as I continued to analyze the company and its prospects, I became increasingly confident that the share price was indeed dramatically undervalued. Two important factors, based entirely on publicly available information, gave me and many others confidence that GameStop was undervalued in 2019 and 2020. First, the market was underestimating the prospects of GameStop's legacy business and overestimating the likelihood of its going bankrupt. GameStop, the only major retailer dedicated to gaming, has over 60 million members in its loyalty program and continues to maintain a sizable market share within the gaming industry. Its legacy business, comprised primarily of selling physical video games and related equipment within their stores, was likely to generate meaningful cash flow following the release of new gaming consoles in late 2020. I grew up playing video games and shopping at GameStop, and I'm looking forward to buying a new console at GameStop. I knew the company had an opportunity to reinvigorate this business by improving customer service for gamers, upgrading its online presence, and offering complementary product lines such as PC gaming and accessories. Second, I believed, and I continue to believe, that GameStop has the potential to reinvent itself as the ultimate destination for gamers within the thriving $200 billion gaming industry. The new console cycle provides GameStop a unique opportunity to pivot from a traditionally brick and mortar mindset towards a technology driven business that excels in gaming products, experiences, and services. By embracing the digital economy, GameStop can pursue new revenue streams, including larger gaming catalogs, digital content and community experiences, online trade ins, streaming services, and esports. While I may be the only panelist here today who had faith in GameStop, I was hardly the only person who advocated these points or ones like them. Investors, including Chewy co-founder Ryan Cohen, whose purchase of GameStop shares and advocacy with the GameStop board helped positively affect the share price in late 2020, publicly expressed similar views. I want to pause to note that the investment I made was risky, but I was confident in my analysis, and I was willing to accept the loss if I was proven wrong. My timing was far from perfect, and many of the options contracts I purchased expired worthless because GameStop's stock price remained depressed longer than I expected. I've been asked why I decided to share my investment ideas on social media. My investment skills had reached a level where I felt sharing them publicly could help others. I also thought by sharing my own ideas and accepting critiques, I would be able to identify holes in my analysis. Hedge funds and other Wall Street firms have teams of analysts working together to compile research and critique investment ideas, while individual investors have not had that advantage. Social media platforms like YouTube, Twitter, and Wall Street Bets on Reddit are leveling the playing field. And in a year of quarantines and COVID, engaging with other investors on social media was a safe way to socialize. We had fun. The idea that I use social media to promote GameStop stock to unwitting investors is preposterous. I was abundantly clear that my channel was for educational purposes only and that my aggressive style of investing was unlikely to be suitable for most folks checking out the channel. Whether other individual investors bought the stock was irrelevant to my thesis. My focus was on the fundamentals of the business. It's worth noting that after 5 months of streaming, my final stream of 2020 topped out at just 96 concurrent viewers, with an average view duration of 25 minutes. On Christmas morning, I had only 529 subscribers on YouTube and 550 followers on Twitter. These numbers are tiny. They were rarely more than a few dozen folks on the stream on any night. The reality was, people didn't really care about boring, repetitive analysis of GameStop and other stocks, and that was fine. For those of us who did care, the stream provided us an outlet for refining our fundamentals-based thesis. We were able to analyze events in real time and keep each other honest. Ultimately, my GameStop investment was a success. But the thing is, I felt that way in December, far before the peak, when the stock was at $20 a share. I was so happy to visit my family in Brockton for the holidays and give them the great news. We were millionaires. That money will go such a long way for my family. We had an incredibly difficult 2020. In addition to dealing with COVID, we lost my sister Sarah unexpectedly in June. It brought me tremendous joy to share good news with my family for a change. I am grateful to be able to give back to my community and to support my family, most of all my wife Caroline, who has stuck with me through very tough times. As for what happened in January, others will have to explain it. Threshold lists, order flow, halting purchases, according to the media, these all had a material impact on GameStop stock in January. Here's the thing. I've had a bit of experience, and even I barely understand these matters. It's alarming how little we know about the inner workings of the market, and I am thankful that this committee is examining what happened. I believe an analysis of GameStop's recent price action must start with a discussion of the exorbitant short interest in the stock, as well as an investigation into any potentially manipulative shorted practices and brokers' reported failure to timely deliver shares and settle trades. As for what I expect moving forward, GameStop's stock price may have gotten a little ahead of itself last month, but I'm as bullish as I ever have been on a potential turnaround. In short, I like the stock. And what's stunning is that, as far as I can tell, the market remains oblivious to GameStop's unique opportunity within the gaming industry. Boom. That's it.
Legend.
That's awesome. Fuck
In
yeah.
short, I like the stock.
He is
I can't wait to hear
so
those words
awesome.
come out of his mouth in that ear.
Breaking. CCIV 69, I believe is what it was.
It's
Holy
69.
shit.
No, it's not 69. It almost hit 62.50 though.
Yeah, 60-69. Just hit 60-75 too.
Yeah.
I hit 69. I was like, what the?
Is it time to cut half or keep holding? 'tis the question.
You
I
have
already
to
got
make that
some.
financial decision for yourself.
That was
Yeah.
yesterday.
No, dude, you guys got to make it for me. I'm too stubborn.
Negative.
Well, we have a problem. I don't have a sell button.
Also, it
Damn
actually
it.
topped
You
at
didn't order one.
62.50.
What, your broker took out your sell button also? My broker
I
took
think
out my buy button.
I think that people, no matter who's listening, I hope there's no way that they can frame that in a way that works negatively for him, because I mean, we'll see what the
You know,
media does.
with the way things are going, shit. These guys have a shit ton of money. They're looking for someone to blame, and it's not going to be the poor hedge fund guys, right?
No. I mean, it's really going to be a matter of how the media pundits are going to frame it for people who get their news from those sources.
Yeah.
Well, I think there's been a large enough rallying cry of big enough names that have, kind of said the same sentiment of
Yeah.
this wouldn't have happened if they weren't doing what they did. So they it almost is a 50-50 split in the eyes of what I've seen being portrayed from people like, Mark Cuban getting involved and O'Leary getting involved and, some of these other bigger names, like huge invested names saying, yeah, good on you.
Yeah, it's going to be I'm kind of scared for how it may get framed.
Just a reminder to everybody, including the YouTube chat, it is the Chinese New Year of the Ox.
Yes.
I feel very bullish about that.
Yeah.
Come on, man. Come on. This is a year people make money, man. Let it happen. Hold the line. Hodl the line.
Hodl. Yeah, I mean, it's such a strongly worded letter. It's so like precise. It's so just eloquent.
I feel like it's really human.
It's authentic. Yeah, I was
Exactly.
just gonna say it's very just
You
genuine.
can feel like there was actually real feelings when he wrote that letter.
Right. Well,
The Melbourne Capital one it sounded very mechanical, just like very autonomous, like just you know what I mean, just like
It sounded defensive.
Mathematically say exactly what I need to say in the time I have.
It sounded suit-ish.
Well,
Keith was like, I know exactly what I need to say. I even have enough time to give them a little backstory about me.
well, I think they have to do a little bit, because if you see Melbourne Capitals, it's very similar. They give a little background about themselves. They talk about, the looking forward. It's sort of the same format. I think he hopefully when he gets up there, because I think that's what he did with most of us that have I think seen him. I can speak for myself, is that it was just captivating to watch him just go on passionately about GameStop. It was just endearing. So hopefully he has that effect.
Body language video about his somebody analyzed his body language and his vocal patterns and stuff and his eye contact and his just like the
Right.
it is just truly compelling for sure.
It is, and I think that he'll be able to do that hopefully with the committee as well. Be endearing and captivate them.
We're all stuck at home. Video games are going to thrive more than ever. I don't see why they wouldn't agree with that. It's a multi-billion-dollar market too, with all esports on the rise. I've never seen a game grow as exponentially as League of Legends has. Holy! I used to play it when it came. I still play it, but I mean, I was playing back when it started, and just how many more people play it now, and it's ridiculous. The community is amazing. There's so many amazing events, and yeah, it's I don't know. I'm a pretty big like video game nerd. Always have been. Grew up playing Nintendo, and my dad played Super Nintendo with us, like my brother and I. And yeah, it just like I see a huge future for like we're as far as video games go, we're just getting started.
So I'm trying to see what the how the media reports are framing it right now. So some of the headlines that they're breaking right now, right? NPR, which is probably going to have a sympathetic take, says GameStop hearing today, Roaring Kitty along with CEOs to appear before Congress. Already that like seems to be like along with the CEOs, along with the suits. Oh gosh. I want to see what they have to say. Bloomberg says Roaring Kitty sued for securities fraud over GameStop rise. Massachusetts, and this is a local one from Massachusetts, Boston. Massachusetts investor known as Roaring Kitty to testify at congressional hearing. The Boston Globe. Massachusetts investor known as Roaring Kitty to tell Congress he didn't coordinate on GameStop stock. 1 hour ago from Hyperbeast, GameStop Redditor Keith Roaring Kitty Gill sued for manipulating market. The New York Times, 4 hours ago, says Roaring Kitty will tell Congress he was a true believer in GameStop. Like, even the verbiage that they're using says will tell Congress.
He literally never said buy this stock.
CNBC, Roaring Kitty Keith Gill defends GameStop posts, says he is as bullish as ever on the stock.
We like the stong.
Engadget, Redditor who drove the GameStop short squeeze is being sued. Ugh. It's sort of like in the middle. Nobody's like coming out. I don't know. Let me see what's going on Twitter, what the Twitter sentiment is.
Dude, it's absolutely absurd. Like, it's history in the making, people. Yeah. I see there's a nice number of people in here. Smash the like button, hit the subscribe. Monday to Friday, 9 to 5. We're here all week, just complaining about stuff and talking about stocks and investments and all that kind of stuff.
I think one interesting takeaway is the fact that, like, as we're watching the news unfold, it's a very publicly discussed thing. So we're watching it happen, and then we're getting to watch the different news outlets put their spins on it, and really pulling back that veil of like, oh, how much of this has always, like, we all know that the news media is controlled, and but now they can watch the manipulation of media in action. It really is interesting.
Dave Portnoy has a tweet that he posted 41 minutes ago with the video. It says, if Roaring Kitty goes to jail, I will lead a revolution in the streets.
There's a whole paper handed.
Oof, man, he put himself on the line with that tweet.
Kitty lives matter.
Yeah.
Retail investors matter. We might not have a lot of money, but we definitely move the market.
Physically, if we have to.
So the folks that are going to be, I think, testifying today is Keith Gill. You've got Kenneth C. Griffin, Chief Executive Officer of Citadel. We got to find his testimony too. Steve Huffman, CEO, co-founder of Reddit. Gabriel Plotkin, which is Melvin Capital. We read his testimony earlier, so boo to him. Vladimir Tenev, Robinhood dude. Jennifer Schulp, Director of Financial Regulation Studies at Cato Institute. Okay, let's see.
In all honesty, Robinhood's TOS covers their ass pretty well.
Yeah, it does, but it's more the fact that it went to market manipulation than anything else.
Ooh, the New York Times. There. So I searched for Kenneth C. Griffin, his testimony, right? And an article comes up from the New York Times that was posted 12 hours ago. A shadowy but powerful Wall Street firm has its moment in Washington. That's interesting. So Kenneth C. Griffin, just like Melvin Dude, his testimony is 2 pages long. That's it. And Roaring Kitties was 5 pages long.
He doesn't need to say any more than that. Like, he's literally to the point and like says everything that he needs to say. Like,
But the thing is that it's like these firms are not explaining themselves.
Well, they don't have to. They're all written by the same lawyer, format. It could be written by AI at this point because they're all playing from the same playbook.
You're right.
It really boils down to that. When we listen to it, if you find it and you can read it to us, I bet you that we could probably pull sentence structure just very synonymous from Melvin's to Citadel.
Yep.
It's gonna be so similar.
Yep. I have it here. This is CEO of Citadel. It says founder and CEO of Citadel and founder and principal shareholder of Citadel Securities before the Committee of Financial Services, United States House of Representatives. Introduction. Chairwoman Waters, Ranking Member McHenry, and distinguished members of the committee, thank you for the opportunity to testify today on the recent market events. The U.S. capital markets are the envy of the world. Our nation's ability to allocate capital to its best and highest use creates jobs, drives innovation, and fuels our economy. America's retail investors play an important role in our capital markets. According to Gallup, about 55% of Americans own stock right now. Citadel Securities, as the largest market maker in the U.S. equities market, executes more trades on behalf of retail investors than any other firm. As I will discuss later, Citadel Securities played an important role in meeting the needs of retail investors during the week of January 24th. I want to be perfectly clear. We had no role in Robinhood's decision to limit trading in GameStop or any other of the, quote, meme stocks. I first learned of Robinhood's trading restrictions only after they were publicly announced. All of us at Citadel Securities are committed to the healthy functioning of the U.S. equities markets. Background. I first participated in the financial markets as a retail investor. In the late 1980s, while attending college, I traded stocks and options. My passion for investing led to my founding of Citadel in 1990. Today, Citadel is one of the world's leading alternative investment managers. Our capital partners include pension funds, university endowments, hospital systems, foundations, and research institutions. In 2002, our partners and I founded Citadel Securities. Today, Citadel Securities is one of the world's preeminent market makers. We have been a leader in using technology to transform our market infrastructure, particularly for retail investors. With the balance of my time, I'd like to address 3 important matters. 1, the retail investing landscape. 2, Citadel Securities' important role within our markets. And 3, opportunities for further market improvement. The retail investing landscape. Technological innovation advanced by market makers has dramatically improved the efficiency with which buyers and sellers come together. In tandem, U.S. equity market structure enhancements have driven greater transparency and more competition among market participants. Today, retail brokers are legally obligated to route orders based on best execution, which is determined by a number of regulatory factors, including price movement, customer experience, and platform resiliency. Many brokers charge market makers a set fee to execute retail trades, a long-standing, transparent, and regulated practice known as payment for order flow, or PFOF. Retail brokers have used PFOF to reduce the cost of trading, and it is a key reason why retail investors are able to trade for free or low commission today. Altogether, faster execution, better pricing, and reduced fees have made the cost to invest in America lower than ever. Citadel Securities' important role within our markets. Citadel Securities has been deeply committed to our role in the retail markets. We invest hundreds of millions of dollars each year to serve our customers. In the last week of January, the importance of these investments was on full display. During the period of frenzied retail equities trading, Citadel Securities was the only major market maker to provide continuous liquidity every minute of every trading day. When others were unable or unwilling to handle the heavy volumes, Citadel Securities stepped up. On Wednesday, January 27th, we executed 7.4 billion shares on behalf of retail investors. To put this into perspective, on that day, Citadel Securities executed more shares for retail investors than the average daily volume of the entire U.S. equities market in 2019. The magnitude of the orders routed to Citadel Securities reflects the confidence of the retail brokerage community in our firm's ability to deliver in all market conditions and underscores the critical importance of our resilient systems. Opportunities for further market improvement. Recent events have highlighted clear opportunities to improve our markets. One takeaway is the importance of modernizing the settlement process, including shortened settlement cycles and transparent capital models. As we have seen, longer settlement periods expose firms to more risk in the time between execution and settlement, requiring higher levels of capital. Settlement cycles should be shortened to T+2 to T+1. Transparent clearinghouse capital requirements will enable brokers and market makers to better prepare for potential capital demands and minimize the risk of associated market interruptions. Both of these enhancements are well within reach today. Conclusion. As we move forward and further consider how to further improve our capital markets, it's important that we build on the tremendous progress of recent years. Individual investors are better served by America's markets than ever before, and it is critical that our markets continue to be a force for fairness and integrity worthy of investor confidence and participation. I appreciate the opportunity to appear today and look forward to discussing the retail market structure within the committee. What the fuck did I just read? He didn't talk about anything. Now, this was the Citadel guy. Nothing about.
That guy was a butt plug.
There was literally.
Citadel.
I think
But
that's
to say the
Citadel for the win.
first paragraph and a half could have verbatim been the Melvin story.
Check
I mean-
general for the solution to the problem.
He didn't talk anything about their investment into like
Why they
Melvin,
invested
right?
in Melvin?
Yeah. No
This
talking
guy
about.
is also a wiener.
And I think that's offensive to butt plugs. There's nothing wrong with butt plugs.
All right, I guess that's
Seriously.
true. Sorry.
Like, what the fuck? Sorry, YouTube. It's just really upsetting. Any other? Right? Oh my god, what is going on? Right. Butt plugs are off.
Side note, market, ouch.
Let's look at the market. Let's take a quick break.
All across the market, we're looking at everything that's down on my end. It's just all in a little dip here.
Why is he
CCIV
trying to
looks good.
talk about T1 when we got T0, that douchebag?
Yeah. Yeah. No, it was T like, yeah, exactly. We were held off T pause. We got a T pause. Like, exactly. T timeout. T different rules for you guys.
Terrible.
This is just.
Thanks for reading all that.
No problem. I think we should be informed as we go into it and see what they're like trying to say.
Yeah, they're just.
Can you
gonna
post that on
frankly say
general
we
chat where you read that from? The link?
Yeah, this is okay. I'll post this.
Thank you.
No problem.
If you want the short summary, it's blah blah blah. You guys suck. We're better than you. And just a satchel of Richards.
Well, it's just more of the same. It's the same thing they do with like pretty much everything, politics, all kinds of everything.
They're
And then they
speaking
get their
sideways
media
out of their mouth.
buddies. They get their
Yep.
media buddies to just print what they want, and then you're toast.
Yep.
That's just how it is.
Yep. Yep. Wow, guys, I'm a little heated about that. I mean, yes, we didn't expect anything different from them. This is what was expected, but I'm really still appalled.
Bob Greifield's my saving grace because he believes in blockchain, and I think that's important.
So I'm gonna post all the people. We're gonna hear from Keith Gill, Kenneth Griffin, which is Citadel dude, co-founder of Reddit. We're gonna hear from Melvin Capital dude, Robinhood guy, and director of financial regulation studies at the Cato, Jennifer Schultz. I'm gonna see whose side this person's on. Why is Jennifer Schultz being called? I'm gonna see if there's any bias here with this. Jennifer Schultz from the
Who does she work for?
Cato Institute.
I've heard of them before. I haven't done any research though.
Anybody in YouTube have any insight on this? Jennifer Schulp, SCHULP of the Cato Institute. So there's some article I saw Wall Street on Parade. GameStop hearing gets a surprise witness from deeply conflicted Cato Institute by Pam Martins and Russ Martins, February 17th. In a period of 4 weeks in January, shares from yeah, I'm gonna see what they have to say about.
Oh, I like Cato to an extent, but not really. I guess it's the individual you really got to watch out for.
Yes. Well, no, she's not talking. I'm just trying to see her if she has an implicit bias or what her views are, to see. Yes. Okay, so now out of the blue, a new witness has popped up for tomorrow's hearing. Jennifer Schulp, the director of financial regulation studies at the Cato Institute. It's a fairly safe bet that Maxine Waters, Democrat who chairs the House Financial Services Committee, did not call this witness. If we were to make a wild guess as to who wanted,
guaranteed.
it would be a Republican ranking member of the committee, Patrick McHenry, whose top donors are big firms on Wall Street that don't want to see the GameStop fiasco resulted in tightened regulations. The Cato Institute is deeply conflicted in this matter, and its witness, Jennifer Schulp, should say so at that hearing. Cato is a libertarian think tank that for decades kept the fact that it was both a nonprofit as well as being secretly owned by a handful of men, among those who were billionaire fossil fruit brothers Charles and David Koch. Oh shit. Okay. Yeah.
They're not that bad. Koch brothers are pretty cool. I'm just kidding.
Oh my god. Damn. Okay.
No, but that was actually a slam on the Cato Institute. It's not just the Koch brothers. That was a slight on them. I think it's a lot of good people, to be honest.
Yeah, it's a handful of. It's a bunch of people who own it. Damn.
Maxine Waters, though, 100% compromised, guaranteed. Look at her salary. Look at her home. Boom.
Yeah. Yep. Damn. Okay, so in addition to that conflict, okay, Charles Cook has a big dog in the fight against regulating trading. He and the heirs of his late brother David are the majority owners of Koch Industries, private fossil fuels conglomerate, which owns a stealthy and sprawling trading operation known as Koch Supply and Trading. In addition to that conflict, sitting on the board of directors of the Cato Institute is Jeffrey Yass, the co-founder of Susquehanna International Group, known as SIG, large trading outfit, which has both a huge which had both a huge short and long position in GameStop as of December 31st, 2020, meaning that it may have benefited from the wild price swings in stock. According to its various filings with the SEC, as of December 31st, 2020, units of SIG owned a put option on more than 4.8 million shares of GameStop. 3 other units of SIG, Susquehanna Investment Group, Susquehanna Securities LLC, and Susquehanna Fundamental Investments LLC, owned 6.3% of GameStop shares, a total of 4.4 million shares as of December 31st, 2020. Yass donated more than $30 million in the 2019-2020 campaign cycle to right-wing Republican PACs, with the bulk of it going to Protect Freedom PAC, Rand Paul Allied Super PAC, which has tarred Democrats in Congress as socialists, and a Club for Growth Action related.
Rand
Part of
Paul's
the
dope.
I don't think he's as cool as his dad. I think the apple fell from the tree there.
I mean,
Personal opinion.
Ron's a little crusty though.
All right.
We don't want to go into too much into
Alright.
partisan stuff, I think, here.
I don't
But
want to
this
interrupt,
is-
but check the meme channel when you can. I put her images in there, what she posted on Twitter that may put her on the hearing.
Are normal house meetings so marketed like GameStop, who wins and loses when short sellers, social media, and retail investors collide? Is that normal titles for committee hearings?
So Tame posted. Sorry, I was reading this and I didn't hear your question.
I was just saying the title GameStop, who wins and loses when short sellers and social media and retail investors collide. That's very marketed.
It
for
is.
Is that what the House named it?
Yeah, before the Committee on Financial Services, U.S. House of Representatives hearing on GameStop, who wins and loses when short sellers, social media, and retail investors collide.
Yeah,
Sounds
way
like
to
a tabloid
frame that.
headline.
Yeah, it is a
I know,
tabloid
it's like
headline.
CIA
kinda
got
clickbaity.
involved there and just kind of flung that one.
Isn't that
Wait,
weird?
is
No, it's
isn't
not weird. If you know who's involved in this, very particular, yeah. It's some people, you know. Like you can't say the party, but yeah, they're in charge now, and they're kind of terrible.
It's honestly
It's on both sides, but the ones in particular that right now hold the
up at the top. It's the same. It is the same. It is the same. It is the same.
Some
Okay, so
people hate
Tame.
some people for reasons that are important.
Yeah, they both do. So Tame the Arc posted her photos of screenshots of Jennifer Schultz's tweets. And so on January 28th, she said Wall Street refers to retail investors as quote dumb money, but it's time to put a stop to that by sending GME soaring. I mean, a lot of people said stuff like this, right? It's going to matter how she testifies today, because I don't know. By sending GME soaring and dragging down the traditional Wall Street players who were bearish on the company, this new type of retail investor shows the power of the people. This is not a reason to limit retail investors. There's little evidence of illegal manipulation, and putting guardrails around this activity will hurt information flows. Increased retail participation, education about the risk and rewards is an opportunity to grow wealth. So that's what she posted on January 28th. But, even Jim Cramer said stuff like this in the beginning, and then he flipped and was losing his mind, saying the government needs to get involved later on.
Yeah, I was really impressed with Jim Cramer, the very first day when he was supporting the retail investors, and then there was clearly a drastic change in his opinion.
Yep.
Almost midair.
Started pulling the strings. They started saying, no, you can't say stuff like that no more. You can stick to this script or just not talk about it at all.
Yeah, this they really go into breaking down her thing here. So Cato, on January 30, she was interviewed in a podcast. So Cato's Jennifer Schultz was interviewed in a podcast on January 30, making remarks that she can reasonably be expected to regurgitate during the House hearing today. The interviewer, Caleb Brown, director of multimedia for Cato, asks Schultz this: what is the proper takeaway for regulatory agencies who probably would like to jump in and say, now you've got to be protected from these kinds of trades. We got to protect you from this casino environment. She responds saying,
they're taking this a direction that is absolutely in no way, shape, or form helpful to anyone but the people that shut us down.
mm-hmm. So she said in response to that, quote, I think the proper response there is that protection comes from education. There can be any number of people or institutions left holding the bags in any of these situations. Stock market run-ups, stock market bubbles are a function of the markets, especially since the beginning of time. And retail, small investors have been in the same situation as long as they've been playing the market. Again, it's very dangerous to draw lines telling people that it is a good idea for you to invest in, or if this is not a good idea for you to invest in. Don't think the regulator has the proper role here. So there's
I'm a bit confused about like what the current stance is we're like talking about right now, because like what the hedge funds are worried about is like this causing the government to step in and impose more regulations, which is supposed to help us smaller guys. But that's also in a way bad for us smaller guys if they put regulations to restrict our own trading, you know?
So from what I can tell, she's saying that you should let the market do what it does, and if it breaks your shitty system, well, that's your fucking problem.
perhaps that's what she's saying. We're not sure. Because all she's saying is that the market shouldn't limit or all she's talking about is retail investors. She's really not talking about hedge funds or regulating them or regulating the people who are like Citadel.
Right? If there's not like naked short selling going on and they're not massively short on all these things, then there shouldn't be a problem, right? Like, so what's the problem?
Do you know that prior to arriving at Cato in April of last year, she worked in the enforcement division of FINRA? Since 2011, she had served as the director of enforcement at FINRA since May of 2013. So FINRA has strict rules for licensed brokers, employers who fail the test of properly telling small investors, quote, this is a good idea for you to invest in, or if this is not a good idea for you to invest in. In fact, yeah, I don't know. I'm going to see if her testimony is available, if there is testimony for her.
I'm just not sure what the stance
I posted it in general where you can find all of them.
Cool.
I feel like what is going to come out of this hearing, especially if it comes to like a government step in, would be like they won't really step in to stop hedge funds from, you know, short ladder attacks. Instead, they'll put rules to protect and restrict trading. It's like, so it's supposed to protect us, but it's going to restrict trading or restrict trading on us.
They're going to protect their system. They're going to say there's the risk, and so to limit the risk, which will affect everyone in the entire market, we have to put in these limits because that's the systemic risk that we have to limit. And they're just going to protect the system. They're not going to protect you. Under this current administration, I guarantee you that is a fact.
Ultimately, who's the one that lost the most money here? It's the hedge funds, and it's because of the choices they made.
Well, that's what matters most. I think it's the light shining on the problem that matters most. I don't think the enforcement that they're going to do right now really is ultimately where it's going to end. I think that's just going to be their, like, you know, they're we're drawing a line and we're going to cross that line eventually.
Well, it's even been mentioned that stuff like this has been a possibility and a reality for the market forever. It's just one thing that it is what it is. The only reason why this is so huge is because it's so huge. Because it hit the market media, because everybody heard about it, and now we're in this 24-hour news cycle timeline that exists of everybody has all the information all the time. Now it's in the public eye in a big way. So, oh crap! Look what they found a way to, shed some light on our dirty closet, and we don't like it.
Yeah, they're gonna try to just make it seem like, oh, the poor retail investor needs to be protected. And the argument's going to get shifted away from actually discussing what the hedge funds, what Citadel, what the collusion that was going on. It's going to go, I think they're going to shift it from placing any blame on them.
So
I
she's
don't
got
think
general
that's what this is
jury
about at all.
information.
Oh, I don't think that's what it's about at all. I don't think that it is, but I think that that's the way that they're going to frame it, because they're going to shoot themselves in the foot if they just go out after Keith Gill. No, they're going to make it seem like they're the good guys.
So I don't think like the hedge funds is the one like pulling Keith Gill into this. It's literally the government.
Hey, there was a problem.
Sorry.
Sorry, I have to switch over to a different mic.
Where'd you go?
Did any of you guys watch
Did he
that
go?
On the Other Side of the Looking Glass deal with Patrick Byrne?
No.
Oh, y'all gotta watch that. That's like required watching in my opinion.
Mark Cuban posted on Twitter. He said, "Finally, let me jump in on my soapbox. Most likely, the Securities and Exchange Commission will go after some small investors and blame them. What's worse than attacking the small trader? ? The inability of that small trader to get a jury trial. The SEC's use of ALJs instead of juries is 100% wrong and needs to end."
Mark's way off base, though. He's not even talking about the right kind of enforcement if they did it correctly. He's honestly just throwing shade more, in my opinion, directly at the small retail investor by giving them a platform to do it on.
All right.
Mark Cuban's compromised. Sorry, I don't trust that man at all.
And he continues, "We need to also have stress test and liquidity transparency for all brokers. The customers of Robinhood should have known their brokers' liquidity limits were being reached and the consequences of that issue ending buys."
No, that's not a fix. He's kind of wrong there, because that doesn't fix the problem. If you know the liquidity, like, that doesn't really fix it still. You just know you're screwed. Ha! Sorry, you still lost.
Like, there was the ability at that point to move to other platforms or not get yourself into positions that you're going to be stuck in. Like, I think that,
He's not a fix for the problem, though, in my opinion.
it's not a fix, but I think he's presenting it in sort of, simple terms so that it can be understood maybe for the folks on that committee. How are you supposed to?
Looks like a Band-Aid for a cannonball wound, in my opinion.
For sure. But I think like when they went in and they did that without letting anybody know, there were people that went in, and bought when if they would have known that something like that was about to happen, they wouldn't have done it.
So what I'm fearing is that, so like what the hedge funds want is less government rules, right? Because the less interaction, the more shady stuff they can do. So they don't want any
fear blockchain.
For sure.
They
For
want
sure.
out of this. But I don't know if we want something come out of this either, though. Because so there's a couple things that can happen that I can see. Is one, they're going to impose more restrictions on what we can do, or two, they impose restrictions on what the hedge funds can do.
Yep.
So like, if it's against us, I mean, I don't want that. Like, I don't want someone to if that's the same way with the day trading rule, right? I don't think it's not something that helps us, right? So what if so that's a legal rule, right? So we're gonna have more of those things that fuck us over.
Yep.
So it's
He
like
actually addressed this. Mark Cuban, the way that he started off his tweet was saying, while blockchain is the best long-term solution, in the interim, the solution one is to require stocks to be held for at least 1 minute. We need to decide what the purpose of the markets are. Is it to raise capital and allow ownership, or for machines to extract money from investors? And that's when he went on to talk about that Band-Aid option. So
I
don't know.
think if anything, everyone's just really worried that there's going to be like restrictions on their end. But DFV is at this point he's just like trying to cover his ass because he doesn't. It's like because if he's the bad guy, they're going to impose restrictions on what you can and cannot say, or what is defined as like manipulating the market, and
Right.
it's going to work hurt us, right? But I don't know.
Mhm.
It's not against. It's not like us versus the hedge funds. It's literally us against like the government. I think at this point.
It's the government
I'd say it's
colluding with the
the
hedge funds.
uniparty. Well, the
Yeah.
uniparty. I mean, they all work together. It's the media,
They
the
work
big
together for
banks, the government.
these people that own the power and the money. So, and they're all the same. They're all the
1 in the same. Correct.
0.456%. The people that make $400,000 or more are less than 1%, less than 0.5%
Look at the
of the
families that run
population.
California. The families that run California, they're all connected. Nancy Pelosi, Gavin Newsom, they're all connected.
It's all of them. But the thing is that when we start talking about it as if it's a partisan thing, when you look at these party
No,
members,
I'm talking about
they are
personal,
together.
very personal with me and Nancy Pelosi.
I just want.
Did you sleep with her?
No, she personally has ruined the lives of my children. Like, fuck her, you know?
Afro Pelosi. He's got the drip.
Yo, anybody who hasn't, go watch any of Salty Cracker's videos talking about Nancy Pelosi. It's guys, hilarious. I love the way like his dialogue is so entertaining.
Yeah, what I want to come out of this hearing is more transparency on like the corporate side. Not so much rules, just like rules on reporting and transparency. That's what should happen versus like restrictions on us or trading.
So it might be too late, but I think I have a crazy idea. Considering that the hearing is in a few hours, I think we should make a document that has all the questions that we want answered and literally get as many people as we can to blast it to everyone on the committee. Like the exact same document.
Like a petition?
If you could get a certain letter to post
We
it, then
need
we get set.
we need to have a document, like a Word document, that just lists the questions we want the committee to answer. And we all send the exact same document to everyone on the House committee from as many accounts as we can and see if anyone actually sees it and asks those questions in the hearing.
I mean,
Because it's going to be weird if they all get the exact same document multiple different times from multiple different people. That's like the questions a retail investor wants.
But it's also literally in an hour, and they're probably
Yeah,
already done
too
prepping.
late.
Oh yeah.
Yeah. But I
how
think
it is now, it is, isn't it? That's what we should have done yesterday.
So yeah, sort of.
For the past like week and a half, 2 weeks.
We should have came up with all of the questions we wanted asked.
We should have been psychics. We should have saw the future.
They're only going to ask questions that leave them in the clear. They're not going to ask anything important, really, in my opinion.
No, but all it takes is all it would have if we would have done this earlier. It would have just taken one person who
Jim Jordan. Jim Jordan asked
would be
some really
like,
good questions.
"This is odd. I'm getting the exact same document. Maybe I should ask these questions." You know, like I wish I would have thought of that like 4 days ago.
Everything's doing this. All these stocks are following the same pattern. What is going on?
I think
There's
everyone's
very
scared
few-
that the hearing is going to cause like additional regulations, and so the confidence in the market is dropping.
So if there is a part 2 or they move it, we need to, I think that's something we should do, is get as many people to find out what questions we actually want them to ask. Because they never ask the questions we want asked.
What would it be a question that you would want to ask? Just saying.
Like,
when are we gonna get to T0 so we can make sure this doesn't happen?
Why is the buy sell ratio 93% sell and 7% buy, but a price still drops?
I don't think they can answer that without having like a market excuse. So like I think in 2019.
Oh, I'm sure, but it would at least make people think about it. Like, why is GameStop still dropping even though the sell price or the sell interest is still super high? Why can't you get short interest? Why are none of the short interest numbers posted that's supposed to be public? Why are none of them matching?
I don't know if it's isn't that like a market thing?
Yeah, but that's what we're getting at, is it was market manipulation. So why is the data we see, because we all made our decision based on numbers, at least I did, the numbers lined up, but the market did the exact opposite of what the numbers said it should do after they prohibited
but only
the market.
because of the bullcrap they did.
Yeah, I agree.
I
that
know
there should
that.
be more transparency and like.
But I'm saying those are the questions they need to ask, because that's how you're going to get to the root of it
They're
not
gonna
making
say
sense.
that the bigger problem is like you don't like if you own other stocks, right? You own like you might own 100 other stocks, and part of your portfolio is GME. Well, they're saying they're not going to take down everybody's entire thing over GME, but it's their systemic failure that's the problem, not the fact that people wanted to buy. I mean, that should not be a problem, right?
The problem is that these numbers on a supposedly public market are so hidden from everyone, no one knows what's actually going on.
A lot of numbers are up for interpretation. Like everyone does their books slightly differently.
Well, even with that being true, the people that are presenting today have no bearing on those numbers. They're playing by the same. Obviously, they have different access to information, but FINRA, NYSE, like all the people that set those numbers aren't
even the
being
numbers
asked anything.
Even the numbers that like that are supposed to be.
I agree with you. I agree that
should have been on this hearing.
I agree that.
Why are we? These numbers don't make sense. When I pull the numbers from the New York Stock Exchange, they don't make sense with what the price is actually doing. That's the problem.
Yeah, I agree with you that there should be a more of a standardized or sort of like consolidated methodology, whatever, for reporting, right? Because that's like your biggest issue is like the transparency and how we currently do can vary between from like platform to platform or whatever. So like I agree with you that like that's the thing, but like I think the current hearing is that there was such a I don't even know actually. I don't know what the point of this hearing is.
Guys, I was reading a little bit more on this website about Citadel, right? And just like it's basically analysis of the different testimonies and stuff. And one of the things that they brought up was how Citadel has been fined and or censured 59 times in the last 12 years.
Jesus.
And in July of okay, so here's some of them. They're July 16th, 2020, Citadel Securities agreed to a $700,000 fine by FINRA for executing customer orders at prices worse than it traded for its own account. It was allowed to neither admit nor deny the charges. The activities did not occur over a matter of days or weeks, but over a period of years. So they're like waiting to execute them. This is and they're giving us work, so they're literally squeezing out pennies for themselves, which turn into billions probably. So on November 13th, 2020, FINRA fined Citadel Securities $180,000 for failing to mark 6.5 million equities trades as short sales. So again, that's failing to mark 6.5 million equity trades as short sales. Citadel did not admit or deny the allegations, but paid the fine. The activity occurred between September 14th, 2015 and July 21st, 2016. On December 10th, 2018, the SEC fined Citadel $3.5 million for the following. From November 2012 to August 2016, Citadel submitted 2,774 EBS to the Commission, all of which contained deficient information resulting in incorrect reporting of trade execution time data for approximately 80 million trades. As a result, Citadel violated the record-keeping and reporting requirement. So EBS is the format used to electronically send trading records to the SEC. The SEC describes the importance of blah, blah, blah. They talk about the importance of that. Yeah, I don't know.
Do you know what that looks like? It looks like what I put in general. It's like what they did to Lehman Brothers and Bear Stearns.
Yep.
It looks like strategic failures to deliver, in my my humble opinion. But that's what I think it is.
That's a question that should be asked today.
Yeah.
You know what that sounds like? That sounds exactly like, we'll just pay the $3.5 million fine. That's no big deal. We made $50 million off of it.
That's exactly what I was just about to say. They're allowing them to
They
just
said
get
that-
away with paying the fine and then going and continuing to raise money by doing what they're already doing.
Well, yeah, they were supposed to have regulation show that was supposed to stop this, but it only kicks in like a very small percent, like 0.1%, point something percent of the actual instances. So they don't actually catch it is the problem. And then we don't have access to the records to see the reports on it. So like we have no way to see how many failures to deliver there are. Like that reporting exists, but you can't see it.
Right. A lot of the stuff they're
You
doing
can
now.
see it per day on the NYSE.
No, not like the
found
whole thing.
Yeah, I found it.
How many? Like, because you should be like, I don't know.
I mean, if they're lying about their records, which
Yeah, I mean, yeah,
they've already
that's
been fined for doing it. Like,
So we agree that with whatever they're doing now is bad and it's wrong and they should be fined, right? So like,
no.
it's already.
I
So
think it's not just fining because they don't seem to care because it's almost like
Finding doesn't matter.
the fining doesn't matter
the
because
system should be changed so there's not the systemic risk.
the amount of profit that they're making is peanut, like it's nothing compared to like a fine. They're making so much profit.
The fines
Well,
are
so they
factored
they
in
The fine
actually
should equal what
Exactly.
they, yeah.
That's it.
Yeah.
well this whole
Exactly.
time they've been sucking the money out, right? They've just been
Yep.
buying lots of stuff.
Yep.
Like they have houses, cars that are. It's no longer in the market. Like money's gone, and if you have watch Patrick Burns and his strategic failure to deliver information. It's really important.
So what we're looking for is increased in what? Increased in fines, increased in
Jail time and market restructuring to prevent like this
Yeah.
being the standard.
Boom.
Prohibit
The
prohibiting them
restructuring.
from.
You've been sticking your hand in the cookie jar this long, this deep, and now you finally got caught, and all of a sudden it's whatever.
If you have
What
more
is-
than
pay
2
a
fines,
fine.
you should no longer be allowed to handle
Pull
people's
their
money.
license.
Well, this is like
Yeah.
We can't day trade 5
shadowy.
times in a week without getting a 90-day block, but these
Exactly.
cocksuckers are able to do multi-billion dollars of sneaky
Yes.
fraud because it's legal by standards. Change the fucking
Yeah.
standards then. It's bullshit.
Yeah.
that's why I'm actually so impressed with Patrick Burns because he spent a lot of time looking into this information, figuring out the actual fix to the problem. It's just getting people to be aware that that fix exists.
What is it called again? The end of
What's that?
Patrick Burns. You said it's called.
Oh, he has a bunch of different ones. Like something other side of the looking glass, I think it is. There's like several of them, and there's another guy that does like a couple renditions of that goes into a little bit more detail. It's pretty good too. I'll try and find some of it, but it's super important to understand.
Yeah, I don't know.
I agree though. If anything, there should be like higher consequences for failure to follow regulations. But I feel like increase in like transparency and like reporting
Yes.
cycles would be a good idea to like catch them as fast as they are. Because like
Transparency.
if we can't find it within like I mean it takes we're like on a 15-day delay for just like the short
Bullshit.
interest. Yeah, but I don't know.
Well, and if they say that the practice of shorting is healthy for market growth, which when used properly, it can be a good deal.
That's what puts
It's
our.
not about shorting.
If it well no, but that's part of the big like what caused this is them causing a giant influx because of their over zealous shorting. It's a normal
Naked
practice
shorting.
that's
There's a
normally
difference between
okay.
naked
That is
shorting
all.
and
That is
shorting.
all. But if
It's
it's
true.
a safe, legal, normal, everyday practice, why does it have to be a 2-week cycle? Why can't it be more of a, hey guys, I guess we're pretty sure that they're going to go out, so this is our position. Like it doesn't make any sense why that wouldn't be a more readily available source of information.
They're saying the information that you need to be able to obtain, like to figure all this stuff out, is proprietary information, and that if known to the public would crash the markets.
Probably because it's all BS and they shouldn't be doing it.
Well, it's okay for them to talk about it in their lunch clubs and their drinking buddies and all that. They can talk about it. But when we talk about it on Reddit forum or in a Discord, or now it's all of a sudden a big difference. Why when we whisper it's a roar, but when you guys do it, we're just supposed to turn the other way.
I think these Melvin guys are caught red-handed and they're going to get bailed out by their damn cronies, and I hate it.
Okay, let's see. How are we doing? I'm back.
Just chilling.
Wait, I haven't heard this rumor. Is there a rumor Robinhood owns 30% of Dogecoin? Anybody else heard that?
True.
I think, man, there's something floating around about that.
Makes sense.
Oh, Elon Musk suggests Robinhood is mysterious Dogecoin whale? What? Heh.
Well, they have to own a lot of it for people to trade on their platform.
So, oh, I guess he responded to somebody saying, if the top whale wallet is Robinhood, then I think Dogecoin has a clear trajectory to the moon. However, until that information is absolutely confirmed, accepted by the community at large, we cannot say or know how sure Dogecoin rise. And then he said, sounds like it is. I mean, we know that they don't give you your keys. So if that's the reason why it appears as if they are the owners, are they actually the owners, or is it just appearing that way because people have bought it on Robinhood?
No, I think it's that they own a very large pool and let us buy stake in said pool, and it fluctuates based on the overall market price, just the same. So their massive holdings is what allows Robinhood traders to use it, and seeing as they were one of the only names in the Doge game when it first really started to hype up, it stands to reason.
And they make money on every transaction there too.
Oh yeah, they're making money on every in and out. They're making money on the in betweens. Crypto being unregulated means that they can do just as much of that middleman trading as anything else. So, if you execute a buy or a sell, and they jump in the middle and take their little skimmy fractions of a penny, execute yours after theirs, and wash, rinse, repeat a million times a day.
Sick. Okay, CCIV hanging at 58.
Once again, forming a pendant.
Hey Siri. Hey Siri.
No, this is Patrick.
Hey Siri.
Hey Siri.
Hey Siri.
Why so serious?
Apparently, I didn't have permission to talk on that.
Very funny, John.
Funny.
See the old man one. Hey Alexei, Alexei.
Alexei. So we all just waiting for like a couple hours for the news to come, or what?
40 minutes.
Yep, 40 minutes. Hearing starts.
I'm gonna fall asleep.
What time is it for you?
Clearly, it is nap time.
Did you guys hear the news about Pfizer, the vaccine? They're saying that the first shot
Kills you.
is effective enough that you can delay the second shot, and I think they were looking
or not even take.
or not even take the second shot.
Yeah, because you won't survive.
I have the I don't know. I have the first shot. I'm fine.
That's awesome. My buddy took the Moderna shot, and he got like weird for like one day, but he got fine afterwards.
Sound like you said Madonna shot.
I'll take a Moderna shot.
Madonna.
Give me a shot of Madonna. Stat. Yeah, the only thing was that it hurt near the injection site for like 2 days. Other than that, I was fine. But I also had COVID back in November, early December. So I've been through it.
How long?
That was not.
How long? How long did it take to go away? Like 2 weeks?
Yes.
It took me a
2
month.
weeks. Yeah. I also got sick way in the beginning, like beginning of February. And I mean, I was in contact with people coming back from like mainland China and like just that were trying to cut back when stuff was getting closed down that were sick. And so like I fell sick like really bad. And this is before testing. This is before it was like really known. So there was like a lot of sort of speculation that I may have already had it in February.
Wow.
So you got it twice?
I don't know because it was never like I never got tested for the first time, whatever that was. But I
How
can
does it
tell
feel
you,
like a regular flu?
no,
awful.
I was
Fucking
I was
awful.
gone out for like I mean I was out of
Damn.
commission. But the one thing that was differentiating about this time, which is a classic symptom, was about the first week I was tired. I was like exhausted. I was in bed. Then I lost my sense of smell and taste. That was the weirdest thing. For like a week and a half, 10 days, I had no sense of smell,
That's crazy.
taste. Yeah.
The people around you start gets like massive headaches too, because like my siblings, they all like from being around me, they all have massive headaches. Like they didn't get the full symptoms.
Yes.
It's just like massive headaches.
You get migraines, but just the body aches and it's really bad. And why would you take the vaccine if you had it? A, it could be because you're required to take it. And two, because just because you've had COVID does not mean that you're allowed to travel and do other things. There's going to be requirements for you to be vaccinated. That's Lala in the chat asking.
And the other thing too is COVID makes, so when you get a vaccine, your body should remember what that
Mm-hmm.
virus is so it can trigger the antibodies. And when you get COVID, it makes really, really bad memory cells. So your body doesn't always remember to trigger the antibodies. And when you get the vaccine is making good memory cells. So when you get the virus, it's triggering the antibodies. And that's kind of the difference in why multiple people are getting it multiple times.
Because you are not human anymore now that you took the shot. Apparently, I'm an android.
Yeah, no.
Yeah. We'll see what happens with that. But I wonder what that's going to do for Pfizer and just the whole vaccination situation.
Be like, yeah, I got the vaccine. I'm totally fine. Blinks third eye.
I swear every time you ask something, everyone just mutes their mic.
The answer just be extreme silence.
Oh, sorry, Jacoby.
No, you're good. You're good. I was just saying it's like everybody answers with just extreme silence. Like silence intensifies.
Right. Yeah, sorry. I'm just trying to I've got quite a few stocks that I'm trying to keep up with the news on, and plus we got the hearing. Plus we got the Mars land Perseverance is landing today. It's just like, dude, there's so much shit going on. Like, as much as I want to participate in social activities, I'm so busy. But yeah, if you haven't already, hit that like button, hit the subscribe button, tickle that notification bell. Live Monday to Friday, 9 to 5. Let me see some diamond hands in the chat if you hold them.
You can soundboard. You soundboard with an air horn.
I'm just some dude on the internet that likes tech stocks, and I'm looking for some tendies. VOA Apprentice says, in a nutshell, Robinhood is an upstart casino who took in more bets than it could cover on almost guaranteed who win with GME. So in order to stay literally alive, they halted buying and chose to possibly pay fines. Diamond hands. Yep.
Basically.
Touche.
GME to the moon.
Oh yeah, man. I'm bullish on that company.
When in doubt, buy GME and hold. Not financial
Dude,
advice.
I just waited for it to come down. Like, it's really, I jumped in a little bit while it was fiery, but like on the way down, really averaged down, and yeah, just you gotta be careful and only invest what's not gonna break you, and it sucks, man. Like, okay, I saw some article. It was a video last night. This person was talking about some of the people who took really big hits on GME. I guess there's this guy that took out a $20,000 loan and bought at like 350, and yeah, he lost a lot of money. Plus, he's got to pay 11.29% interest on that loan, and it's just ridiculous. It's like, oh, he had 4 years of investing experience, and he has $50,000 in like a Roth IRA or something like that. And it's good he didn't touch that, but like he took out a loan to buy GME. That was like the stupidest thing you could ever do.
Yeah, don't do that. People
Don't
like,
gamble on
jeez.
borrowed money ever.
W-
I will just
Yeah.
tell anybody this: if you're gonna invest in a hype stock like that, like while it's like super volatile, you know, do what's not going to break you. Like have a small position and don't do it on margin for the love of God, and don't do it in like an RRSP where like you're gonna be like, fuck, man, if I sell this at a loss, like it's gonna ruin my contribution room. Like, no, do it in a cash account and don't go into margin.
I feel
That's
like
not financial advice, but I mean that's just like life advice. Like, don't be stupid with your money. Honestly, it's not a fucking casino. It's investments.
I feel like they might do that. Like part of the new regulations is like if again this will only apply to those with like a smaller amount of money to work with, but you wouldn't be able to like trade on margin if you don't have the 25,000. It might be right. So they're not only are they going to restrict our day trades, they might even just like restrict margin accounts in like general. Because that would be the one of the biggest ways to protect the small consumers. It's because you can't buy like lottery tickets with like credit. So like part of it's like, oh well, we'll just transfer that rule over to stocks. You can't buy stocks on credit. So then it hurts. Again, it's going to be limit you.
I mean, you somewhat can. I consider leverage as credit, but you have to have like well, with my broker, you have to deposit $1,000 in order to be able to use a margin account, and they control very effectively your buying power. And it's just about being responsible with it. Like, you can use it to your advantage. And what's cool with the one that I use, Questrade, is they have, I don't know if other brokers have this, but they have this thing called margin power, where I can use my TFSA to boost my leverage in my margin account. And you can that can be extremely helpful, but also it can like hurt you really bad. So it's just a matter of being responsible, really.
That's what. Yeah, Robinhood was under hot water for because people who weren't even trading on their margin accounts were having their shares sold off to cover the margin. So Robinhood does it, and the biggest issue is that they're
I like that I have my limitations on trading because it allows me to not like make rushed, stupid decisions. Like, as long as I'm not buy, sell, buy, sell, buy, sell, buy, sell, I can buy incrementally, and you know, um, it, like another video I watched, a guy made a good point. He was like, he's like, I check my account once a week. You know what I mean? And I buy dips, but like I'm not glued to my account all the time watching the numbers go up and down. It's gonna drive you insane. I'm only doing this because I'm out of work right now. I'm finding I have a Zoom meeting tonight actually to find out what's going on, but like I'm learning. That's the main reason why I'm glued. I'm not so like stressed out looking at numbers going up and down. Like, yeah, I see red. I also see green, but like it's gonna change. Like, it's not. I do my
So
research. I invest in companies that I know are going to be around in the next 5-10 years, and just do your research. Find out what the news is on this company. It's like that's how you successfully invest in a company. It's like you can't just buy on faith and expect the stock to go up. Like, you have to be keeping up with the news. So I start a small position, and I incrementally buy up when it seems low and adequately priced, and learn how to read charts because it helps you a lot. You can kind of start to see where buying pressure can't beat out selling pressure and everything evens out. Typically after that, there's generally a breakout, either goes up or goes down. But you've got
so
to.
less than 30 minutes to the hearing, and we did for those who may have just gotten in or joining on YouTube. We did go over the testimonies. We read Roaring Kitties. We read Kenneth Griffin of Citadel. We also read Melvin Capital Gabriel Plotnick's testimony that will be presented today. Also, in addition, you're going to have Steve Huffman of Reddit, Vlad of Robinhood, and Jennifer Schulp of the Cato Institute, who's going to be there as a witness. So that's starting in less than 30 minutes. Sorry, just
It's okay, Max.
Little-
Like we always cut each other off. It's fine.
Sorry about that.
You think she's bad? You should see this guy named Guy with a Smile.
Oh my
Not
God.
Guy, but he's just I like him, but it's just like, and I don't mind a little bit of swearing here and there, but like literally every sentence has the F word in it and the S word in it, and it's like it just gets like exhausting after a while.
Where has he been? He hasn't been on.
Well, I don't know.
He was
He's
around.
probably,
He was around all day yesterday.
yeah, he was around all day.
He just hasn't been
You
on.
guys had a little
He-
stink, so he's probably sitting out watching the hearing and doing his own thing.
He
probably
was,
His only
lurking.
saving grace is his extreme positivity too.
You're
Harsh.
He's got a good heart, like but yeah, sometimes he can get a little out of hand. God bless the guy.
And poor choice in username.
But yeah, I would,
attached
I would
to
certainly
smiley face
appreciate
killers.
him more if he could control his cursive language. Because I was just like, no, every time like he dropped a bomb, like just over and over again. I was just waiting for Tame to say something.
God, it's snowing so hard right now.
Is it? Aw.
I just had 3 days of blizzard-like weather. Lovely.
Shovel. I don't want to shovel.
Who's in Minnesota again?
Uh,
I think no.
Miko's in
Nico
Minnesota.
is, and then I'm in northern Wisconsin.
I'm in PA, and we're getting hit pretty
We
hard.
just had a
You guys are pretty close to me. Whatever weather I get, I'll probably get it right before you do. I'll give you the heads up.
It ran through -30, -40 for the last few days, and now we're up at like 10 above, but no significant precipitation.
Let me just check this. I have this website that shows like wind patterns across the planet. It's pretty neat. I'll link it in
On a
general.
related note, Ted Cruz is in hot water because he's on a family vacation to Mexico while Texas is going through all of this.
Ah, interesting.
That's crazy. But I'm pretty sure the vacation was pre-planned, though, right? You can't like fault the dude for going on vacation.
Yeah, you can. No. 100% you can, because every person across the entire working force of the world has vacation time planned out, and then something happens, and your plans have to change on a personal level. For us, we're ants. We're nobody. We just live lives of mediocrity, of just existence. He's a freaking governor. He controls a state. You put everything to the back burner and make sure that your state is taken care of. I mean, I guess that boils down to God, family, country, depending on what your priorities are of your work values versus all of that. But as a standing governor, maybe it'd be a good idea for you to not go on that vacation right now. They got enough money that they're not going to worry about cancellation fees. They could rebook and not be a problem.
Yeah, I mean, my parents, like I mentioned yesterday, 20 hours without power, and it was like below freezing. And then they got it for like from 12:30 a.m. to 2:30 a.m. they had power, and then it was out again till like the afternoon.
I got a buddy that's going on 50 odd hours now, and he still hasn't had certain power back on. His only like he's got a small solar setup, so he can keep like the fridge going and stuff like that. But even heating, he's resorted to wood because there's nothing, and they just don't have. Even with the full scale push of trying to get it back online, it's just such a big problem.
Unbelievable. Well, CCIV hit 60 again, and then it's fighting for that right now, trying to make a run.
Yeah.
Yeah, buddy.
Been trying to find the sell button. I couldn't find it, so this
No,
whole time.
I don't know where that is.
In other news, I just saw the new Mortal Kombat trailer.
Wait, they're making a new game?
Yeah, I saw that
DLC?
coming up. I'm pretty excited for it myself.
Pretty dope. The guy that plays Scorpion.
Nice.
Awesome. Perfect casting.
Speaking of like live action stuff like that, did anybody ever see the live action Ken and Ryu from Street Fighter story?
The one from like almost half a decade ago.
Yeah, it was pretty recent. Like the guy who played Ken, like legit looked like him, like on point. Like, and I personally thought he nailed the role, like this kind of persona. Yeah, and like there was like the story of them training with Goken and stuff.
Yeah,
In the Dark Hollow. I thought that was a wicked series, man. Like the CG was on point. Really, I was laughing my ass off when the old dude was laughing at Ken across the lake because he couldn't throw a Hadouken across the lake.
There was a live action on YouTube a few years back. It was pretty good.
I think
I think that's the one we're talking about.
With Akuma.
Yeah.
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 And Ken had that weird like hairstyle where he like tied it back that they use in Street
Yeah,
Fighter 5.
they did a really good job with that one.
Yeah, like you know, I thought it was just all around like a really good series.
It was enjoyable.
Okay, so back to stocks.
Yeah.
A lot of stuff on discount right now.
Yep.
Let's see. I'm looking at this Peridot life cycle. Oh, you know what I posted late last night? I think I did it. I have to see which. I think helpful links. I posted a link towards a calendar that tracks the. Let me see what it is.
Question real quick while you're doing that. Is anybody on the West Coast?
Yes.
It's super windy out there right now.
I don't think so.
Let me. Not really. No.
Not where I am.
Not where I'm at.
I mean, it's a pretty long West Coast.
Yeah.
So I posted the PDUFA calendar. It's you can just search Google. For those who are listening, you can also Google PDUFA calendar, but in the Discord, it's under helpful links. And it basically has a calendar of FDA approval dates, PDUFA dates, advisory committee dates, binary events, biotechs. But the PDUFA date is the goal date that the FDA makes a decision about whether to approve new medications or not. And so that's important for like those of us who are in chem farm. That date is March 2nd. It's coming up. And you can just track on the calendar. All different stock tickers are on the calendar.
Cool.
Yeah.
Thanks.
No problem. I also started doing some deep diving into this stock that is called Global Blood Therapeutics, GBT. Now that's a company that has created a drug for sickle cell disease. And I think they have their earnings call coming up on the 24th. I think the drug is already out there. The one thing that's interesting about them is that currently the drug is approved for use in children 12 and up, but sickle cell disease really impacts those who are, younger. If they don't get treatment, they need treatment basically for children who are at that 4 to 12 age. So their projected earnings on this, the projected target stock price is, I think, really up there. But I'm still doing my research on it to see whether or not it's a good investment or not, because they may not have had good earnings in the last quarter. And it kind of depends on how many scripts were actually written, because the market for those who have sickle cell disease is not as big as, let's say, something like ADHD, obviously, but it's still definitely a needed therapy, needed drug. So, yeah. Looks like also the trials of it were very clean. I had my partner look into it since he is very familiar with clinical trials and the pharmacology end of it.
Gotcha.
But yeah, keep you guys posted if I see anything good come up about that. Yeah, the high price target is potentially up to $152, and the low price target is 45, which is currently hovering around 48 right now. So there are a lot of analysts that consensus, that the consensus is that it's a buy, but there's the potential upside of it going really up. And I know there was a lot of insiders that bought in to it in December. I think December 30th, there was somebody who bought 5 million shares of it. There's stuff available if you start doing your due diligence on it. So I'm just not sure about the entry price right now. I'm keeping an eye on it.
What's the stock?
GBT, Global Blood Therapeutics. They're doing sickle cell drug.
Got it.
I think that the potential for it again is big if they do get that approval for children under the age of 12. They did get sort of this clearance to start testing, and they started doing that in January. I think their earnings call will give a good indication though, because if they aren't writing scripts, they're not going to be making money. Less than 15 minutes, guys.
That's until what?
The hearing.
Oh, that's 12 o'clock. Your guys' time, not mine. Okay.
9 o'clock our time.
Oh, sweet.
For us in California.
Will you be able to watch it anywhere or anything? Or anything?
Tame,
Yeah,
are we doing that? Stream? Are we going to stream it
Stream it.
through the YouTube as well? Are we going to do that?
Stream it.
Stream it through the YouTube.
Because personally, like, I'm kind of busy right now, so I would definitely like to listen and then also listen into the group. Oh shit.
I would also like to hear everyone's
Well,
opinion.
Tame would either have to set up a screen cap or do broadcast, or one of us could, like, if Tame's not around to do it, one of us could just start the screen share and then do it locally on Discord. People can hop in,
Same.
share.
That would be super cool. If not, it's understandable, but that would be cool.
I think he's AFK.
I'm messaging him. I don't know. They want the stream. We want the stream too. Yeah, I think for me, I really want them to get questioned about the potential shady business. Like, where are the shares?
Yeah, it all just falls back down to transparency, and then of course, if the consequences apparently aren't good enough to cause any sort of like adherence to it, they should up it.
Mm-hmm. Oh yeah, he's MIA right now. Mm. Any questions you guys want asked, folks in the YouTube? Post them.
Call me crazy, but this week I've acquired 50 shares of Liu Kang.
Are you rich now?
How
Not,
many?
not quite yet.
Have you been chasing? You were talking about them for like again forever, but I don't know if like did you like make profit?
Yeah, I'm still making profit. I've been buying up and down and up and down. I keep on buying a whole bunch more. I like them. I was talking about them at $1 and some change. They've been above $2 for like the whole week now.
Cool. Yeah, they were up a lot a couple of days ago. They were one of the really up there trending high volume stocks.
One cool thing is that they haven't really let out any products yet, so that's really promising in my opinion.
What are they again?
They do like autonomous cars. Well, not really cars, but they do the software for it to talk to its environment, like LiDAR, and like you can.
Oh,
It's
that's right, the LiDAR. Yes. Okay.
basic, but way more than that though. A lot.
Are they like were they introduced through a SPAC, or is that them or no?
I don't know what a SPAC is.
Like a acquisition company, like a SPAC, blank check corporation.
I'm not sure about that.
Okay.
Forgive my financial knowledge.
No worries. Oh, and yes, guys, Tame said yes. We will be streaming it.
Don't worry, dude. We're all idiots here.
I look at it from
Yeah.
a science point. Like I'm trained as like a mechanical engineer, so that's my brain thinks science and
Oh, you're an
me.
engineer brain. That's
Yes,
awesome. You guys are different. It's in a good way.
I've heard.
My brother's an engineer too, electrical engineer. Yeah.
Yeah.
Okay, I'm gonna look them up.
I put the post that Roaring Kitty put on his Twitter. It's like a martial arts fighting scene. Pretty cool.
I love it.
His outfit reminds me of what was it the Three Little Ninjas?
Three Ninjas was a great movie.
Fucking love that shit when I was a kid. I wanted the mask so bad.
Yeah.
I didn't get to see the first Mortal Kombat, the one that came out in the 90s, because my family was so poor they never took me to the movies. So I'm gonna go see this one.
I've never been to a movie theaters, or I haven't. Whatever.
Oh my god, Mortal Kombat was one of the first movies that I saw in a theater.
I wanted to see that so bad as a kid.
Sunglasses, asshole.
That's
Okay.
crazy.
I wonder if Robin Shu's gonna make an appearance in this
Who's that?
movie. For those who don't know, that was the guy that played Liu Kang.
Yeah, that's what I thought. No, he's not gonna be in there. I didn't
Not
see him.
even a cameo.
They got a different guy to play Liu Kang, so I don't know why they would put him in there.
No,
But who
but
knows?
I mean, yeah, obviously they wouldn't get him to play Liu Kang, but I mean, like as
Like as an extra somewhere.
a cameo, yeah.
Yeah, yeah.
That'd
Look
be
at Quantum Scape. Sorry.
All right, so Liu Kang, I just looked up. They said they announced a securities purchase agreement. I don't know what that means. Does anybody know what that means? For like $100 million.
5.5 minutes till the hearing.
Let's see. You mean like stock dilution? Let me see.
I
don't
think
know.
that's what that is. It has to do with stock dilution, I think.
Yeah.
Sundial
Is
did
that
that too. Was it Sundial? I forgot which. There was a company that did that the other day.
it's horrible for investors when that happens though.
So that's
It's
bad.
like it's necessary, but then it's like the stock tanks for a little bit.
Wait, we're talking about
Yeah.
reverse split? What are we talking about?
But for the long term for the company, it's good depending on how they utilize that capital.
If that's what it was, I'm not sure I heard correctly.
Right,
Do you have
right.
a link? Do you have a link so that we know we're talking about the right thing?
Yeah, I'm about to post it in general. It should be in general now.
Got it. So securities. Yes. Yes.
It's a direct
So
offering,
that
so yes.
and it's $2.08 per share. Yes. Mm-hmm.
So when this happens, is that them giving out more shares that are outstanding? So adding to the total number of shares?
Mm-hmm.
Yeah,
So there's
which
more
dilutes.
shares available, and then
Yeah,
they'll say, well, they'll set a price, $2.08, like they did in this case. And most of the time, if the stock price is above that, it'll come down to around there, and it'll settle in at that price.
right. And then they're collecting that capital, and yeah,
Yes, exactly.
depending on what the CEO and the board wants to do with that money, if they use it well, it
Mm-hmm.
should be good for the company.
Yes.
Wait, who just did a split?
It's not a split. It's just
It's
like it's basically they're raising capital through the issuance of shares.
Exactly.
Oh, okay, yeah.
Yeah.
I know XPL, EXP, whatever, did a split, but they took a huge dump after they did it, so I'm really upset.
I think Aikido Pharma recently did that. So um, they, I can't remember how many millions. It was a lot of money though that they issued all these stocks, and it was also insured by somebody. I can't remember the terminology. I gotta look this up. But yeah, and the price that it was set at was like $1.60, and then the price of the stock was around $2, and so it dropped down, and like right now it's trading at 158. So it lost value after that was announced, and you can see it like on it went from $2.10, boom, down to 161. Sometimes it can work out negatively for those who bought in if if the stock was trading higher.
Yeah, I think Tesla did that twice last year. It takes a dump like for the first week, and then it's right. Well,
Mhm.
at least for Tesla, and then it's right back up again. On YouTube.
We sh-
Sounds like a no.
Yeah. Hold on, is there a link to that?
Huh.
Yo, Keith is looking like a boss, dude. I love it.
Let
Oh,
us see it.
damn. Here we go.
Looking sharp, Keith. Looking sharp, buddy. I'll probably fire up soon.
It'll probably, yeah.
Hang in there, Keith.
Oh, I can't hear it.
Yeah, the audio's
There's no
fucked.
sound. What the Oh my god. And they keep going to Keith. Poor Keith. I love that little look at the hang in there. Oh, it's so perfect.
Cat.
They're definitely talking. I just wish we heard them.
Yeah. Who wouldn't have
Guys, YouTube, my audio is working. Is this video from the Financial Service Committee? I think they're censoring the audio on purpose.
Yo, it just went. Oh, hold on a
They
second.
know. Yeah, they know. They're trying to fix it.
Okay.
Yeah. It'd be funny. They like pulled away from Keith for those who can read like lips, can't read it, you know, or pulled to Keith because the one dude was talking.
Right? Yeah, we see the kitty on the whiteboard. Seriously.
To order.
Here we go.
Without objection, the chair is authorized to declare a recess of the committee at any time. As a reminder, I ask all members to keep themselves muted when they are not being recognized. This will minimize disturbances while members are asking questions of our witnesses. The staff have been instructed not to mute members except where members not being recognized and there is inadvertent background noise. Members are also reminded that they may only participate in one remote proceeding at a time. If you are participating today, please keep your cameras on, and if you choose to attend a different remote proceeding, please turn your camera off. Today, we will make an exception and allow members from Texas to participate without their video function if they are experiencing power outages that prevent them from having their videos working. If members wish to be recognized during the hearing, please identify yourself by name to facilitate recognition. I would also ask that members be patient as the chair proceeds, given the nature of conducting committee business virtually. So this hearing is entitled Game Stopped: Who Wins and Loses When Short Sellers, Social Media, and Retail Investors Collide. I now recognize myself for 3 minutes to give an opening statement. Good afternoon, everyone. This hearing will be the first in a series of hearings for the committee to examine the recent market volatility involving GameStop and other stocks. I want to know how each of the witnesses here today and the companies they represent contributed to the historic trading events in January. This recent market volatility has put a national spotlight on institutional practices by Wall Street firms and prompted discussion about the evolving role of technology and social media in our markets. These events have illuminated potential conflicts of interest and the predatory ways that certain funds operate, and they have demonstrated the enormous potential power of social media in our markets. They have also raised issues involving gamification of trading, potential harm to retail investors, and the business models of apps with retail investors as their users. All of this is why we have witnesses from many of the key players here to testify today, including witnesses representing Wall Street firms Melvin Capital and Citadel, social media company Reddit, trading app Robinhood, as well as one of the retail investors involved. In subsequent hearings, we will hear from regulators and other experts regarding these events, including why Dodd-Frank rulemakings related to short selling disclosures were never implemented. Many Americans feel that the system is stacked against them, and no matter what, Wall Street always wins. In this instance, many retail investors appeared motivated by a desire to beat Wall Street at its own game, and given the losses that many retail investors have sustained as a result of volatility in the system, there are many whose beliefs that the system is rigged against them has been reinforced. Others have noted that there are winners and there are losers in every trade in our financial markets. Our role as a Financial Services Committee is to ensure fairness in our financial markets and system, robust protections for investors, and accountability for Wall Street. Today, we will hear firsthand from the witnesses regarding these events. The hearing will be an opportunity for this committee to get the facts about the role each of the entities the witnesses represent played in the events we are examining today. Now, I recognize the ranking member of the committee, the gentleman from North Carolina, Mr. McHenry, for 5 minutes.
Well, thank you, Madam Chair. And let me just begin by saying I believe Americans are far more sophisticated, informed, and capable than people in DC give them credit for. When I called for this hearing last month, I wanted this to be a fact-finding mission. We have speculation, we have headlines and finger-pointing, but we don't have the facts. We need facts, not just the salacious bits or nasty comments on Reddit. And look, there's plenty of that. We need the facts today. Now,
I actually
some on
live
the
close
left
to this
are already
motherfucker.
floating new restrictions or things to, quote, protect these so-called uninformed retail investors who, in their eyes, don't know the difference between the Dow Jones without Congress telling them. I think if we've learned anything from the past few weeks, it's that these average everyday investors are pretty darn sophisticated. There is wisdom to the crowd. So let's zoom out on that idea just for a moment. The GameStop story represents a larger truth. A fundamental change is happening. Like never before, everyday investors can communicate, access more information, and work collectively to move markets, all in real time. Technology is fueling this revolution. Congress cannot put technology back in the box. GameStop is a culmination of years of pent-up frustration. That frustration is now paired with faster, cheaper, and better technology. Consider for a moment that for every story of someone being able to pay off their student debt from the GameStop trade, or conversely, every story of someone who lost money, there were stories of those who said they were investing in protest. In protest, they would gladly risk losing money just to prove a point. And now, and while no one should ever risk investing money that they cannot afford to lose, let's tell the truth of why someone would do something like that. The sad truth is the K-shaped economy is nothing new in our capital markets because the structural core of our regulations literally enshrined inequity. Policies like the accredited investor definition blatantly pick winners and losers. If you're wealthy, you're good to go. And if you're not, you're deemed too dumb to be trusted with your own money. So a privileged few get to invest alongside Ivy League endowments, getting early access in private markets to the greatest returns of the last 2 generations. But not so fast for the average everyday investor. In the eyes of our government, you need to be protected. Protected from your own decisions, protected from your own money, protected from more opportunities. So you're left with a savings account which pays no interest. And if you need more money than that, well, we created a world where it's easier to go buy a lottery ticket than it is to invest in the next Google. Is it any wonder why the unhealthy dynamics of GameStop happened? It's time we get serious about equity and ownership in the American economy. We should live in a world where the construction worker or Uber driver trading on Robinhood has the same access to equity shares in Robinhood itself as the white-collar employees who work there. Same goes for Reddit and Reddit users, by the way. Both contributed to its success. Why can't both share in its future success? So I'll conclude with a reminder for some of my colleagues who want to regulate more and more. In the 1980s, Massachusetts state regulators barred citizens from investing in what the Wall Street Journal called the latest in a cascade of stocks of high technology companies that occurred that year. What IPO was too risky in the eyes of the government? Apple. So instead of shutting the American public out through new regulations, new forms of taxation, or so-called protections, let's use this opportunity instead to side with them. So I'll begin where I started. Americans are far more sophisticated, informed, and capable than folks in DC give them credit for. And it's time our securities laws treat them that way. I look forward to the hearing, and I yield back.
Thank you so very much. I'm so pleased that you are cooperating today and you were eager to join with us when we call for this committee. So I want to welcome today's distinguished witnesses to the committee. Mr. Vlad Tenev is the Chief Executive Officer of Robinhood Markets Incorporated, a company with a trading app that after increased trading activity in GameStop and certain other stocks, restricted trading of those stocks for a period of time. Mr. Kenneth C. Griffin is the Chief Executive Officer of Citadel, LLC, a fund which is one of Robinhood's main customers and sources of revenue, which also provided financial support to Melvin Capital Management LP when Melvin faced significant losses over GameStop and other trades. Gabriel Huff is the Chief Executive Officer of Melvin Capital Management LP, which held a significant short position in GameStop and other stocks and experienced significant losses due to its positions. Steve Huffman is the Chief Executive Officer, co-founder of Reddit, a social media platform which is home to the subreddit Wall Street Bets, where retail investors discuss trading and where a large number of members discuss the purchase of GameStop and other stocks which experience volatility. Mr. Keith Gill is a retail investor who posted on Reddit and YouTube regarding investing in GameStop and other stocks. Jennifer Gall is a director of financial regulation studies at the Cato Institute. Without objection, your written statements will be made part of the record. Each of you will have 5 minutes to summarize testimony.
Chairman here. It was I believe that there are only 3 minutes of Democratic opening statements with the idea that the subcommittee chair on the Democratic side would be called as well. That's what I was told by your staff.
Well, thank you very much. If that is the order that has been organized, I will cease my introductions and I will call on you, Mr. Sherman, to please go ahead and make an opening statement. Thank you.
Thank you so much. Back in the day, the law school professor would create an exam where he'd weave together a story that would exemplify each of the issues in that area of the law. But never did the professor do it as good a job as the GameStop saga, which identifies most of the issues facing our capital markets. Short selling. Could there be limits or required additional disclosures? What do we do with market participants, whether they be on Reddit or on Wall Street, who are shorting a stock or buying a stock for the purpose of influencing its price? What is this payment for order flow model? And what does it mean when some participants get best execution and some get enhanced best execution? In price enhanced best execution, and are all traders being treated fairly, and is payment for order flow free to the consumer? We need to look at the plumbing where it takes 2 days to settle a transaction, but also why is it the broker's capital rather than the customer's capital that is posted during the 2-day period? And finally, we need to look at the gamification and glorification of high frequency trading. I thank the chairwoman for the time, and I hope that in the months to come, we have several hearings to explore these issues and that we're able to pass legislation this year to deal with each of them, and I yield back.
Thank you. The chair now recognizes the chairman of the subcommittee of oversight and investigations, the gentleman from Texas, Mr. Green, for 1 minute.
Thank you very much, Madam Chair. I greatly appreciate the opportunity to express some concerns that I have. It is a fact that Citadel Securities has paid over $100 million in penalties. And my concern is this. It deals with whether we can allow a market maker's profits from misleading clients and improperly trading ahead of clients to become something as simple as the cost of doing business. The risk of punishments for violations must always exceed the rewards to deter the risk. I'm concerned, and my hope is that we'll get some additional intelligence on how these punishments have impacted the rewards that have been received. I yield back.
Thank you very much. And I will go back to the introduction of our witnesses. I left off with Jennifer Sklupp, Director of Financial Regulation Studies at the Cato Institute. Without objection, your written statements will be made part of the record. Each of you will have 5 minutes to summarize your testimony. You should be able to see a timer on your screen that will indicate how much time you have left, and a time will go off at the end of your time. I would ask you to be mindful of the timer and quickly wrap up your testimony if you hear the chime. Now, before we begin with your oral testimonies, I would like to swear in the witnesses. I will call each of your names individually to respond. Would you please raise your hands? Do you solemnly swear to affirm that the testimony you will give before this committee in the matters now under consideration will be the truth, the whole truth, and nothing but the truth, so help you God? Mr. Tanel?
I do.
Mr. Griffin?
I do.
Mr. Plotkin? Mr. Plotkin?
I was muted. I apologize. I do.
Thank you. Mr. Huffman?
I do.
Mr. Gill?
I do.
Ms. Gluck?
I do.
Thank you very much. Let the record show that all of the witnesses answered in the affirmative. We will now begin with their oral testimonies. Mr. Tanab, you are recognized for 5 minutes to present your oral testimony.
Chairwoman Waters, Ranking Member McHenry, members of the committee. My name is Vlad Tenev, and I'm the Chief Executive Officer and co-founder of Robinhood. Thank you for the invitation to speak about Robinhood and the millions of people we serve. Almost 8 years ago, Beju Bhatt and I founded Robinhood. We believed then, as we do now, that the financial system should be built to work for everyone, not just a select few. We dreamed of making investing more accessible, especially for people without a lot of money. The stock market is a powerful wealth creator, but only half of US households participate in it.
Mr. Staff, I would like you to use your limited time to talk directly to what happened January 28th and your involvement in it.
Certainly.
Madam Chair, the witness has the opportunity to give their own testimony.
Excuse me, you are
Use
not
your time for your questioning.
You are not recognized, Mr. Please go right ahead and speak directly to the question.
McHenry.
Mr. McHenry, yes, of course.
We created Robinhood to economically empower all Americans by opening financial markets to them. I was born in Bulgaria, a country with a financial system that was on the verge of collapse. At the age of 5, I immigrated with my family to America in search of a better life. I have benefited from all America has to offer, and Robinhood's mission to democratize finance for all has a very special significance for me. Robinhood's platform allows people from all backgrounds to invest with no account minimums and zero commissions. Contrary to some very misleading and highly uninformed reports, we see evidence that most of our customers are investing for the long term, with features like fractional shares, dividend reinvestment, recurring investments. Our customers can start with small amounts and grow their investments in blue chip stocks and ETFs over time. We've always recognized the responsibility that comes with helping people invest. We'll continue to enhance our educational platform to help customers no matter where they are in their financial journey. Hundreds of free educational resources are available to everyone on our Learn website right now. While markets fluctuate, this tells me our business model is working for everyday Americans. The total value of our customers' assets on Robinhood exceeds the net amount of money they have deposited with us by over $35 billion. This tells me our business model is working for everyday Americans, the Robinhood community. Many people say that Robinhood has helped them to pay car loans, reduce student loan debt, meet daily bills, save for the future, and we're proud to serve them. You've invited me today to discuss the events of last month, and I welcome this opportunity. In late January, many brokerage firms saw a massive increase in trading activity in a handful of stocks. Prices were moving dramatically day to day, even hour to hour. One specific day, January 28th, proved to be a completely unprecedented event. The spike in trading activity and volatility meant that Robinhood Securities, our clearing broker, had to hold the line and post additional firm capital as collateral to support our clearinghouse deposit demands. To put it in perspective, on January 28th, our daily deposit requirement was 10 times more than on January 25th. As a result, Robinhood Securities, along with many other firms, imposed temporary trading restrictions on certain securities. We began allowing limited buys of these securities the following day, and we have since lifted the restrictions entirely. There are 2 points I want to make clear about these temporary restrictions. First, Robinhood Securities put the restrictions in place in an effort to meet increased regulatory deposit requirements, not to help hedge funds. We don't answer to hedge funds. We serve the millions of small investors who use our platform every day to invest. Second, Robinhood immediately secured additional funds. Altogether, through capital raising and other measures, we've increased our liquidity by more than $3 billion to cushion ourselves against increased collateral requirements and related market stress in the future. Despite the unprecedented market conditions in January, at the end of the day, what happened is unacceptable to us. To our customers, I'm sorry and I apologize. Please know that we are doing everything we can to make sure this won't happen again. And I want to highlight one more thing. The existing 2-day period to settle trades exposes investors and the industry to unnecessary risk. There is no reason why the greatest financial system in the world cannot settle trades in real time. I believe we can and should act now to deploy our intellectual capital and our engineering resources to move to real-time settlement. Together, we can solve this. Before I close, I want to sincerely thank the millions of customers who continue to use Robinhood to access the markets every day. We are grateful and committed to you. Members of the committee, I appreciate the opportunity to answer your questions.
Mr. Griffin, you are now recognized for 5 minutes to present your oral testimony.
Chairman Waters, Ranking Member McHenry, distinguished members of the committee, thank you for the opportunity to testify today on the recent market events. The U.S. capital markets are the envy of the world. Our nation's ability to allocate capital to its best and highest use creates jobs, drives innovation, and fuels our economy. America's retail investors play an important role in our capital markets. According to Gallup, about 55% of Americans own stock right now. Citadel Securities, as the largest market maker in the U.S. equities market, executes more trades on behalf of retail investors than any other firm. As I will discuss shortly, Citadel Securities played an important role in meeting the needs of retail investors during the week of January 24th. Before doing so, I want to be perfectly clear. We had no role in Robinhood's decision to limit trading in GameStop or any of the other meme stocks. I first learned of Robinhood's trading restrictions only after they were publicly announced. All of us at Citadel Securities are committed to the healthy functioning of the U.S. equities markets. Now, I first participated in the financial markets as a retail investor. In the late 1980s, while attending college, I traded stocks and options from my dorm room. My passion for investing led to my founding of Citadel in 1990. Today, Citadel is one of the world's leading alternative investment managers. Our capital partners include pension plans, colleges, hospitals, foundations, and research institutions. In 2002, my partners and I founded Citadel Securities. Today, Citadel Securities is one of the world's preeminent market makers. We have been a leader in using technology to transform our markets, particularly for retail investors. Citadel Securities invests hundreds of millions of dollars each year to serve the needs of our customers. In the last week of January, the importance of this investment was on full display. During the period of frenzied retail equities trading, Citadel Securities was able to provide continuous liquidity every minute of every trading day. When others were unable or unwilling to handle the heavy volumes, Citadel Securities was there. On Wednesday, January 27th, we executed 7.4 billion shares on behalf of retail investors. To put this into perspective, on that day, Citadel Securities executed more shares for retail investors than the entire average daily volume of the entire US equities market in 2019. The magnitude of the orders routed to CL Securities reflects the confidence of the retail brokerage community in our firm's ability to deliver in all market conditions and underscores the critical importance of our resilient and stable systems. I could not be more proud of our team at Citadel Securities. My colleagues who were committed to ensuring that the interest of America's retail investors were served during this extraordinary period. Once again, I appreciate the opportunity to appear today, and I look forward to answering your questions.
Thank you, Mr. Griffin. Mr. Plotkin, you are now recognized for 5 minutes to present your oral testimony.
Chairwoman Waters, Ranking Member McHenry, and members of the committee, I would like to thank you for this opportunity to share Melvin Capital's perspective on the recent trading activity in GameStop. I am the founder and chief investment officer of Melvin Capital. I'm humbled by these unprecedented events. Many investors on all sides have experienced losses. I am here today to share my own personal experience and to be helpful in this conversation. I understand that part of the focus of this hearing is the decision of stock trading platforms to limit trading in GameStop. I want to make clear at the outset that Melvin Capital played absolutely no role in those trading platform decisions. In fact, Melvin closed out all of its positions in GameStop days before the platforms put those limitations in place. Like you, we learned about those limits from news reports. I also want to make clear at the outset that contrary to many reports, Melvin Capital was not bailed out in the midst of these events. Citadel proactively reached out to become a new investor, similar to the investments others make in our funds. It was an opportunity for Citadel to buy low and earn returns for its investors if and when our fund's value went up. To be sure, Melvin was managing through a difficult time, but we always had margin excess and we were not seeking a cash infusion. I'm here testifying today far removed from my background. I grew up in a middle-class family in Portland, Maine. I went to a public high school. I studied hard and got into a good college. Upon graduation, I did not have a job. Today, I'm married with 4 children, and my time is spent with my family and on Melvin Capital, which I founded 6 years ago. I named Melvin after my grandfather, who ran a convenience store. I wanted the firm to represent his values, integrity, hard work, taking care of customers and employees, and commitment to excellence. Melvin Capital manages a hedge fund. Investors such as academic institutions, medical research and other charitable foundations, pension funds, retirees, and others invest with us. We have 36 employees and hundreds of investors, and I feel a personal duty to all of them. Melvin specializes in the consumer and technology sector, including companies like GameStop, AutoZone, and Expedia. Most of our investments are long. In other words, we buy stock in companies that create jobs, grow the economy, and develop new products for consumers. We do this after extensive fundamental research, sometimes literally for years. When our research convinces us that a company will grow relative to expectations, we make a long-term investment. When our research suggests a company will not live up to expectations and its stock price is overvalued, we might short a stock. Like with our long positions, our practice is to short a stock for the long term after extensive research. We also short stocks because when the markets go down, we have a duty to protect our investors' capital. There are laws governing shorting stock, and of course, we always follow them. In addition, it's very important to understand that absolutely none of Melvin's short positions are part of any effort to artificially depress or manipulate downward the price of a stock. Nothing about our short position prevents a company from achieving its objectives. It is just Melvin's view about whether it will. Specific to GameStop, we had a research-supported view well before the recent events. In fact, we had been short GameStop since Melvin's inception 6 years earlier, because we believed and still believe that its business model, selling new and used video games in physical stores, is being overtaken by digital downloads through the internet. And that trend only accelerated in 2020 when, because of the pandemic, people were downloading video games at home. As a result, the gaming industry had its best year ever, but GameStop had significant losses. In January 2021, a group on Reddit began to make posts about Melvin's specific investments. They took information contained in our SEC filings and encouraged others to trade in the opposite direction. Many of these posts were laced with anti-Semitic slurs directed at me and others. The post said things like, "It's very clear we need a second Holocaust. The Jews can't keep getting away with this." Others sent similarly profane and racist text messages to me. In the frenzy during January, GameStop stock rose from $17 to a peak of $483. I do not think anyone would claim that the price had any relationship to the intrinsic value of the business. The unfortunate part of this episode is that ordinary investors who were convinced by a misleading frenzy to buy GameStop at $100, $200, or even $483 have now lost significant amounts. When this frenzy began, Melvin started closing out its position in GameStop at a loss. Not because our investment thesis had changed, but because something unprecedented was happening. We also reduced many other Melvin positions at significant losses, both long and short, that were the subject of similar posts. I'm personally humbled by what happened in January. Investors in Melvin suffered significant losses. It is now our job to earn it back. And while I do not think that anyone could have anticipated these events, I've learned much from them, and I'm taking steps to protect our investors from anything like this happening in the future. I look forward to answering your questions.
Thank you, Mr. Plotkin. Mr. Huffman, you are now recognized for 5 minutes to present your oral testimony.
Thank you. Madam Chairwoman, Mr. Ranking Member, honorable members of the committee, my name is Steve Huffman. I am the co-founder and CEO of Reddit, and I'm pleased to talk with you today about how Reddit works and what we have seen on our site in the past few weeks. Reddit's mission is to bring community and belonging to everyone in the world. What started in 2005 as a single community has since evolved into a vast network of many thousands of communities. They range from standard topics like news, sports, politics, to internet culture, to support. For example, our unemployment community has become a source of support for hundreds of thousands of Americans who have turned to Reddit after losing their jobs during the pandemic. Our communities are created and run by our users. Because of this, we describe Reddit as the most human place on the internet. Though we are small compared to the largest platforms, our communities provide an online home for millions of people every day. I'd like to share a bit about how content moderation on Reddit works. Reddit's moderation system starts with our content policy, the platform-wide rules which all communities must follow. Among other things, these rules prohibit hate, harassment, bullying, and illegal activity on Reddit, and they are enforced by Reddit's anti-evil team, which is composed of engineers, data scientists, and other specialists. This team also ensures the integrity of the site, and we have continuously honed our methods to stay ahead of bad actors to protect Reddit from manipulation, spam, and other threats. This team searched high and low for the specific comment mentioned in the previous testimony, or anything like it. The closest we could find was a single comment that received no votes and was deleted within 5 minutes. Such speech is not tolerated on Reddit, and we will of course investigate any further claims of this nature. Centralized moderation is common, but Reddit additionally uses a governance structure akin to a federal democracy, where the aforementioned policies and teams represent the federal government and the communities themselves represent states. All communities, or subreddits, are created by users that we call moderators. They set the community's rules, which may be as strict as they like as long as they are not in conflict with the platform-wide policies, and they have a variety of tools of enforcing these rules independently. Moderators are not paid employees, but rather users who are passionate about their communities. They have the context and judgment to make decisions no algorithm could. The members of each community contribute both the content itself and the ranking of it by voting up or down on any post or comment. Unlike other platforms where submission has a built-in audience through the author's follower count, every piece of content on Reddit, no matter how famous the author, starts at 0 and has to earn its visibility. Through their votes, the community itself enforces not just the explicit rules of their community, but also the unwritten rules that define their culture. This layered approach has helped our users create the most authentic communities online. The specific community we'd like to talk about today is Wall Street Bets. It's important to understand that Wall Street Bets is one of many finance and investing related communities on Reddit. This particular community specializes in higher risk, higher reward investments than what you might find in other more conservative financial communities on Reddit, with such names as personal finance, investing, and financial independence. I will stress that Wall Street Bets is first and foremost a real community. The self-deprecating jokes, the memes, the crass at times language all reflect this. And if you spend any time on Wall Street Bets, you'll find a significant depth to this community exhibited by the affection its members show one another. They are just as quick to support a fellow member after a big loss as they are to celebrate after a big gain. A few weeks ago, we saw the power of community in general and of this community in particular when the traders of Wall Street Bets banded together at first to seize an investment opportunity not usually accessible to retail investors, but later more broadly to defend all retail investors against the criticism of the financial establishment. With the increase in attention, Wall Street Bets unsurprisingly faced a surge in traffic and new users. At Reddit, our first duty in these situations is to our communities, and our role in this moment was to keep Wall Street Bets online. Working around the clock, we scaled our infrastructure, made technology changes to help this community withstand the onslaught of traffic, and we acted as diplomats to help resolve conflict within Wall Street Bets leadership. We have since analyzed the activity in Wall Street Bets to determine whether bots, foreign agents, or other bad actors played a significant role. They have not. In every metric we checked, the activity in Wall Street Bets was well within normal parameters, and its moderation tools were working as expected. We will, of course, cooperate with valid legal requests from federal and state regulators. That said, we do believe that this community was well within the bounds of our own policies. To conclude, I would like to reiterate why it is important to protect online communities like Wall Street Bets. Wall Street Bets may look sophomoric or chaotic from the outside, but the fact that we're here today means they've managed to raise important issues about fairness and opportunity in our financial system. I'm proud they use Reddit to do so. Thank you, and I look forward to your questions.
Thank you very much, Mr. Huffman. Mr. Gill, you are now recognized for 5 minutes to present your oral testimony.
In the middle of the shop right now.
Thank you, Chairwoman Waters, Ranking Member McHenry, members of the committee. I'm happy to discuss with the committee my purchases of GameStop shares and my discussions of their fair value on social media. It is true that my investment in that company multiplied in value many times. For that, I feel enormously fortunate. I also believe the current price of the shares demonstrates that I've been right about the company. A few things I am not. I am not a cat. I am not an institutional investor, nor am I a hedge fund. I do not have clients, and I do not provide personalized investment advice for fees or commissions. I'm just an individual whose investment in GameStop and posts on social media were based upon my own research and analysis. I grew up in Brockton, Massachusetts. My family was not wealthy. My father was a truck driver and my mom a registered nurse. I was one of 3 kids and the first in my family to earn a 4-year college degree when I graduated from Stonehill College in 2009. That was not a good time to be looking for a job. From 2010 to 2017, I worked at a few startup companies, but there were significant periods when I was unemployed. I took an interest in the stock market, and even though I had very little money, I used those times to educate myself and learn more about investing. In April 2019, after nearly 2 years unemployed, I accepted a marketing and financial education job at MassMutual. My wife Caroline and I were thrilled that I had an income and benefits. My job was to help develop financial education classes that advisors could present to prospective clients. I was not a stockbroker or a financial advisor. I did not talk to clients, and I did not recommend stocks for them to buy. Before and after I joined MassMutual, I studied and followed stocks. One of those was GameStop. In early June of 2019, the price of GameStop stock declined below what I thought was its fair value. I invested in GameStop in 2019 and 2020 because, as I studied the company, I became more and more confident in my analysis. 2 important factors, based entirely on publicly available information, gave me confidence that GameStop was undervalued. First, the market was underestimating the prospects of GameStop's legacy business and overestimating the likelihood of bankruptcy. I grew up playing video games and shopping at GameStop, and I plan to continue shopping there. GameStop stores still provide real value to consumers and reliable revenue for GameStop. Second, I believe that GameStop has the potential to reinvent itself as the ultimate destination for gamers within the rapidly growing $200 billion gaming industry. GameStop has a unique opportunity to pivot toward a technology-driven business. By embracing the digital economy, GameStop may be able to find new revenue streams that vastly exceed the value of its business. I am hardly the only person who has advocated these points. When I wrote and spoke about GameStop on social media with other individual investors, our conversations were no different from people in a bar or on a golf course or at home talking or arguing about a stock. Hedge funds and other Wall Street firms have teams of analysts working together to compile research and analyze shares of companies. Individual investors do not have those resources. Social media platforms like Reddit, YouTube, and Twitter are leveling the playing field. The idea that I use social media to promote GameStop stock to unwitting investors and influence the market is preposterous. My post did not cause the movement of billions of dollars into GameStop shares. It is tragic that some people lost money, and my heart goes out to them. But what happened in January just demonstrates again that investing in public securities is extremely risky. As I said earlier, I consider myself and my family fortunate with our investment. When the stock price broke $20 in December, I knew my investment was a success. I was so happy to visit my family in Brockton for the holidays. The money will go such a long way for us. We had an incredibly difficult 2020. Most difficult was the tragic and unexpected loss of my sister Sarah in June. I am grateful to be in a position to give back to and support my family. As for what happened in January, others will have to explain it. It's alarming how little we know about the inner workings of the market. And I am thankful that this committee is examining what happened. I also want to say that I support retail investors' right to invest in what they want, when they want. I support the right of individuals to send a message based on how they invest. As for me, I like the stock. I'm as bullish as I've ever been on a potential turnaround for GameStop, and I remain invested in the company. Thank you. Cheers, everyone.
Thank you, Mr. Gill. Ms. Schlupp, you are now recognized for 5 minutes to present your oral testimony.
Chairwoman Waters, Ranking Member McHenry, and distinguished members of the Committee on Financial Services. My name is Jennifer Schulp, and I am the Director of Financial Regulation Studies at the Cato Institute's Center for Monetary and Financial Alternatives. Thank you for the opportunity to take part in today's hearing. Before addressing the GameStop phenomenon specifically, I'd like to talk about the participation of retail or individual investors in our public equities markets. Retail participation has ebbed and flowed over the years, but the recent upward trend accelerated sharply during the pandemic. Most point to zero commission trading, but several other factors also likely attracted retail investors, including fractional share trading, low account minimums, and easy app-based platforms. More time at home during the pandemic probably even played a role. Retail participation in our equities markets is important. The fact that retail investors behave differently from institutional ones and differently from each other can be particularly valuable in times of market stress. In fact, individual investors may have helped stabilize the market in March 2020. Importantly, investing in the stock market also provides a path to wealth for individual investors. But stock ownership traditionally has been skewed towards the already wealthy, and it is highly correlated with race, education, and age. Retail investors making up this new surge are different. Recent research by the FINRA Investor Education Foundation and NORC at the University of Chicago found that investors who opened accounts for the first time in 2020 were younger, had lower incomes, and were more racially diverse. These new investors also held lower account balances. This may portend, as one of the researchers noted, quote, a shift towards more equitable investment participation. These new opportunities for individuals to grow their wealth should be welcomed and expanded, not restricted. Now I'll turn to GameStop. At the outset, I will note that it is difficult to analyze the impact of the trading in GameStop and other stocks because many facts are unknown. But some things seem clear. Importantly, the temporary volatility in these stocks did not present a systemic risk to market function. As the Treasury Department recognized, the market's, quote, core infrastructure was resilient during high volatility and heavy trading volume. This is not surprising. Despite the huge trading volume and rapid increase in value, only a small part of the market was affected, and spillover effects on the wider market were mild and short-lived. The fact that GameStop traded temporarily and perhaps still trades above fair estimates of the company's value is not, by itself, a reason for concern. Stock prices move in and out of alignment all the time, and markets are no strangers to bubbles. If a company is valued by the market differently than a review of its fundamentals suggests, it might indicate that the analysis is missing relevant information about a company's prospects, or it might indicate that the company's stock price is due for a correction. The market's mechanisms, including the tool of short selling, generally work well to handle these circumstances. Stepping in to prevent trading where a stock price moves contrary to conventional wisdom could deprive the market of important information. The SEC, among a host of others, is reviewing the relevant trading and conducting a study of the events. The SEC will have access to far more information than has been made publicly available, and I believe it has the tools necessary to address any harmful misconduct that may have occurred. I cannot opine on whether any regulatory changes are warranted on this incomplete record. I tend to believe the answer will be no in light of the minimal impact on the market's function. But as regulators learn more, there may be areas identified for improvement. By no means, though, should these events lead to restrictions on retail investors' access to the markets. Thank you, and I welcome any questions that you may have.
Thank you, Ms. Schwab. I now recognize myself 5 minutes for questions. The market volatility surrounding GameStop and other securities has highlighted how many people feel that the cards are stacked against them, and that market participants, like our witnesses, hide the ball. Mr. Teneve, you explained that Robinhood restricted transactions in certain securities to meet demands coming from your clearinghouse. And yet, on January 28th, you represented to the media that there was no liquidity problem. Isn't it true that being concerned about having enough capital to meet deposit requirements, isn't that a liquidity problem? Could you just answer yes or no?
Chairwoman Waters, I appreciate the opportunity to address that.
Just yes or no?
We always felt comfortable with our liquidity and the additional capital that Robinhood raised.
Please answer yes or no.
We always felt
To get
comfortable
through my
with our
5
liquidity.
minutes, I don't have time. I just need a yes or no answer.
I stand by my statement. The additional capital we raised wasn't to meet capital requirements or deposit
So the
requirements.
gentleman,
Excuse me.
I'm reclaiming my time. This liquidity problem had real consequences for your customers, but I wonder if they were all that surprised. Between December 2019 and December 2020, Robinhood customers experienced monetary losses due to system outages. Customer accounts were reportedly compromised. The firm repeatedly failed to testify its best execution obligations, and it misled its customers regarding its revenue sources. It seems retail investors often get a bad deal at Robinhood. Mr. Teneve, also, while you testified today that, quote, Robinhood's customers benefit greatly from payment for order flow, quote unquote, in December 2020, the SEC charged Robinhood for not disclosing that it was getting paid to send customer trades to Citadel Securities and other market makers, and for not seeking the best terms for its customers' orders. Robinhood provided such inferior trade prices, it cost your customers over $34 million. Is your testimony after Robinhood paid, is it your testimony after Robinhood paid the SEC $65 million to settle those charges, that this conflict of interest is in your customers' best interest? Yes or no?
Chairwoman Waters, first let me say regulatory compliance is at the center of everything that we do. We've made mistakes in the past. I'm not claiming that.
But answer yes or no to that question.
So Citadel Securities is an important counterparty. Nobody's denying that. The reason that
Gentlemen, can I answer yes or no? I'm reclaiming my time. Meanwhile, Mr. Griffin, Citadel's role in this event also raises significant questions for policymakers. Citadel Securities pays Robinhood tens of millions of dollars to process trades by Robinhood's customers. This relationship gives Citadel Enterprise key non-public information as to direction and volume of trades by retail investors. Your firm makes use of private exchanges called dark pools and other off-exchange trading to trade large sizes without moving the market against you. In fact, at some point last month, 50% of all trades occurred in dark pools or via OTC off-exchange trades. Your business strategy is designed intentionally to undermine market transparency and skim profits from companies and other investors. One problem, though, Mr. Griffin, is that we don't really know how central your firm has become to the capital markets. Mr. Griffin, does Citadel handle 47% of the U.S. listed retail volume? Please, yes or no?
Excuse me, Chairman Waters, what percentage? I couldn't hear that number.
47%.
So Chairman Waters, to the best
Yes
of
or
my knowledge,
no?
so the odd, to the best of my knowledge, we handle in excess of roughly 40% of all retail volume.
Thank you very much for reclaiming my time. Mr. Griffin, on January 27, did Citadel execute 7.4 billion shares for retail investors, which would be more trades than the average daily volume of the entire United States equities market in 2019? Yes or no?
Chairman Waters, that was my written and oral testimony.
Thank you very much. And with that, I now recognize the distinguished ranking member, Mr. McHenry, for 5 minutes for questions.
All right, thank you. Mr. Tanev, I'm going to come to you first. I just want to get to what happened on that day in January. So let's take a step back here. You get a call in the middle of the night, according to what I've heard you in interviews say. And based off that conversation with your compliance team, you decided to halt the buying of GameStop stock. People were furious. We'll get into the regulations and the settlement parts of that today. We will get to that. But this is what I think needs to be answered about your decision. Why did Robinhood restrict the buying but not the selling of GameStop? And why did folks get locked out on the buy side only?
Ranking Member McHenry, I appreciate the opportunity to address that. The reason that Robinhood, first of all, let me say Robinhood is always committed to providing access. It's in our name. It's in everything that we do. The decision to restrict GameStop and other securities was driven purely by deposit and collateral requirements imposed by our clearinghouses. So buying securities increases our collateral requirements. Selling does not. Moreover, preventing customers from selling is a very difficult and painful experience where customers are unable to access their money. So we don't want to impose that type of experience on our customers unless we have no other choice. And even though I recognize customers were very upset and disappointed that we had to do this, I imagine it would have been significantly worse if we prevented customers from selling.
Okay, so let me ask this question. Is payment for order flow legal?
Yes, payment for order flow is legal and regulated and a common industry.
And is this disclosed to those users of your app?
Yes, payment for order flow is disclosed in multiple places. And moreover, payment for order flow enables commission-free trading. And that's why it's become the industry standard model, as other brokerages have replicated our model and started offering commission-free trading to their customers as well.
Okay, so to that, to this greater point of what happened that day and the model that you're using, let's be crystal clear. That decision you made to restrict the buying but not the selling of GameStop was based. What was it based on? Pressure from anyone on the witness panel here today?
Not at all. Zero pressure from anyone. It was a collateral depository requirement decision made by our Robinhood Securities president.
All
And I
right.
fully
So
stand
let me
by
get into this other question. Let me get into this question. You want to democratize finance. You want to open up Wall Street to retail investors. You say that Robinhood's mission is to democratize finance for all. So let's talk about that. So yes or no, can a Robinhood customer invest in Robinhood, the company?
Robinhood's currently a private company, so that's not possible, no.
And so you mean to tell me that the people that use your platform, that make you a successful company, and I would say directly contribute to your company's exponential growth and success, they don't get the same access to equity shares as a Robinhood employee or your institutional investors. Is that correct?
Currently, that is correct, yes.
All right, Ms. Schulp, let me pivot to you. Why is that? Why is it that everyday investors on the Robinhood app, people that I would argue contributed to its success, can't invest in Robinhood itself?
The SEC limits a lot of investment in private companies to those folks that are known as accredited investors. And to become an accredited investor, you have to have meet a wealth test of earning at least $200,000 a year, or having a net worth of over $1 million. The vast majority of people in this country don't meet that standard and are unable to invest in most private companies.
Okay, so let me just clear this. Mr. Tinev, I don't blame you for the restriction you put on your customers not being able to invest in equity. I'd like to have more opportunity to ask Mr. Gill his thoughts on this, but let me just say this. I don't fault you for the inequitable regulatory structure that DC has created, but I think we need to clear this up. Final thing, Madam Chair, I have for the record, I'd like to submit a letter from the DTCC, which is the clearing company, that was not on the panel today, and your staff has this letter already.
Order.
All right, thank you all, and look forward to getting to the facts that matter here today.
Other members, Ms. Maloney.
Thank you, Chairwoman Waters and Ranking Member McHenry for convening this hearing. I hope today's hearing sheds light on how our markets are working, or in many cases are not working, for smaller investors and ways we can fix that. The events of late January saw tremendous volatility and stock prices that were totally divorced from market fundamentals. The whole enterprise was viewed by some as a giant video game, trading stocks instead of properties and monopoly money. But it's not all fun and games, because people can lose their life savings, their hard-earned cash, and tragically, last summer we know of at least one suicide linked to potential trading losses. Beyond those possible losses, the actions of Robinhood and other trading platforms during the GameStop frenzy caused confusion, anger, and undermined investor confidence in the fundamental fairness of our capital markets. None of this is healthy for our markets or good for investors. What makes markets work fairly is when everyone knows the rules and that the rules remain consistent and predictable and are enforced. But because of Robinhood's actions, too many customers did not get that predictability. Many retail investors woke up on January 28th to find that they could no longer buy and sell stocks the same way they could the days prior, and they were being treated differently than other market participants who could still buy and sell those same stocks. So I don't blame them for thinking that things were stacked against the little guy. Mr. Tinev, you stated in your testimony that Robinhood restricted trading for certain securities, including GameStop, in order to meet your financial requirements with your clearinghouse. But when I go to Robinhood's website and the blog post you initially released on January 28th, your financial requirements with your clearinghouse are not mentioned. You only mention market volatility. And when I review the Robinhood customer agreement, you don't include specifics on how and when you may decide to restrict trading, which you did. And you don't include any language or disclosures regarding your capital requirements. It only includes vague language that at any time and in its sole discretion, Robinhood can restrict trading. In other words, you seem to reserve the right to make up the rules as you go along. So I have two questions for you. First, do you think you owe your customers more disclosure and transparency than you gave them? And second, do you believe your lack of candor with your customers might have contributed to the wild speculation and confusion that resulted in the aftermath of your trading restrictions?
Congresswoman, I appreciate the question. So to answer the second question, look, I'm sorry for what happened. I apologize, and I'm not going to say that Robinhood did everything perfect and that we haven't made mistakes in the past. But what I commit to is making sure that we improve from this, we learn from it, and we don't make the same mistakes in the future. And Robinhood as an organization will learn from this and improve to make sure it doesn't happen again. And I'll make sure of that.
Well, I expect we will experience future events with increased volatility, and Robinhood's recent actions appeared arbitrary, which is why I don't blame customers for feeling treated unfairly. Your trading restrictions came out of the blue, and your communication was not clear. So my next question, Mr. Tenev, looking forward, what operational changes is Robinhood making to better respond to future market volatility, to improve transparency with your customers, and to ensure retail customers don't get the rug pulled out from under them at the last minute?
Thank you for that question, Congresswoman. We'll be committing to reviewing absolutely everything about this. The $3.4 billion that we raised, I think, goes a long way to cushioning the firm from future market volatility and other similar black swan events. And I believe that even throughout this process, we improved our risk management processes and strengthened them so that the experience customers had on Friday of that week was much improved from Thursday.
Thank you.
We'll continue to learn and improve upon this.
Ms. Wagner, you're recognized for
Thank you, Madam Chairwoman. I'd like to welcome our witnesses for testifying today to discuss the late January market volatility that took place, along with what I hope is a broader discussion on market functions and their effect on everyday investors. Since I was very first elected, I have advocated for America's Main Street investors and worked tirelessly to ensure that all Americans, especially those low and middle income savers, are given the investment choice, access, and affordability that they deserve. Retail investors are the strength of our stock market, and I have fought throughout my career for their best interests in the financial markets. And this hearing today is no different. The advances in financial technology that we've witnessed in the last decade have improved the way that Americans and our businesses perform financial activities. In just the past year, we have seen retail investors' market participation more than double. And I think this is great. I believe in the wisdom of the retail investor, and I will say I believe in the First Amendment too. This increase is attributed to Robinhood and other trading brokerages who are lowering account minimums, permitting fractional share trading, and implementing zero commission trading. It is critical that Congress focus on reducing barriers to market participation, which is rarely want to do, let me sadly say, and allowing Main Street Americans access to the financial instruments that can create long-term investment savings. All of these changes have given millions of Americans the ability to invest better for their families and their future. My hope is that the majority does not use this hearing as an excuse to once again add new federal regulatory burdens to an industry that is already heavily regulated, that will prevent people from participating in our capital markets. Letting existing regulations work is key, not burdening everyday investors with new and more costly barriers to entry. Mr. Tanev, it appears at the time your company did not have enough money to meet the collateral requirements for that level of trading by your customers. In your view, A, were collateral requirements from the DTCC unreasonably high? Was the amount of trading on your platform unforeseeable? Or was your company undercapitalized given its risk profile?
Thank you for the question, Congresswoman. So this event was a 5 Sigma event, which is a 1 in 3.5 million event. To put that in context, there have only been tens of thousands of stock market days in the history of the US stock market. So a 1 in 3.5 million event basically is unmodelable. That said, we can learn from it. And in this particular case, our risk management processes worked appropriately to keep us in compliance with all of our deposit requirements and collateral requirements.
Well, Mr. Tanev, I realize that you are doing a full review of your practices and such. I encourage you to do that. And certainly communication with your investors is going to be key to that because you didn't communicate with them early on. Let me just say, as the ranking member on the Diversity and Inclusion Subcommittee, I am delighted to be speaking with our witness, Ms. Jennifer Schulp. Ranking Member McHenry and I have spent countless hours stressing the importance of having qualified women in finance. So I'm pleased to have you here today to lend your expertise. Ms. Schulp, we now know that it was the daily collateral demands set by the National Security Clearing Corporation that were the reason Robinhood had to temporarily restrict trading. Can you briefly explain the purpose of these capital requirements and their overall relationship to ensuring our markets function in an orderly manner? And did you see any broad failures of market function during these events, ma'am?
Sure, thank you. Thank you for the compliment. The NSCC's collateral requirements here serve the function to provide security for the stock settlement process goes through. So while an investor thinks that what has happened is they bought a stock on the day that they make a trade, it really takes 2 days for the settlement process to clear. During that time, the brokerage firm, the DTCC, and the brokerage firm on the other side can remain at risk of that stock not actually clearing. And the collateral requirements are in place in order to mitigate the risk that the brokerage to make good on its promises to sell or buy. I didn't see any broad scale failure here. The DTCC's collateral requirement was large, but understandable. And I think things functioned largely correctly.
My time has expired. I thank you all for your testimony, and I yield back, Madam Chairwoman.
Thank you,
Madam Chairman, point of order. I just like, yeah, Perlmutter, just to remind people to, when they're not speaking, to mute themselves, because there's a lot of feedback when the question is asked and the mic stays open and the people are answering the question. Just remind everybody, mute when you're not speaking, that's all.
Thank you very much. You heard Mr. Perlmutter. I would hope that every member would certainly do that. Mr. Sherman, you're recognized for 5 minutes.
Thank you very much. We've come to expect things on the internet to be free. When you're not paying for it, it's not free. You're the product, someone else is the customer. When you go onto Facebook and it's free, you're the product being sold to the advertiser, and your information is sold to God knows whom. So we now have a system where we're telling investors that it's free to invest to buy and sell stock. There are 2 ways to pay the folks involved in Wall Street for buying and selling stock. One is a commission, and you know what it is. And so we discourage investors a little bit from buying and selling stock because they have to pay a commission and they know they're paying a commission. The other way to do it is to give them a worse execution. Whenever there's a stock being purchased and sold, the market maker, perhaps Citadel, might be willing to sell the stock for $10.05, but will buy it for only $10. The difference is 5 cents. And so the issue is whether Robinhood and other people who are being told you get it for free are really getting it for free. Mr. Griffin, you're a market maker. You pay some brokers for order flow. You don't pay others for order flow. So when you pay for order flow, you're not making as much on the transaction. You have to pay some of that back to the broker. That's hidden for the amount of that is hidden from the customer. The fact that it exists has perhaps recently been disclosed. SEC rules require that people get the best execution, but I've recently learned that there's best execution and enhanced pricing. So if you get an order from Fidelity and you get an order from Robinhood and you're paying for the Robinhood order flow, is the Robinhood customer getting as good a price as the Fidelity customer? Mr. Griffin.
So Congressman, I believe that's an excellent question. The execution quality that we can provide as measured in terms of price improvement is heavily related or correlated to the size of the order that we receive. So if I were to speculate,
don't tell me that that there are other factors involved and take us down another road. I'm asking you a clear question. Assuming same size of order, one comes in from Robinhood, one comes in from Fidelity. Is it not true that one is going to get a enhanced best execution, and the other one is just going to get best execution?
So as I was trying to explain, because the Robinhood order comes from a community of traders who tend to trade in smaller size.
That isn't my question, sir. You're evading my question by making up other questions. Let me repeat. 2 identical orders come in. Same stock, same quantity. One's from Robinhood, one's from Fidelity. What happens?
The quality of the execution varies by the channel of the order. This is a commonly understood phenomena in economics that channels matter. So for example, when you go get a mortgage from JP Morgan to their clientele has a different rate of interest than a mortgage.
Okay, reclaiming my time, sir. Who gets the better deal? The one that comes from a broker who is being paid for order flow, and one not. Can you testify that on balance, there is no difference, assuming the same size of the order?
So as I said earlier, size of the order is only one factor.
You are doing a great job of wasting my time. If you're going to filibuster, you should run for the Senate. Everyone else I've talked to in this industry says when you pay for order flow, you get when your broker is being paid for order flow, you get a worse execution. Otherwise, you're in a peculiar circumstance where you're making more money on a Fidelity transaction than a Robinhood transaction, which would be an absurd business practice.
The gentleman's time has expired. Mr. Lucas, you're recognized for 5 minutes.
Thank you, Madam Chairman, for holding this hearing, and thank you to the witnesses for agreeing to testify. It's been reported that approximately 20% of market volume is now attributable to retail customers, which I think is just fascinating considering that's up from 10% in 2019. And that's an overwhelmingly positive development, allowing for more market liquidity, more stability, additional avenues for households to grow their wealth. And it's important to increase market access for retail customers. And I don't want to disrupt that if we possibly can. So I'd like to turn with my first question to Mr. Teniff. Let's talk about the attention that this pay for order flow has received. You explained in your testimony, Robinhood's relationship with market makers is important for Robinhood's ability to offer commission-free trading. So expand, if you would, on how that process benefits the everyday investor. And just expand in general on that, if you would.
Congressman, I'd be happy to. Thanks for giving me an opportunity. So as I mentioned in my written testimony, payment for order flow enables commission-free trading. Prior to Robinhood changing the industry standard model to be commission-free, most brokers collected a commission on top of the payment for order flow on every transaction. Now, Robinhood routes to market makers, including Citadel Execution Services. We've got 7 in total across equities and options. And we route without consideration for payment for order flow. All payment for order flow arrangements are uniform across the market makers. And our system routes orders based on who provides the best execution quality for our customers. So the reason Citadel gets a relatively high percentage of our customer order flow is because they provide superior execution quality for our customers. And that's first and foremost the most important consideration that we look for. How are our customers getting the best execution quality? If another market maker were to improve upon the execution quality that Citadel Execution Services provides on any subset of orders, our system is set up to automatically route more traffic to that market maker.
Continuing down this line, because clearly this is one of the things that my colleagues and the public has a very strong interest in. And having lived through Dodd-Frank before, I see where sometimes major things can occur. I want to turn to Mr. Griffin. Now, could you also elaborate on how payment for order flow provides, whether it's the best price to the retail investor from the market maker perspective? Could you expand on that?
Congressman,
As you outlined in.
Absolutely, Congressman. So as the CEO of Robinhood just set forth clearly, the orders that are allocated amongst the market makers today are allocated principally on the basis of price improvement. We have fought for 15 years to make that the basis by how which orders are allocated, because we strongly believe that Citadel is able to provide a better execution for retail orders in the long run. We make a huge investment in our team and our technology to do so. How is it that we are able to provide better execution quality than exchanges? Because exchanges are limited in their ability to do business by regulatory mandate. Exchanges by law have a minimum 1 cent wide market, which for low price securities means that they are less competitive than they otherwise could be. We're able to
No, are you here and what are you doing?
Excuse me?
That wasn't either one of us. Continue, Mr. Griffin.
All right. So we're able to share our trading acumen with retail investors, and we're able to give them a better price, and we're able to make payments for order flow to firms like Robinhood that allow them to have lower, or today in most cases, no commission. And of particular note, we're able to help Robinhood and other brokers pay exchange fees to the exchanges at the time of execution. This has been very important to the democratization of finance. It has allowed the American retail investor to have the lowest execution cost they've ever had in the history of the U.S. financial market.
Kind of in the Dodd-Frank process that the chairman and I went through a decade ago plus, there was much discussion about margin requirements. Give us just a discussion for an instant about when you discovered you had a $3 billion additional margin call.
So, thank you, Congressman. I believe the full play-by-play of that situation was described in detail in my written testimony. Just to clarify, though, this decision had nothing to do with margin.
Expired, unfortunately. Thank you, Madam Chair. I yield back.
Has expired. Mr. Meeks, you're recognized for 5 minutes.
Thank you, Madam Chair, for this hearing, and Mr. Ranking Member. Let me ask a question to Mr. Tanev. I've been burnt once or twice in the market, and but particularly since I've been a member of Congress, one of the things that I recall greatly was the financial crises in 2008. And it is, we thought that opening the market up where people had adjustable rate mortgages, et cetera, they were able to get into the market, people who may not have been before, but a lot of disclosure had not happened. So they didn't look, nor was there was no documents to look at what their incomes were or anything of that nature. So when those adjustable rates happened, many individuals lost their homes. Many people who bought those mortgages or who initially agreed to those mortgages sold them immediately because they did know that the people would not be able to afford them and they would default shortly thereafter. Now, so I understand your model of trying to get more people, more democratization, but that means that there's now greater responsibility of ensuring that your customers have all of the information they need to assess riskier trades. Now, for me, the information that has to be digestible and accessible. Now, one of the problems I have, for example, you're allowing up to $1,000 to buy stocks on margin, and borrowing on margin is risky. So how do you disclose this? How do you make determination of individuals who are not the sophisticated investors and allowing them to buy these risky stocks that are on margin?
Thank you, Congressman, for the opportunity to address that. Let me set the stage a little bit by saying that about 2% of our customers borrow on margin. About 13% on a monthly basis perform an options transaction, and a much smaller number, around 3%, perform a multi-leg options transaction. So the vast majority of our customers are engaging in buy and hold activities and long-term investing on our platform. Now, to clarify your point on the $1,000 margin, that's actually something that we refer to as Robinhood Instant, and it's provided as a courtesy. When a customer initiates a deposit, we allow them access to up to $1,000 of that deposit immediately, similar to how if you deposit a check at a bank, as a courtesy, they might provide access to those funds or a portion of them before that check clears. As for margin specifically, borrowing money on margin, the rules are very ironclad industry-wide. Obviously, Robinhood Securities conforms to all of the applicable rules. And Robinhood's product is in many ways more restrictive than that of our competitors because in order to even qualify for borrowing on margin, you have to be a Robinhood Gold customer, which involves paying $5 a month for the service.
So I think that you have, you say that everything is restrictive, but when you are going after the less sophisticated investor, it's more than that. There's a greater responsibility that you have because they have, they could lose. And when they lose, it could make a determination of whether or not they can pay their mortgage or their rent or not. And they can be taken advantage of. Oftentimes we find in the financial industry, it is those that have the least that are really taken advantage of. So the big guys, it becomes a reverse Robin Hood situation, which really concerns me. Let me get to this real quick because I was just something else that you said in regards to liquidity. And you said that you didn't borrow the money because you needed it at the time. But that then you later in a question you asked, what did I do? That you raised the additional money because I want to know how you spent the money for future situations, which means to me that you did have a liquidity problem or you anticipated possibly having a liquidity problem or would have one in future transactions. What's the deal there?
I appreciate that question. I stand by what I said. Robinhood was able to meet our deposit requirements. We were in compliance with firm net capital obligations throughout the period. And that additional capital, the $3.4 billion, wasn't to service our requirements. It was entirely to prepare for a future, even greater black swan event and to unrestrict and remove restrictions on the trading and buying of these securities.
The gentleman's time has expired. Mr. Huizenga, you're next with 5 minutes.
Thank you, Madam Chair. And this would have been a little nicer 10 minutes ago when I was supposed to go, but I'm going to go back to Mr. Griffin and the chair of the Capital Markets Subcommittee. Ranking member, I think, was filibustering himself. And I just wanted to make sure, Mr. Griffin, you had that opportunity to feel comfortable with the explanation of that best execution and what was attempted apparently to try to be asked.
Congressman, I hope so. I think it's important to emphasize that we have vigorously advocated for execution quality to be one of the dominant decision-making factors in the routing of order flow in the United States. This has saved retail investors billions of dollars over the year, in contrast to the executions that they would receive through other execution strategies.
Okay.
With respect to payment for order flow, we simply play by the rules of the road. Payment for order flow has been expressly approved by the SEC. It is a customary practice within the industry. If they choose to change the rules of the road, we need to drive on the left side versus the right side. That's fine with us. I do believe that payment for order flow has been an important source of innovation in the industry. As the CEO Robinhood has testified, they drove the industry towards $0 commissions. This has been a big win for American investors.
We get to Ms. Sculp from Cato Institute. And I know that there was Greenwich Associates had a study and others are out there. Do you concur that this has been good for consumers in the most part?
I think that there's still ongoing studies, but I do think that payment for order flow and the price improvements have largely been good for improvements for customers. And I agree with Mr. Griffin that this has helped drive innovation in the industry. I think disclosure can always be better, and I think people should understand that their broker still needs to make money even if they're providing a zero commission trading service.
Yeah, okay. All right, I've got about 3 minutes left. I was going to start actually with this and ask each one of you why you thought you were here today. But I'm going to dispense with that because it's going to take too much time, and I'll provide the answer. Political theater for the most part. That's what this hearing is today. I mean, we're on the business channels right now and on C-SPAN. I think if you see a few of my colleagues playing to the cameras, but we need to have some of these fundamental and important questions answered at the end of the day. And one of the assertions that you've heard already today is that investing is, quote, casino gambling. It's using monopoly funny money. You know, I guess I want to know, is individual retail participation in the marketplace gambling, casino gambling, or using funny money? Mr. Gill, why don't we just start with you? Very quickly. I don't hear him. Mr. Huffman, let's move to you.
No, I believe that investing is investing.
Okay. Mr. Griffin?
I believe the vast majority of retail participation are people saving to meet their dreams.
All right. Mr. Tanev?
Congressman, thank you. As I mentioned in my opening statement, Robinhood customers have essentially made over $35 billion in unrealized and realized gains on all of their assets.
It's been a thing for them, correct?
Absolutely, it's investing and it's building wealth.
Go back to Mr. Gill.
Yes, of course. I do. I believe it's an opportunity for investors to participate in the market just as institutionals participate.
Okay, so actually the business channels had a good question from one of the Reddit readers, which is, so you recommended GameStop before. Would you buy their stock now at roughly 45? It started at 48 earlier today. You were talking about buying it and being happy when it hit cross 20. So are you buying that stock today?
Well, let me just say that investing can be risky, and my particular approach to investing is rather aggressive and may not be suitable for anyone else. But for me personally, yes.
So yes or no, are you buying the stock? And
for me personally, yes, I do find it's an attractive investment at this price point.
Quick question. Did you invest in GameStop because you were not aware of the payment for order flow. That's one of the accusations. People bought into this because they don't know that.
Sorry, could you repeat that question?
Did you buy GameStop because you were not aware of the payment for order flow?
My investment in GameStop was based on the fundamentals.
Okay, I think that answers it. I believe my time has expired.
Ms. Velasquez, you're recognized for 5 minutes.
Thank you, Chairwoman. Mr. Tenet, Robinhood seems to have perfected the gamification of trading, providing the user with the perception that investing through the Robinhood app offers recreational gain, playing with little or no downside risk. Of course, many of us understand that investing is not a game and carries significant risk. How does Robinhood balance disclosures around the potential downside risk of investing, including the risk of substantial loss, and the more enticing claims of profitability and the ease of trading?
Congresswoman, I appreciate that question. Giving people what they want in a responsible way is what Robinhood is about. We don't consider that gamification. We know that investing is serious, and we're investing in all of the educational tools and customer support to help people on their investing journey. What we see is most of our customers are buy and hold. A very small percentage are trading options, about 13%, and less than 3% borrow on margin. So most people use Robinhood to build up portfolios over time.
But can you answer my question? How do you balance disclosures around the potential downside risk of?
So we make lots of disclosures, Congresswoman. We're also a self-directed brokerage. So that means we don't provide advice and we don't make recommendations for what customers should or should not invest in.
So you don't think that as a result of the emphasizing profitability and ease of trading over the risk of loss, that many amateur investors were unaware of the situation they currently find themselves in?
Well, I want to mention again, as in my opening statement, Robinhood customers have earned more than $35 billion in unrealized and realized gains on top of what they've deposited. So I think this shows us that the product is working for customers and our mission is working.
Okay, thank you. Mr. Plotkin, over the course of my time in Congress, I have been concerned and spoken out about the dangers of short selling. While I understand that short selling can be used for legitimate purposes, too often I have seen abuse, and it ends up harming ordinary workers and families. I first saw it against the people of Puerto Rico, and now we are seeing it here against GameStop. Large investors, including hedge funds like yours, have to disclose their long positions when they own 5% or more of the company's shares, but not such disclosure is required for short positions. As we consider reforms, is this type of disclosure for short positions something you will support? Mr. Plotkin?
Yeah, Congresswoman, thank you very much for the question. I think it's a really good question. Whatever regulation is put forth in the marketplace, we will obviously, operate within those rules. It's certainly something I'd be happy to follow up with.
But what about my question about short selling?
Yeah, I think it's a really good question. You know, it's not really for me to decide, but if those are the rules, I'll certainly abide by them.
Okay, well, I'm glad to hear that answer. Mr. Gill, public reports credit you with helping to start the GameStop craze by encouraging other amateur investors to bet against the short positions that Mr. Plotkin and others took. But the stock has now fallen from its high, and many amateur investors have lost hundreds of thousands of dollars. It is my understanding that you are a registered broker. Is that correct?
The gentleman's time has expired.
Okay. Thank you. I yield back.
Thank you, and I appreciate all of the members who are participating today. This is not political theater at all. This is serious oversight responsibility, and members are reminded not to impugn the motive of other members. Thank you, Mr. Lukemeyer. You're recognized for 5 minutes.
Thank you, Madam Chair. And my first question will go to Mr. Gill. Mr. Gill, you know, I guess the question is, you're a very serious investor, somebody who does his homework, invests in the market, your own personal funds. And so I guess the question would be, here today, we're discussing the actions around Robinhood, all the transactions that took place. And I guess, do you think we need more legislation as a result of what happened here, or did the system actually work? And let me just make a couple comments on that part. From the standpoint that, did it work? Was it self-correcting? Did the fact that somebody like yourself was able to invest and maybe take advantage of the over-shorting positions by the hedge fund guys who were trying to really drive down the price of the stock for other reasons, whatever? Or did it point out perhaps that we had some companies, perhaps like Robinhood, I would argue that was undercapitalized or under-reserved? Or maybe there was over-aggressive other types of investing that was taking place. The algorithms that were there, the different business models, they didn't work because you outsmarted the system, so to speak. Would you like to comment on that, on that sort of questions and how I formatted that?
Thank you for the question, Congressman. I would say my expertise is in analyzing the business, the fundamentals of the business, not so much on the inner workings of the market. I'm not so sure about legislation per se. What I would say is that increased transparency could help. That if someone like me could have a better understanding of how those types of things work, I feel as though it would be quite beneficial to retail investors.
Thank you for that. I know that Mr. Tevin, you know, Robinhood has an interesting name. As I recall, the old story is take from the rich, give to the poor. And I assume what you're doing is allowing the poor to compete with the rich, which is interesting. You made the comment in your testimony, Mr. Tevin, about settling this in real time. We have the electronic ability to do this. I think that would probably help the situation that occurred here. But what other problems occur when you do this in real time? What other things would we have to look at? What other unintended consequences would there be if you did something like that?
Thank you, Congressman, for the question. I believe that right now, certain market participants rely on next day settlement to be able to take advantage of intraday netting and run up larger one-sided positions in certain stocks with the knowledge that they can close those positions or reduce them by the time settlement happens. And I understand that would be a limitation to the trading activities of some of these institutions. So that's certainly one area to consider. The other is around securities lending. We'd have to make changes to how securities lending works. I don't think any of these are insurmountable challenges, and I'd be happy, as I mentioned earlier, to deploy our intellectual capital and our team's engineering resources to help solve these problems very quickly.
Thank you for that. Mr. Plotkin and Mr. Griffin, the question is for both of you here. Whenever you're short selling, I understand that GameStop stock was short sold 140%. And Mr. Plotkin, you made the comment in your testimony a minute ago that you were not trying to manipulate stock. Yet if you're short selling a stock 140%, for me, on the outside looking in, it looks like that's exactly what you're doing. Explain to me why that's not manipulating the stock.
Thank you, Congressman. For us, I can't speak to other people that were shorted. Anytime we short a stock, we locate a borrow. Our systems actually force us to find a borrower. So we always, short stocks within the context of all the rules.
Mr. Griffin, would you like to comment on that? You guys are both market makers and brokers and hedge fund guys. I mean, you do all of it. Why is this not considered manipulating a stock whenever you can short sell at 140%? Don't you think there should be a limit on something like that?
So I believe that the short interest in GameStop was exceptional, and I'm not sure it's worth us delving into legislative corrections for a very unique situation in terms of the extreme size of the short interest. I will say that all of the large market participants, in fact, every bank, every hedge fund does have to comply with the requirement to borrow shares to short shares in the course of their day in and day out business. The practice of naked shorting was largely curtailed by SEC mandate years ago.
The gentleman's time has expired. Mr. Scott, you're recognized for 5 minutes.
Thank you, Chair Lady Waters. And let me just say, Chair Lady, that the people of this country appreciate you for pulling this financial services hearing together, because this is a threat to the future of our financial system, and we got to get to the bottom of it. Let me start with you, Mr. Tenney. Let's go through this. The sequence of events that led to the extreme rise in value of GameStop stock and the subsequent market volatility originated through a Reddit discussion. And then that was fueled through social media. And as the story gained traction, tweets by well-known figures with the influence to move markets sent the stock value even higher and higher. So let me start with you, Mr. Tenney. What policies does Robinhood have in place to monitor what happened on social media and how it drives the use of your trading platforms?
Thank you for the question, Congressman. Currently, Robinhood does not perform any sort of moderation of social media. We simply don't have the data that the social media platforms have at their disposal to tie these posts to identities. We do, however, within Robinhood Securities, conform to all regulatory requirements around monitoring and trade surveillance and all things of that nature.
Well, Mr. Kennedy, don't you see something is going terribly wrong here? What do you do to monitor the trades in individual stocks, particularly when, in the case of GameStop, they are singled out and moved on social media? What do you do?
I appreciate the question. So our priority throughout the exceptional market conditions in January and early February was to maintain the uptime and performance of our platform and make sure that we're available to customers.
Let me try to get to a point here. Do you, Robinhood, do you have any policies in place to ensure that investors are making trades based on legitimate material, financial information, and not the influence of social media, the design of trading platforms, or any other superfluous information? Do you have anything, any guard to that?
Absolutely. Congressman, we provide educational resources to our customers, including our redesigned Robinhood Learn portal, which is not just available to Robinhood customers, but to the general public, and had over 3.2 million people visiting in 2020.
But do we not, I mean, you're at the center of this. Don't you see and agree that something very wrong happened here and that you're at the center of it. And we are looking on this committee of how we can protect our wonderful, precious financial system. We need it from you. What about you, Mr. Hoffman? Do you have anything? What steps is your company taking to guard against this? Anything at all?
Congressman, we spend a lot of time at Reddit ensuring the authenticity of our platform. So we've got a large team dedicated to this exact task. Everything on Reddit, all of the content is created by users, voted on by users, and ranked by users. And we make sure that that is authentic and as unmanipulated as possible. And in this specific case, we did not see any signs of manipulation.
Madam Chairman, lady, I just want to conclude. I got maybe 10 seconds left, but this episode exposes a serious threat to our financial system when tweets, social media posts do more to move the market than material, legitimate information. The risk is enormous.
Thank you very much. Mr. Stivers, you now have 5 minutes.
Thank you, Madam Chair. I appreciate you calling this hearing. The American financial markets, I believe, are the envy of the world, but they're still imperfect. I would have liked to seen this committee have a meaningful discussion about capital requirements and the T+2 clearing rules that may have contributed to some of Robinhood's customers not being able to purchase stock, including GameStop, for a period of time. But because the majority didn't include the SEC, the Depository Trust Clearing Corporation, or the National Securities Clearing Corporation to testify, we're left with what we have. That's because I believe the majority is attempting to use this hearing to drive a narrative about the U.S. capital markets being rigged. But I do have several questions. Mr. Tanev, you decided to stop allowing your users to buy GameStop and other stocks as a result of capital requirements on Robinhood securities. Is that correct?
That's correct, yes. Deposit requirements with our clearing houses.
And you know, those got resolved, but for a period of time, some of your users could only sell and not buy, and that could have contributed to the stock actually going, you know, not going up as fast because some of your users were prohibited from buying. Do you think that is possible that could have happened?
I shouldn't speculate on what could have happened if
there's more sellers than buyers, does the stock price go down or up?
Well, to be clear, Robinhood, Congressman, is a minority of trading activity in these securities.
I understand, but if your buyers can only sell and not buy, then it clearly keeps you from putting upward pressure on the stock price. Is that correct?
On Thursday, customers on our platform could only sell, so there was no ability to buy. That's correct.
Great. So, you know, I know, and you said earlier, by the way, I know some people have attacked your arbitration agreements, but I want you to be clear. If your users were harmed as a result of these actions, they can recover through arbitration. Is that correct? Yes or no?
Yes, that's correct. And our arbitration is FINRA supervised and overseen. And we do believe arbitration gives customers a fair and speedier resolution to their claims.
Thank you. Does your user agreement and your arbitration allow for group arbitration or only individual arbitration?
Let me get back to you on that.
If a group was treated similarly and similarly affected or lost upside or lost money, can they do it as a group, or is it only individual in your arbitration agreement?
Well, Congressman, I'm sure you're familiar of the number of class action lawsuits filed against Robinhood.
And I'm not asking about a class action lawsuit. I'm asking, in your arbitration system, can a group of people come together, or is it individual? And this is not a trick question. I'm not a fan of trial lawyers. I'm just trying to understand.
Yeah, I appreciate the question, Congressman. I think the best thing I can do is get back to you after
Okay.
making sure that
Great.
we get you the right answer.
Thank you. That'd be helpful. Mr. Plotkin, are you a frequent short seller? Yes or no?
We run a long short portfolio. The majority of our investments are long investments, but we also have short investments to hedge out market risk.
Thank you, Mr. Plotkin. Has Melvin Capital ever engaged in short selling of the stock Tesla?
We have been short Tesla in the past. That's correct.
Mr. Plotkin, also, this is a longer question. Did you see the tweet from Tesla CEO Elon Musk about GameStop stock?
I did see that after market hours on, yes, on a Tuesday.
Do you believe that Mr. Musk's tweet had any significant effect of driving the rise in GameStop stock?
I don't want to speculate on what the actions of his tweet were. The stock did rise
Let me
after
ask you
hours.
this, then, do you believe that that tweet was targeting you because you had shorted Tesla stock in the past?
We had a very small short position years ago in Tesla. That would be pure speculation as to his motives of putting that tweet out.
Okay, thank you. I'll go back to Mr. Tanev on the regulatory requirements. Do you believe that the SEC and the Depository Trust Clearing Corporation should modify any of their rules as a result of what happened to your users because of capital requirements?
I do believe.
The gentleman's time has expired, and the SEC is not here today because they're in transition with a temporary chair, awaiting the confirmation of the person who's been appointed by the President of the United States. This is a serious hearing. Members are reminded not to impugn the motives of others. Thank you, Mr. Green. You're recognized for 5 minutes.
Thank you, Madam Chair. Ms. Schultz, there is a reason for penalizing a market maker for improperly trading its own accounts ahead of its clients' accounts. Note that I said improperly trading. I don't want to go through the scenario of there being a time for proper trading ahead of accounts. I'd like for you to tell us what that reason is, please.
What trading ahead of customer accounts is illegal, and it does not.
I understand that it's illegal. Yeah. I don't mean to be rude, crude, and unrefined, but I have to ask this question quickly. What can happen that can benefit the market maker? How can that be monetized such that the market maker profits greatly from doing it?
Right. If a market maker trades improperly ahead of the own customer accounts, he can get a better price and can move the market in the process depending on how big the trade is, thus hurting the customer.
Yes, and if this trade is huge and you can see that this trade that the client has is huge and will have an impact on the market, how does that benefit the market maker to trade ahead of the client?
The market maker can get a better price for himself before the price changes by the client's trade. He can also engage in self-dealing that way as well.
Yeah. So does it benefit a huge market maker to have a great deal with, let's say, a Robinhood because of the flow that will be coming through that the market maker can take advantage of?
I don't think that they're necessarily congruent situations. When you're trading ahead of a customer order, which is something that is illegal and that the SEC does monitor for, it's very different from having knowledge as to the way that the market might be moving based on.
I understand, but I want to talk about the circumstance where it's improper, not where it's proper. Remember, we started with improper trading. Here's my point. Let me go to it quickly. The market maker Citadel traded over-the-counter stocks for its own accounts in 2012, from 2012 to 2014, while simultaneously delaying client orders for the same shares. And it was fine for this. Citadel has been naughty for some time. 2014, Citadel faced $800,000 in penalties. 2017, 22.6 million. 2018, 3.5 million. 2020, 97 million. And another 2020 of 700,000. This seems like a lot of money. It is for me, more than $124 million. But over the same period of time, Citadel had revenues generated in the amount of $13.2 billion. It seems to me that the punishment for these improper trades and improper actions, because it wasn't just trading, Citadel also did some other things that were not proper. They misled clients. Seems that the punishment is so small given the amount of revenue generated over the same period of time. It seems that Citadel has at least an opportunity to build into its cost of doing business paying penalties. And that concerns me. It concerns me that the punishment doesn't seem to deter Citadel. It concerns me because I know of circumstances where in persons who are not in the market, they do things that are much less harmful, and they can possibly go to jail. So the question that I have is this: what kinds of systems do we have in place? And it's back to you again, ma'am, to prevent the very things that I have called to the attention of my colleagues.
Well, as a former enforcement attorney at FINRA, I can say that regulators have the same concern with fines and other punishments becoming just a cost of doing business. And it's one of the things that are considered along with the regulations around what can be punished.
The gentleman's time
May I, for the record,
has expired. Mr. Green, as you know, we're going to have a series of hearings, and our next panel will include a whole bevy of experts also on some of these issues. With that, Mr. Barr, you're ready.
May I play something in the record, please? I have additional questions.
Without objection, you may enter into the record. Thank you.
Thank you.
Mr. Barr, you're recognized for 5 minutes.
Thank you, Madam Chair. And Mr. Griffin, I want to revisit this issue of payment for order flow. Payment for order flow has been around for decades, correct?
So I know it's been around for at least 1 or 2 decades. I can't answer before that period of time.
And it's a recognized and approved practice by the SEC, correct?
Yes, it is.
And payment for order flow is set by the brokerage firm, not the wholesaler, right?
It is ultimately a negotiated number, but it is a number that is set by the brokerage firm and not by us as the market maker.
Well, as a market maker that provides execution services to retail brokers, you are required to meet best execution requirements. Is that correct?
Yes, it is.
And in other words, market makers are required to provide the same or better pricing than the exchanges, correct?
That is correct.
And how can market makers offer that better pricing to Mr. Sherman's line of questions?
So there are a number of drivers that permit us to offer better pricing than what is available on exchange. The first is that exchanges have legally mandated minimum tick sizes of a penny. So if you look at a stock like AMC, it trades $5 bid, 501 offered. If the exchange could trade with a half-cent increment, it would probably trade $5.005 bid, 501 offered, or vice versa. But the exchanges are limited to a 1 cent minimum tick size. And we have been clear on the record in prior testimony that exchanges should be permitted to have a smaller and more competitive tick size. That's fact number one.
Okay.
Fact number two is that the average retail order is much smaller in totality than the average order that goes onto an exchange. Because this order is smaller, and I'll share a number with you, the typical Robinhood order is ballpark about $2,000 in size. Because it's a small order, the amount of risk that we need to assume in managing that order is relatively small as compared to an order that we have to manage from our on-exchange trading. And as I'm sure you're well aware, we are the largest trader of stocks on exchanges in the United States. So
let me move to Mr. Tenev really quickly on that point. What impact might greater restrictions on the payment for order flow model have on your ability to offer zero commission trades?
We do believe, Congressman, that that's an important question, and payment for order flow helps cover the costs of running our business and offer commission-free trading to customers. When we started, people didn't even think that there was enough margin left to make this business work, but we've been fortunate to make it work and to make it work for our customers.
Well, let's talk about why Robinhood restricted trades. I think your explanation about margin requirements charged by your clearinghouse makes sense. Is your clearinghouse supervised by the Fed and the SEC?
I believe that's
are the margin requirements charged by your clearinghouse in turn approved by federal regulators?
Yes.
And did federal regulators approve the value risk charge that was imposed on Robinhood?
I believe, Congressman, the value at risk charge is outlined in general terms in Dodd-Frank, but I'm not sure who approved the specific implementation of that formula.
So if anyone has a problem with your decision to halt trades, it's fair to say that their frustration should be directed toward federal regulation.
Congressman, I'm not trying to throw anyone under the bus and direct frustration anywhere. All I can say is Robinhood Securities played this by the books and played it basically the only way that we could remain in compliance with our deposit requirements.
Mr. Plotkin, appreciate your testimony that Melvin always follows laws governing shorting stock, but Melvin lost $6 billion in 20 trading days. Let me ask you about your risk management. Did your short positions exceed float?
No, they did not.
Well, shorting has an important role to play in our markets, allowing for legitimate hedging and price discovery. But we are interested in naked shorting, and so we would hope that you would clarify that and how it is that you make sure that you're first locating the borrow.
Time has expired. Mr. Cleaver, you're recognized for 5 minutes.
Thank you, Madam Chair. And I too would like to thank you for this hearing. It's a question that a lot of people are asking, probably many of us as we go throughout our districts. But let me start with you, Mr. Tanev. I'm just curious if you can give it to me in a short period of time. How did you come up with your name for your company?
Absolutely. Thank you for that question, Congressman. Robinhood stands for lowering the barrier to entry and democratizing finance for all. So the idea is the same tools that institutions and wealthier high net worth individuals have had for a long time should be available to the people regardless of their net worth or how much money they have.
Okay, I appreciate that answer. Because it's something I would also embrace. However, I have a 23-year-old on the other side of the house who I love dearly, but he has no training, no income, no qualifications. How in the world could he get like $1 million worth of leverage?
Thank you, Congressman. So the leverage that we provide to our customers, which less than 3% of our customers actively use, is regulated strictly by requirements. So the only way to get that amount of leverage in a margin account through borrowing is to deposit a similarly sized amount of capital.
Or by mistake.
Congressman, I'm not sure what you're referring to.
Well, I mean, there's a record of a young man getting $1 million worth of leverage. He was only 20 years old. So I'm just saying, if that's not a policy, that was an error.
Congressman, I appreciate the opportunity to address that really important point. You're referring to Mr. Kearns.
I am.
The man who unfortunately passed last year.
Yes.
First of all, I'm sorry to the family of Mr. Kearns for your loss. The passing of Mr. Kearns was deeply troubling to me and to the entire company, and we have vowed to take a series of steps, very aggressive steps, to make our options product safer for our customers, including changing the customer interface, adding more additional options education, as well as strengthening and tightening the requirements for people getting options, and adding a live customer support line for acute options cases. So it was a tragedy, and we went into immediate action to make sure that we made not just the most accessible options trading product for our customers, but the safest as well.
Okay, I asked that question. In my real life, I'm a United Methodist pastor, and so I've read your statement. After the tragedy of this young 20-year-old, but I mean, and I don't think you nor I want to get in. I mean, to litigate that right here today. But what improvements did you make in the aftermath to your platform, or were there improvements?
Thank you, Congressman. There were several improvements. One, we added the ability to instant exercise as well as exercise options positions in app. We clarified the display of buying power, specifically negative buying power, in situations where one leg of a complex multi-leg options transaction were to be assigned. We also added an options education specialist. We also added live phone-based customer support for acute options cases, which has gotten very, very great feedback from customers and is something we're expanding to other use cases, such as cases where customers' accounts have had off-platform hacking incidents.
Okay, that's the last one is where I was concentrating on, because this young man was trying to get into your system to find out what was going on. He was confused. He was scared, and so he sent emails. And so to be fair, there was a response, but it was like hours later. And so as I became more and more familiar with this particular case.
The gentleman's time has expired.
Thank you, Madam. Thank you, Madam Chair. Appreciate it.
You're so welcome. Mr. Hill, you're recognized for 5 minutes.
Well, thank you, Madam Chair, for holding this hearing, and I want to thank our witnesses for their expertise and their patience. Madam Chair, I have a letter from the American Securities Association I'd like to insert in the record, please.
Without objection, such is the order.
Thank you very much. And Mr. Tenev, what a treat to see you, and congratulations on being part of the American dream. I had the pleasure working for President Bush 41, of working in Sofia in 1990 and 1991 to try to bring capitalism to Bulgaria after the wall fell. So I'm glad to see you're an American citizen and innovating here in our country.
Thank you.
I think you've done a good job talking about the I'd say the acknowledged lesson that you've learned in terms of these deposits for clearing and the important risk management issue for your firm. So I'd like to turn to follow up on some of the discussions about retail service that you've also touched on today. Do you have a call center generally for Robinhood investors?
Thank you for that question, Congressman. And I want to start by saying customer service is fundamental to everything that we do, and it's one of the areas where we're investing the most. We have customer service centers in a number of states, Colorado, Florida, Texas, and Arizona, and we're looking to expand aggressively.
Well, do you have a call center that I can call, a 1-800 number if I'm having a trouble in the middle of the trading day?
We do offer, Congressman, live phone support in-app for certain use cases. We're expanding that as fast as we can.
Yeah.
So as I mentioned earlier, options, advanced options cases, as well as account takeovers, which typically happen through a customer's personal email who's been compromised. And the feedback's been great, and we're looking to expand the live phone channel, as well as make improvements to our email channel and even upstream within the product.
Thank you. Thank you. That's helpful. And on the subject of margin and options, you've talked about that today. But I've spent 40 years in this business and been the general securities principal in 3 different firms. And this issue of granting margin and option approval to retail clients is always an important issue. You've addressed that today, so I want to turn to a different topic that has not been raised, and that's low dollar stocks. As I understand it, your policy and procedure manual simply said that you allow low dollar stocks if they're on an exchange, but many brokerage firms are very reticent to allow retail investors to invest in stocks that are under $5. Could you address that issue today?
Yes, I'd be happy to, Congressman. So Robinhood allows customers to trade in and invest in exchange-listed securities. So that's the objective criteria that we use. And it actually excludes several types of securities that customers commonly request to trade in. So on Robinhood, you can't trade over-the-counter bulletin boards, except in limited cases where a listed stock falls to over-the-counter. You can't trade pink sheets. And of course, you can't short sell or enter undefined risk options trades.
Okay.
So our objective criteria involve whether exchanges list these securities.
Thank you. And I think that probably, I'm sure you'll reevaluate that after these effects. Let me turn to Ms. Schulp. Thank you for being here. The Wall Street Bets Reddit platform. I'm curious, when you think about the obligation of this SEC pending investigation, based on your FINRA background, do you think the SEC should look at the bulletin board participants under Section 9A2 on potentially inducing trading in a certain direction? Is that worthy of their review?
Thank you for the question, Congressman. I think that there's been little evidence to this time that there's been any sort of false or deceptive conduct taking place on the Wall Street Bets Forum. That does not mean, though, that I think that the SEC should not take a deeper look. Because of the anonymity in the forum, there could have been people that were engaging in deceptive behavior that's not readily apparent to outside and to the public. So I do think the SEC should look, but to this point, I've seen very little that would meet a test for manipulation, which generally involves false or deceptive behavior.
Thank you. I appreciate that. Mr. Tev, I thought of another question for you. Would a securities transaction tax be beneficial to retail investors in the United States?
Thank you, Congressman. I don't believe it would.
Thank you.
Gentleman's time has expired.
Thank you, Madam Chair. You're back.
Witnesses, we will take a short recess. The committee stands in recess for 5 minutes. Thank you.
This is crazy. So
that was over 2 hours though. That's crazy.
The dude who just spoke, right? That was French Hill. I'm like getting an echo right now, so I gotta like pause this. But he received $249,300 from big banks. And number 4 on the list of House members who received money was Andy Barr, who spoke earlier. He got 248,000. And guess who's number one on the list? It's Patrick McHenry, isn't he like the co-chair? He got 321,939 cents. Number one member of House receiving money from commercial banks. Ridiculous. Crooks.
You guys want to hear? You guys want to take a shot every time Vlad says thank you for that question?
Right.
I just saw that. I just got off of the last 3.5 hours of meetings. What's going on, everybody?
Ugh, this is frustrating. It's like the one guy said, it's like political theater.
Poor hosts.
Yeah.
Yeah, she was quick to call him out, which is ridiculous. She was like, please don't assume what your counterpart's motives are. But he was right. Like, most of them are just pandering to the camera.
For sure. And that dude, what's his name, who didn't even know what the fuck he was talking about? He just wasted all that time talking about social media. What the fuck? Sorry.
Yeah, but Google where he's from. He's a Georgia representative.
Yes,
and
I Googled
he's
him.
like notorious for being dumb.
But how does Facebook make money?
Facebook makes money with ads, sir. But is it free to your customers?
How do I add money?
It's outrageous. Outrageous.
Let me put on my Roaring Kitty outfit.
Do it. Oh man. Yes, I want to hear more from Roaring Kitty.
I love how they asked him like multiple times if he'd still buy GME or hold it at this price.
Yeah. Damn. Like nobody's really getting into like how stopping it like actually manipulated the price. And also, what's up with that dude from Melbourne? Can't stand him. So like he's like smirking.
And he's from Maine. I cringed when I heard that. Not my state. No.
The yes or no bit, man. I loved it. But I feel like it's just an act. I mean, I don't know if you guys have ever gone to your like town halls or like when they have city council meetings and stuff. And it's like they already have decided what they've decided. They come up there, they'll listen to people talk, they'll let you get it out, and they already have like decided. I don't think that anything's gonna come of this. They'll throw us a bone here and there, and then boom, nothing happens.
It's all show just to show that they tried to do something, even though they're not doing anything.
No, they're protecting the people that are investing in them, the finance sector that's investing in all of these, like a lot of these people that are up there have gotten money from the finance sector. You can just look it up, Google their name, you can go to Open Secrets or wherever you need to just find out how much money they've received. It's really like frustrating. Political theater.
All right, my camera's on for just a brief minute to show the.
Oh my god, Tame, this
Hell
is
yeah.
funny. It's so good.
I like the stock.
Where's your bandana? You need a bandana.
I forgot.
Quickly draw a hang in there kitty picture in the back.
I love this shirt. Oh my god, it's too good. Hey guys, hit that like button. Smash it.
All right, I put the painting in my room now. It's cool.
There you go.
Boom. So I do have a bit of good news. Remember the CEO of Acon Semiconductor? I was contacting him about if they're going to IPO. He responded to my tweet and he goes, the question isn't if, but when. So boom. We're going to keep an eye on Acon Semiconductor. The plan is not to keep it private.
Well, that's an insta-buy for me, I guess.
I mean, it's not for sale yet, but yes. We're just like waiting for the news.
Nice. Did you like that earlier, the questioning about the short interest ratio, and they tried to throw it off like, this is a
oh my God.
one of a time thing.
Shoot. That was Congresswoman like Velasquez, right? It was so good.
So how many people here just watched their first congressional hearing?
No, I watched the
my first-
Facebook one. That was fun.
Yeah, that was funny too.
I remember
yeah.
stuff from back in the 90s. Yeah.
I mean, you
Yeah,
gotta
same
watch.
here.
That stuff happens like all day long, right? They're doing all these
Yeah.
committees and all this stuff and da 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 yada yada yada. And it's like these are like, I mean, we paid attention today for a few hours, but they're doing shit all the time, and it usually don't benefit you that much.
Yep.
That hearing made me appreciate our Discord communications, though. It sounds a lot
Tell
better.
you what, that shit was terrible.
It was pretty funny.
Freaking probably using Zoom, and that shit's Chinese. It's like trusting China to let your entire congressional hearing go. I don't know. Maybe it's not Zoom,
You're
but it looks like
recognized
Zoom.
for
Oh my
5
God.
minutes.
The dude from Oklahoma
Thanks,
was
Madam
like
Chair.
the floor.
Mr. Gill, let's
What did
start with
somebody say?
you
He's
since
using his
you
microwave.
seem to have started all of this.
Oh my gosh, what was that?
You
Someone just like kept
began
doing stuff with their mic
analyzing
on. It's like, what is
GameStop
this? This
in
is
the
real?
summer of
Screen was so
2019. Was that your
blurry.
testimony?
And then people got
Congressman,
told
I've been
off.
following GameStop for a
They
number of
got told off
years.
for not
I started
muting
to buy
themselves.
into it in June of 2019.
Yeah, I know. That was hilarious. I mean,
So back then, what was the price of the stock when you started investing in it?
At the time, it was in the ballpark of around $5 per share.
Okay, and in your analysis, what did you think a proper price for the share was? Because you thought you were getting a good buy.
Sure. At the time, I thought that the value of the business could be worth up to roughly $2 billion.
Okay, but how much is that per share? Just let's bring it back to you bought at 5, you thought it was worth 10, 20?
I felt as though that it could be worth at the time in the range of say $20 to $25 per share.
Okay. And you continued to invest on and off through 2019 and 2020. Is that true?
Yes.
Okay. And you also you bought long, you bought some shares, but you also did some options trading, did you not?
Correct, I did.
And options trading is not really for the novice investor, is it?
It is a riskier investment, yes.
Okay. On January 27th, I think the stock price hit $483 or something like that. Is that true?
I believe it was in that area, yes.
In your analysis, back when you started investing in the stock, did you ever see it being valued at $483 per share?
At the time, I thought it was possible, but a very low probability, I thought.
Okay, thank you. Just a couple more questions. In terms of the platforms where you visited and discussed this stock with others, one was the Reddit subreddit Wall Street Bets platform, correct?
Correct.
And at any given time, how many people were you talking to on that platform?
I wasn't so much talking to anyone individually, but rather making posts on that public forum.
That GameStop was an attractive stock.
Yeah, early on, I had felt that it was an attractive investment opportunity, and I had shared some of my thoughts as to why that was.
Did you discuss this on any other platforms? Are there any other kinds of Reddit or other kinds of platforms that you talked about the stock?
Yes, I have talked about the stock on some other platforms.
Okay. Did you ever talk about the short sellers that had bet against this company?
Yes, the topic did come up.
And about when did that occur?
Oh, since around the time I had begun investing in it, it was, as someone else has noted, it was an exceptional level of short interest in the stock since the time I had started investing in it.
Okay. Let me turn my attention now to you, Mr. Plotkin. When did Melvin first take a short position in GameStop?
Thank you, Congressman. That was in 2014, really right at our inception of the fund.
And when you did that, did you continue to maintain a short position?
That's correct.
So you said you analyzed the value of the stock, and you, by taking a short position, you, unlike Mr. Gill, thought that the stock was overpriced. He thought it was underpriced. You thought it was overpriced.
That's a good conclusion. Yes.
Okay. In your analysis, when you started into the short position, what did you think the stock was worth?
I don't remember exactly at the time. I think when we launched, it was probably a $40 stock. I think we believe the company had a lot of structural challenges. We've seen their earnings go from, I think, north of $3 a share to almost negative $3 a share. So there's been a lot of challenges fundamentally.
All right. Last question for you. Were you in a naked position in your short position because the stock was oversold?
No, our systems won't even allow that. So that would be impossible for us to do.
Okay. Well, thank you. My time's expired. I wanted to get some facts out for Mr. McHenry, and I yield back.
Thank you very much. The gentleman's time has expired. Mr. Emmer?
We thank you.
Nice for 5 minutes.
Thank you, Madam Chair, Ranking Member McHenry, for holding this hearing. Thank you to the witnesses for being here today. I represent the 1st Congressional District of New York, which encompasses much of Suffolk County on Long Island. My home district is full of people from all different walks of life and industries, and having access to cost-efficient investing is crucial. While there are always ways to make a system work better, our capital markets are the envy of the world with their liquidity and diversity of investment opportunities. Innovations in securities trading brought by the private sector have increased access for retail investors. For better or for worse, and this situation is a perfect example. For example, one of our witnesses here, Mr. Gill, or should I say Roaring Kitty, turned $53,000 into almost $50 million, and that's what you would call some deep you-know-what value. Of course, we know that not all those who invested in these stocks share the same success story. However, I want to highlight a potential vulnerability in these innovations. I've been concerned for some time in general with the sharing of U.S. individual user data with the Chinese Communist Party. I sent a letter, for example, to the Treasury Department in October 2019 expressing concern with the potential sharing of user information by TikTok to its parent company ByteDance and asked for a CFIUS review. Chinese companies are required by law to regulate online behavior that deviates from the political goals of the CCP, obey the CCP's censorship directives, and participate in China's espionage. These policies regulate companies like TikTok in the China market and increasingly their overseas business. Webull and Moomoo are two examples of broker-dealers that are subsidiaries of Chinese parent companies. According to Bloomberg, funds affiliated with Xiaomi Corp own at least 14% of Webull. Xiaomi is a Chinese company that risks being delisted from U.S. exchanges after the U.S. Department of Defense put the company on a blacklist on January 14, 2021. Moomoo is owned by Futu Holdings, which is a company that received a significant investment from entities affiliated with Tencent, a company with known ties to the CCP. On December 8, 2020, Bloomberg Businessweek ran an article on Webull stating the company, quote, has increased its roster of brokerage clients by about tenfold this year to more than 2 million by offering free stock trades with a slick online interface. On January 29th, 2020, the day after trading activity for long trades on certain stocks discussed on Reddit threads were limited, Bloomberg ran an article with the headline, Robinhood rival Webull sees 16-fold jump in new trading accounts. It's clear that these apps have rapidly increased their user base, which has me concerned. Ms. Schulp, do you think we should be concerned about the potential for Chinese entities with ties to the CCP receiving personally identifiable information or other user data from their subsidiary broker-dealers that are licensed and registered in the U.S.?
I think it's a potential national security concern, which is a bit outside of my area of expertise. What I can say is that the rules that the brokers have to apply and comply with regarding personally identifiable information and other material data should be applied equally to companies that are based offshore and companies that are based onshore. And I hope that that's the case with respect to Webull or any other competitors that are not domestically owned.
Having a diversity of choice for different trading apps is generally good for market competition. However, is it a good outcome for millions of Americans to flood into trading apps that could be required to share user data to parent companies that have ties to the CCP?
Again, I think choice is key here, as well as understanding from a consumer perspective what companies you are choosing to do business with. Again, the national security concerns are a bit outside of my area of expertise.
Well, I thank you for being here. This is another angle to this issue with these new options that are being provided to average retail investors. And we want these retail investors to have the most amount of information as possible to be set up for success. I yield back.
Thank you very much. Mr. Himes, you are recognized for 5 minutes.
Thank you, Madam Chair, and a big thank you to our panel today for a very interesting conversation. One of the chairwoman's ways of characterizing this hearing was who wins and who loses. And I've spent a bunch of time in the last couple of days looking at the various players here. I'm pretty convinced that the wholesalers, Citadel is one of the winners. They make a lot of money. They're the casino in this story, and the casino tends to win over time. Robinhood has a valuation of $5.6 billion and makes a lot of money from the casino. So who loses? And I want to spend some time talking about the person who usually loses, and that's the retail investor. And while I have supported for many years the democratization of finance, as we say, it's not just in Washington, D.C., but on Wall Street. The retail investor is known as dumb money. And there are any number of structures that are set up to take advantage of the retail investor. And I think it's worth looking at that because as much as we're celebrating Mr. Gill here, we're not talking very much about Mr. Salvador Vergara, who was featured in a Wall Street Journal story, who took out a $20,000 personal loan through Robinhood, invested it in GameStop, only to see the value of his position go down 80%. So Mr. Vergara is out $16,000 he doesn't have, that he owes to somebody else. And as much as I support the democratization of finance, we need to be thoughtful about this. So Mr. Tenev, my question is for you. You quoted a $35 billion number as what I interpreted to be profits in excess of deposited funds and securities. If you just look at your customers who traded in GameStop over the period of its increase and subsequent decrease, Mr. Tenev, how did your customers in the aggregate do? Did they win or did they lose?
Thank you, Congressman, for that question. I don't have that particular cut of the data top of mind, so maybe we can get back to you on that one.
All right, you don't have that. So you do have a $35 billion figure. The figure doesn't mean a lot to me because it's just a dollar number. Help me convert that to a rate of return. First of all, is that $35 billion, is that gross or net? In other words, is that actual profit or does it include margin shares, other forms of leverage that may actually not belong to the account holder?
It does include, Congressman, unrealized gains. So It's the value of assets, both including positions in securities and cryptocurrencies.
Okay, I get that. I get that. But again, 35 billion doesn't mean anything to me unless you can convert that into a rate of return. So do that for me. What is that on what asset under management number is that 35 billion unrealized against?
The asset under management number is not one that Robinhood has publicly shared.
Okay, but you can't share $35 billion. Sorry, Mr. Tenev, I just don't have a lot of time. $35 billion is a meaningless number. I need to know what that is in terms of return. So convert that for me into rate of return. So I can compare it to Treasury, so I can compare it to the S&P 500.
Congressman, with respect, I think the proper comparison is to customers not investing at all. Much of our customers are investing for the first time and are taking money that they otherwise would have spent or consumed and putting it.
Mr. Tenev, again, I don't want to be rude, but it's my time. Again, you offered up the $35 billion number, which, as you and anybody else schooled in finance knows, is meaningless unless you convert it into a rate of return. So just please convert that $35 billion number, which to the folks watching at home sounds like a lot of money. But what does that actually convert to in terms of rate of return, which is what matters?
Congressman, $35 billion is indeed a large amount of money, especially for our customers who are mostly small investors. It's more than most corporations, nearly all corporations have paid.
Mr. Tenev, again, don't make me be rude here. You and I both know that $35 billion of unrealized gains, if that's on a base of $100 billion, that's a 35% of return. If that's under $1 trillion, it's a radically different rate of return. So what I'm trying to get at, Mr. Tenev, here is you threw out the number of $35 billion. I actually think the right comparison is, what if your clients had simply invested in the long run in an S&P index fund? Would that number be more than $35 billion or less?
Congressman, with respect, I don't believe the right comparison is investing in an S&P index fund. I think the right comparison is not having invested at all and having instead spent that money and consumed it.
No, it's most certainly not. It's most certainly not, Mr. Tenev. And so I'm going to ask you, I'm out of time, but again, you put out the $35 billion number. So I think it's only decent, because you and I both know that a hard dollar number is meaningless unless you can convert it to return. So I'm going to ask you to convert that. Obviously, I'm out of time, into a rate of return for us.
You're out of time. Mr. Laudermilk, you now recognized for 5 minutes.
Thank you, Madam Chair, and I appreciate all the members of the panel being here. I think you've seen that there are occasions with some on the committee here that if you're not giving them the answer that they want, that they can use, they're just going to continue to push on you. And I just encourage you to continue speaking the truth, and you'll always stand up head and shoulders above everyone. Not surprisingly, the situation with GameStop trading has resulted in commentators and even some of my colleagues engaging in knee-jerk reactions, calling for new laws and regulations to be hastily enacted. It just seems to be a trend in Washington, D.C. to never let a crisis go to waste. Some have even spread conspiracy theories and alleged that crimes were committed before knowing what even happened. I can even testify to what was just being said. Is I know numbers of people, personal friends, who have never invested before, but because of Robinhood and other retail platforms, many of them took the stimulus money that they received during the CARES Act, which they were still working, they didn't need, and they actually started an account and started investing. So yes, more and more people who have never invested before are now investing using these platforms. This hearing is a reminder that with complex situations, we should take time to understand what actually did or did not happen, especially with this GameStop situation. Now, the SEC is the proper authority to determine if any rules were broken, and they are looking into it. Congress has already given the SEC broad authority to oversee the capital markets, and we do not need to rush to enact even more big government regulations until that could ultimately harm the investors. Now, question, Mr. Tenev, can you remind us again, why Robinhood temporarily paused trading of GameStop and other stocks.
Of course. Thank you, Congressman. Robinhood paused trading temporarily, or I should say paused buying of about 13 securities on Thursday so that we could meet our regulatory deposit and collateral requirements.
Okay, so what you're saying is you were paused because you had to comply with regulations. Is that true?
Correct.
All right, so it's ironic that the people who are criticizing brokerage firms because they pause trading, which they sometimes have to do to comply with regulations, these same folks are now saying, we need to respond to this with more regulations. I would say if people don't like brokers occasionally having to pause trading, I'd suggest they look at the regulations that required it. At some point, we need to recognize that piling on more and more regulations only increases complexity and does not help investors. Question for Ms. Schultz. Despite the volatility and the frenzy of media and social media activity, it seems to me like the markets functioned as they were supposed to during this situation, and that markets are not broken. In fact, they are working well. Do you agree with that?
I agree with that.
Okay, thank you. I appreciate that. I think most reasonable people that are listening to this would agree that there are regulations in place. The SEC has those to pause activities that could be harmful, not only to the markets, but to the individual investors. And so what I'm understanding you saying is that it did work in the way it was supposed to.
As the facts that I know now, it does appear to have worked the way it was supposed to. This is not a sign to me that the market is broken.
Thank you. Mr. Griffin, what are some of the issues that policymakers should consider in the T+2, T+1, T+0 debate? Obviously, margin requirements exist to make sure firms have enough capital to settle transactions, but faster settlement and lower margin requirements can be positive for the retail investors, and we need to balance those needs. Can you address what some of the issues are in the T2, T1, and T0 debate?
So, Congressman, I cannot profess to be an expert on these issues, but I will give you my perspectives from having been in the industry for 30 years. We started at T5. We will one day be at real-time settlement. And the question is how long does that journey take? From T2 to T1, which reduces the amount of capital required by broker-dealers to meet the needs of their customers, that reduction in capital will be meaningful, would have been very helpful to Robinhood during this period of time. Reduces counterparty risk holistically, which is good for everybody in the market. We should push for T1. As we go to same-day settlement, you now bring into question the complexity of intraday cash movement, and you bring into play the necessity for all systems to be functioning every moment of every day with no room for error. On a T1 settlement cycle.
This time has expired. Let me remind the members that we're going to have a series of hearings. Today is the first. There will be probably two more. I didn't hear anyone here today say that they were ready to pile on regulations. So let's make sure we know that our statements are accurate. Mr. Foster, you're recognized for 5 minutes.
Thank you, Madam Chair, and to our witnesses. Mr. Tenev, I'd like to follow up a little bit on payment for order flow and best order execution issues. Democratization of finance is a good and noble goal, but for democracy to work, consumers need transparency and high quality information, and not only about fees, but about order execution quality. Your customers actually don't care directly about who you subcontract order execution to or any payment for order flow, but they need a simple way to compare the execution quality between your app and competing apps or other accounts. And while institutional investors can afford to run their own tests, and they do, and I'm sure Mr. Griffin is normally is quite often on the receiving end of those tests and trying to measure up to his competitors to compete for market share there. The institutional investors have the market power to demand best execution statistics for their prime brokers. And everyday investors do not get the same transparency. In fact, I believe there's an SEC rule 606 that requires brokers to disclose at least some order execution data to institutional investors, but this requirement does not apply to retail investors. So, Mr. Tenev, since Robinhood's mission is to democratize finance for all, I ask, what are the mechanisms that you would accept and support to provide transparent order execution quality statistics so that your customers can engage in a clean apples to apples comparison between other brokers, between your app and other people's apps in terms of the total cost of trading?
Thank you, Congressman, for that very important question. I'm generally in favor of a greater amount of transparency than what we've typically seen in the financial industry. And recently, Robinhood and me personally have engaged publicly on the topic of payment for order flow, short selling, and of course, T+2 and real-time settlement. We do publish 606s via Robinhood Securities that detail our payment for order flow arrangements with various market makers. And just this past year, the industry implemented more detailed 606 requirements, which we of course conform to. Also, back in December of 2020, we released a public page on our website that provided detail about the execution quality, including price improvement that our customers received. And we're proud to announce in 2020, our customers received in aggregate over $1 billion of price improvement on their executions.
Right, but that's not a comparison to your competitors. There are a lot of questions about the accuracy of the best execution reference price. And independent of whether it should be improved, it seems like if I was a customer of you or one of your competitors, what I'd want to see is, I just executed a trade of $2,000 and on average, I got X% better or worse than a reference price. And then over time and see not only the trade that I just executed, but perhaps a running average over the last month or two that you can compare to the running average of whether you're exceeding some benchmark for trade execution quality that can really be compared with potential competitors. And is that a workable system? Are there difficulties? Is there a reason why industry shouldn't move that way in the name of transparency to customers?
Congressman, this is a very interesting topic to me. I'd love to have the conversation. I don't know if this is the right forum to necessarily ideate and brainstorm on all the solutions, but I just want to say I'd be happy to engage with this in a detailed forum and figure out the right path.
Okay, well, yeah, we do intend to continue to engage with the industry on this subject because it's very easy to make payment for order flow sound really creepy. You're basically selling a list of rubes to the sharks. Okay, on the other hand, you make part of an argument that this can net out positive for consumers, but for it to fully net out positive, they have to be able to make the apples to apples comparison. And so that's, I think really an important issue. And I think that probably your reaction to that, if you found your customers were leaving you because of poor execution quality, you would do what large funds do, which is to split your order flow between multiple order execution firms and then demand of them the best order execution and move your business to whoever does the best for your customers.
Yes, well, Congressman, we already do that. We have 7
Time has
market
expired. Mr. Mooney, you're recognized for 5 minutes.
Thank you, Madam Chairwoman. So let me just start by saying that last Congress, 30 of my Democrat colleagues, 4 of whom on this very committee, co-sponsored a bill that would impose a financial transaction tax on the purchase of securities and certain derivatives. And just recently, after the market volatility surrounding GameStop in January, Democrats renewed the call, many Democrats anyway, renewed the call for a financial transaction tax. On just January 28th, Congresswoman Ileana Omar tweeted, "How about this? Financial transaction tax now." Congressman Peter DeFazio is the lead sponsor of the bill. He's already put the bill back in for this session of Congress. It's now House Resolution 328 of 2000. So it's called the Wall Street Tax Act of 2021. I actually have a copy of it from the last session here. It's in again now. And he says, Congressman DeFazio says that a financial transaction tax would, quote, help create a more level playing field for Main Street. So with that background, Mr. Attentive, this question is directed at you. The Robinhood platform has more than 13 million users, and most of them are small dollar retail investors. If the federal government levied a 0.1% transaction tax on the sale of securities, how, and I know one of my colleagues, French Hill, my good friend, mentioned this earlier, but I want you, I want to expand upon it a little more. How would that 0.1% transaction tax on the sale of securities affect your platform and the retail investors that are your customers?
Thank you, Congressman. And we'd be happy to engage in this discussion much more in the future. A 10 basis point financial transaction tax would eat into the returns of our customers, which, as you pointed out, are largely smaller investors. And in that sense, it would be a cost to the retail investor. Of course, that would have to be weighed against the potential benefits of this tax. And I know it's a more complicated issue than meets the eye at first glance.
Okay, well, thank you for that answer. My next question is actually for Jennifer Schlupp. I know you spent your career specializing in financial regulation. In your expert opinion, would a financial transaction tax directly prevent fraud or market manipulation?
No, I don't think a financial transaction tax would have an effect on fraud or manipulation. I also don't think that it ultimately, financial transaction taxes often fail to raise money, and they distort trading in a way that's not necessarily foreseen initially by the tax. And I'd like to just add in there as well that financial transaction taxes, while they initially might seem like a small imposition on an individual investor, those taxes often hurt individual investors and their long-term retirement goals by affecting the institutions that also do the trading in mutual funds and with retirement money. I don't think a financial transaction tax is a good idea.
And a quick follow-up to that, Mr. Schlupp, what do you think a financial transaction tax would have done anything to prevent the market volatility and disruption we saw just this past January?
No, I don't think it's related here. There's been some discussion that it might have decreased the amount of trading and thus changed the volatility. It's not my opinion that would have had any effect on this particular circumstance.
Thank you. I only have a minute left, so let me just summarize. The financial transaction tax supported by many Democrats would do nothing to prevent market manipulation or fraud, would have not prevented the market disruption in January, and most importantly, would hurt retail investors. Yet Democrats are claiming that the events surrounding GameStop and Robinhood in January make it imperative to implement this financial transaction tax. It just doesn't add up. A financial transaction tax would make it more expensive for small retail investors to trade. And so much for looking out for Main Street. I believe we should be working together to find ways to open up markets to retail investors, not close them. Instead of making trade more expensive with a burdensome tax, let's look for ways to empower retail traders. Thank you, Madam Chair. I yield back.
Thank you very much. Ms. Beatty, you're recognized for 5 minutes. Ms. Beatty?
Thank you, Madam Chairperson, and thank you to the witnesses. My first question is to the CEO, President Ken Griffin. In the first 3 quarters of 2020, your company paid online brokerages like Robinhood $700 million for their order flow. Do you believe that brokers like Robinhood can serve as the best interest of their users while selling their order flow to companies like yours? And that's yes or no.
Congressman, I believe that Robinhood actually goes further in meeting the best interest of customers by, in fact, routing their order flow to Citadel. We give a better price, a better execution for American retail investors than the alternative of going to exchanges.
So I'm going to take that as a yes, since you said they go further. Then can you tell me, why did your company urge the SEC to ban the payment for order flow models in a filing to the SEC?
Congressman, that is a terrific question. That filing relates to the U.S. options market. It was a filing back, I believe, in 2004. And in the U.S. options market at the time, trades were committed against listed quotes. We were apprehensive about the direction in which the U.S. options market was heading towards the existence of these price improvement auctions, which diminished the incentives to aggressively provide bids and offers in the options market. We felt that legislative or regulatory efforts to encourage tight quoting, to discourage the existence of these auctions, and this was being, in some sense, fueled by a series of payment for order flow programs, was in the best interest of American institutional and retail investors. Now, regretfully, we did not prevail in our reasoning. The rise of price improvement auctions came into, in essence, the day-to-day model for options trading in the United States. And I do believe that this is a setback for our capital markets.
So, because my clock is ticking, let me ask you this. So, are you saying that you no longer believe that the model is anti-competitive and distorts order routing decisions?
I think it's important to distinguish between a market where you must trade on an exchange. In the options market, we must print the trade on an exchange, versus a market where you can trade off exchange, which would be the U.S. equities market. So just to be very clear, because your question is very good, every single options trade must be executed on an exchange. Equity trades do not. And because of that, I can save Robinhood exchange fees and offer a tighter bid-ask spread.
Okay,
than the
clearly
one
we're going
set.
to have a further discussion. Let me interrupt you only because my time is clicking, and I want to follow up with a question for Robinhood's CEO. Several of the brokers offer their users order flow for the sale to the firm, like with the previous CEO with Citadel. However, the price that Robinhood gets for the order flow is much higher than any other brokers receives. And I could go on and tell you we've pulled the SEC filings that Robinhood receives 17% per 100 shares stock of traded and 58% to 100 shares, and I could go on. But the question is, why do companies like Citadel pay a premium for their order flows of Robinhood users?
Thank you, Congresswoman, for that very important question. There's several reasons that may be the case. One important one is that our model and formula for payment for order flow works a little bit differently. We actually receive payment for order flow as a percentage of the bid-ask spread rather than on a per share basis. And we do believe that that's the most optimal way to structure payment for order flow arrangements.
Okay, is it not because companies like Citadel can make more money off of Robinhood users than others? And that's a yes or no, because my clock is going to run out.
No.
I'm sorry, I yield back. My time is up.
Thank you very much. Next, we will have Mr. Vargas. Excuse me, no, Mr. Davidson next, and then Mr. Vargas. Mr. Davidson, you're recognized for 5 minutes.
Thank you, Madam Chairwoman. I thank our witnesses. I appreciate the work you've done today. And I just want to share that in May of 2020, the Depository Trust Clearing Corporation unveiled a working proof of concept called Project Ion. In this project, DTCC said they would examine the potential use of distributed ledger technology in accelerating the clearing and settlement process. Now, since Project Ion was publicly announced, we've received little information pertaining to its progress. As a longtime advocate for this emerging technology, distributed ledger technology, and blockchain. Today, I've sent a letter to the DTCC to request that they provide an update on the status of Project Ion. And I look forward to hearing back from them. Hope to include them in our next hearing. Mr. Griffin, with Project Ion in mind, could you briefly state what would be your biggest concern if DTCC implements same-day clearing and settlement?
Same-day clearing and settlement requires that every bit of the workflow is perfectly synchronized across all parties, and we have no time for recoverability or for error management that you have in an overnight batch process.
Right. So the technology makes that essential. In my assessment, and many that is inherent to the architecture for blockchain to move forward with each proof. And so I guess clearly in your business, just to follow up there, the technology exists where, for trading firms that are engaged in high frequency trading, you measure success in the course of the day in what, milliseconds for high frequency trading?
So as you know, we are the largest market maker in the world and the largest in the United States in equities. We put great emphasis on the performance of our systems. That was one of the reasons that on the week of January 24th, we were the only major market center for retail order flow that was responsive every minute of every trading day.
Perfect. So I just wanted to make the point that I think the technology exists, whether you use blockchain or not, and applaud you for having the ability to execute with precision swiftly already. And I don't think it's a barrier. And I'd love to have more dialogue, but unfortunately I have to go to a few others. Mr. Tenev, do you believe that the root cause of January 28th for the problems that you and others experienced were market infrastructure related, particularly related to T2 versus T0?
I believe, thank you, Congressman. I do believe if we had real-time settlement capability and the infrastructure was modernized, we would not have seen similar problems.
Yeah, and thanks for that. I think, one of the related things, and it's related to your mission at Robinhood of more democratic access to capital, is not just the ability for more people in a broader portion of America to become savers and investors. It's also to engage in corporate governance even. So do you believe that if market infrastructure would guarantee, this is really related to, the over musical shares where someone could be left with no share when the music stops, multiple claims on a shorted stock. If the market infrastructure would guarantee an investor could retain custody of their shares so that the shares can't be lent to short sellers, there could be a downside. How do you feel that only one claim on the shares would resolve this? And that relates to proxy voting as well, or shareholders voting the shares.
Congressman, I believe that that's an important question. It's one that Robinhood and me personally have engaged with. I do believe that the ability for the same share to be shorted an indefinite number of times is somewhat of a pathology, and that should be fixed. And I think step one of that is modernizing the antiquated settlement infrastructure that everything is built on. We simply don't have the ability to properly track what shares have been shorted and how many times as they're moving through our settlement system currently.
Yeah, thank you for that. And I appreciate that you see the relationship. Hopefully broadly we do, and we provide that nudge the market needs. I want to commend Vice Chancellor Travis Laster of the Delaware Chancellery Court for his letter and paper, The Blockchain Plunger, which explains how this could be done. And I ask unanimous consent to submit that to the record. As my time expires, I want to commend you, Mr. Gill, for just representing a large segment of the industry, in my view, where savvy investors have had an opportunity to engage. And it relates to people with diamond hands that hold. So you might not call yourself a holder, you might use the word diamond hands, but thanks and congratulations for your success.
The gentleman's time has expired, and without objection, your submission is taken. Thank you. Mr. Vargas?
Thank you very much, Madam Chair. First of all, I want to apologize to Mr. Plotkin. You spoke of the anti-Semitic attacks that you suffered online. And as a person of color, I always feel the need to confront hate speech and speak out. And I don't think there's ever been a more hateful, evil, sinful event in human history than the Holocaust. So I want to apologize to you and your family for those attacks. You brought it up, and I think we owe you an apology. I want to apologize for that. Sometimes I think some of my colleagues on the other side of the aisle are devoid of any contact with real people when they say this is just political theater, or they don't want to know the rate of return when that's exactly what people want to know. In fact, there's been a great deal of interest in this hearing, and I think it's because there's great distrust in our society and in government, markets, institutions. And then along comes this story of GameStop. And it's a story really of Robin Hood turned on its head. And the reason I say that is that Mr. Zuckermeyer brought it up. Robin Hood is an English folk hero, 13th, 14th century. And he was supposed to steal, Robin of Locksley was supposed to steal from the rich and give to the poor. And here you almost have the opposite. You have the situation where you have the steal from the small retail investor and giving it the large institutional investor. From an outsider's perspective, you have the bullies, the hedge funds, and their armies of analysts and lawyers and regular old suits attacking the trust GameStop by shorting its stock. And then to rescue, here comes the retail investors, and they're taking stock to these incredible levels. And all of a sudden, Robin Hood steps in, but not to help the little guy. He steps in and says, I'm going to help the big guy, and stops the sale because no one knows how high this is going to go. And who's getting it? Who's getting socked in this thing? The bullies are, the hedge funds. And that's why people were excited about this. But all of a sudden, Robin Hood steps in and they say, no, we had to do this because of other conditions. And my good friends, the Republicans, say it was government, really. It was, because the government regulations forced them to do this. Well, that's not what the public thinks. The public thinks that there was collusion, that the big guys, all of you guys, were figuring out how to do this and ultimately come out ahead, as you always do. And it seems my colleagues on the other side want to help people. Now, Mr. Griffin, if I could just ask you the first question, how many people are in the room with you? You could just count how many people are in the room with you.
There are 5 people, including myself, in this room, sir. Congressman.
Thank you. So I don't think my colleagues need to help the CEOs or anybody else. They got plenty of help. Now, I have to ask this. You said that you didn't talk to anybody, Citadel Securities. Did anyone in your organization since January 1st contact Robin Hood?
Are you asking if we've had contact with Robin
With
Hood?
With respect to GameStop and what we're obviously talking about.
So, Congressman, we offered to have my colleague who manages that relationship be here today instead. He has firsthand knowledge. We, of course, are talking to Robin Hood routinely in the ordinary course of business. We manage a substantial portion of their order flow.
Well, I understand that, but did you talk to them about restricting or doing anything to prevent people from buying, not selling, but buying in GameStop?
Let me be
anybody in your organization.
Let me be perfectly clear. Absolutely not.
So if we depose everyone in your organization, we'll find that.
That is correct.
Okay, thank you. I do want to ask you one thing, and Mr. Sherman was pursuing this. How do you balance the best execution for the order flow from your purchase from Robinhood with the need to profit from the purchased order flow? How do you do that?
So as a market maker, we have to provide to the customer a better price than they can achieve on exchange. Order flow is routed to us on the merits of the execution quality that we provide, in contrast to our competitors who we are competing with.
Okay, my time's about to expire, but I have to say, when Mr. Tenev, when you say that you guys made $35 billion and you don't say how much your people lost on home stops, people that invested in you, that's like taking the fifth. Thank you.
Thank you. The gentleman's time has expired. Mr. Budd?
Thank you, Chair.
Recognize.
Yes, ma'am.
Yes.
Thank you. And I want to also thank the panel. Now, I really care about a level playing field for retail investors to access the market. And I've been a long supporter of financial innovation and fintech and the shared goal of democratizing finance and making access to the financial system easier for all. So, Mr. Tenev, your company, it boasts that it's helping to democratize finance and is at the forefront of innovation. Can you talk a little more about what Robinhood is doing to push innovation forward and create a level playing field for all investors, while at the same time making sure that those investors are well informed?
Absolutely, Congressman. Thank you for that very important question. The first thing I should note is many of the witnesses and representatives here have stated that it's never been a better time to be a retail investor in America than it is right now. I think the combination of zero commissions, no account minimums, fractional shares, really things that Robinhood has helped make the industry standard, have helped small investors and helped level the playing field for people to participate in the markets. Over the past year, Robinhood has released fractional shares, the ability to do automated dividend reinvestments, recurring investments, so that you could take $1 or $5 and create a habitual investment into a particular stock. And the theme of this year for Robinhood is, how do we take a first-time investor and turn them into a long-term habitual investor? How do we make long-term investing accessible for people around the country? And we're making huge investments in education and customer support to support that. We recently released a revamped Learn portal. We call it Learn 2.0, with the aim of taking a customer from basic concepts such as what is a share, what is a stock, what's an ETF, all the way through to more advanced concepts. And we're continuing to invest more and more on Learn, as well as on Snacks, which is our popular podcast, and all other forms of content that we distribute. Last year, more than 3.2 million.
I want to interrupt you there. Just, I know you have a lot more things. These are great. And I know we could probably talk for a lot longer than this, but I want to shift gears just a bit. But I do want to keep talking about the retail investor. And I want to switch to Ms. Schulp. So back in December, there's an article that you wrote prior to all these events that we're even having the hearing on today. And in the article, I think that you said that it's inappropriate to refer to these very retail investors that we're talking about, that are using these platforms like Robinhood that we're talking about, and referring to those investors as dumb money. I think that's pretty insulting. And my colleague from across the aisle from Connecticut used that term. I think it's insulting. And instead, retail investors are in fact revolutionizing the stock market. So would you elaborate on those views, Ms. Schultz?
Absolutely. Thank you, Congressman. Retail investors are often referred to as dumb money by Wall Street, and it's because they don't have access to the same level of research, or some use the term because they think retail investors make dumb decisions. I think it's insulting. I think that the term needs to go out the window. Retail investors are investors who make their decisions based on the information known to them. And we should focus on educating people so that they can understand the risks and rewards of investing. Here, I think the GameStop situation is proof that the retail investors are revolutionizing the market. No one would have guessed when I wrote that article in December that retail investors were going to initiate a sophisticated short squeeze. I think the retail investors here are learning by doing, which is one of the best ways to learn. And we should spend effort making sure that people are equipped with the knowledge to understand the risks about being in the market.
Well, I appreciate that. And I would like to ask for unanimous consent to insert that letter into the record, Madam Chair. Thank you. I just want to look, Robinhood wrote about the need for, and this is open to anyone, and the I've just got a few seconds left, but I'd like for someone to talk about, is it possible for clearinghouses and real-time settlements on the blockchain to exist? I don't have time for that, but that's something we can come back to at a further point. And Madam Chair, I'll go ahead and yield back.
Thank you very much. And without objection, I want to make sure that that's in the record that your insertion was accepted. Thank you. With that, I'm going to turn to Mr. Gottheimer. Mr. Gottheimer, you're recognized for 5 minutes.
Thank you, Madam Chairwoman, and thank you to our witnesses for being here today. Before I begin, Mr. Gill, I read your testimony, and I'd like to offer my heartfelt condolences for the loss your family suffered last year. It's not just Melvin Capital that lost money as part of the frenzy around GameStop. Whether it's a security guard losing $20,000 or a dog walker losing a few $100s, everyday retail investors were left holding the bag after GameStop's stock fell back to earth. Not every investor lost money, and Mr. Gill, sitting before us here today, remains bullish on the stock. Still, Bloomberg reported yesterday that he was served a lawsuit accusing him of misrepresenting himself and his motivations. I'm not here today to take sides in the litigation. However, it does raise important questions about the role of social media websites like Reddit, especially in the context of volatility we experienced with GameStop, AMC, and numerous other stocks last month. Mr. Huffman, what kind of authentication exists for Reddit users to confirm their identities, to verify that are even real people?
Reddit, and this is an important quality of Reddit, so thank you for the question, doesn't require people to reveal their full identity to use the platform. One of our pillars of privacy, and privacy is something that's critically important to us, is that users should be masters of their own identity, and they can choose to reveal as little or as much as they would like. I'll point out that there are two sides of this that are really important. On one side, this allows Reddit to work. Something like Wall Street Bets would not exist if users had to reveal their full identity, because in Wall Street Bets, people are revealing gains and losses. They're effectively revealing their financial position in life, and we would not put that burden on anybody to force them to do so. I'll also point out that other platforms have real identity, and it doesn't do anything to improve their behavior.
Can I ask a question of that? Is there any way for a regular user of Wall Street Bets subreddit to know what content is genuine, written by other users just like themselves, retail investors who are looking for honest information to invest on? Is there any way for that?
So there are a couple aspects to this. So the first is that we as a company invest significant resources in enforcing the veracity of our voting system. It's something we've been doing for 15 years, long before events like this, long before even the election and the politics of the last few years, where these things have become top of mind for everybody. This has been critically important to us. Also, our user base is exceptionally good at sniffing out untruths, misinformation, fake stories, both within this community and Reddit at large. And so in order for any piece of content to be successful on Reddit, it has to be accepted by that community and receive the same votes that anything else would.
Do you have any heightened standards for places like Wall Street Bets or other investing subreddits where moderators are able to manipulate content to their own financial gains?
We keep a high standard across the entire site. And in with this particular community over the past few weeks, we've been looking especially closely, anticipating these sorts of issues and questions. And to date, we have not found any nefarious behavior.
Got it. But we could have a situation where thousands, possibly millions of dollars of retail investor money may be being manipulated, right? We don't know that.
People in the United States talk about stocks on Reddit. They talk about it on TV, in magazines. People can say, in fact, they do on television all the time, encourage people to make what I would call bad investment decisions. On Reddit, I think the investment advice is actually probably among the best because it has to be accepted by many thousands of people before getting that sort of visibility.
Do you see any difference between someone on Reddit offering advice versus an analyst at a major bank or a financial services firm?
Absolutely. I think on Reddit, you're seeing retail investors who are giving authentic advice based on their knowledge, and you would not, call into question what their motivations are or what large positions they may hold before going on TV and talking about them.
Do you plan to do more in this space, and is this something that's going to be a major priority of yours? And do you think overall social media companies like yourselves should be held to a different standard? Should you be responsible for what happens in your content? If someone manipulates something or if it's a bot, should that be on you, or do you think that's just buyer beware?
we take manipulation of Reddit incredibly seriously. That is one of our, I think, first duties on all of this is to ensure the authenticity of our communities. Yes.
Got it. But do you think you should be held responsible if somebody posts something, if there's some collusion, or if there's somebody who is it's a bot that's online? Do you think you should be on the line, or this is just a site you offer for people to exchange ideas?
Reddit can be held responsible, and we do take our responsibilities here incredibly seriously.
Thank you. The gentleman's time has expired.
Thank you. Thank you, Madam Chairwoman.
Kustoff? Mr. Kustoff, you're.
Thank you, Madam Chair, and I want to thank you and the ranking member for convening today's hearing. If I could, Mr. Tenev, I'd like to echo what many of my colleagues have said today. We do appreciate the fact that you've created this platform. To a large extent, you've leveled the playing field so that small individual investors can have a shot at the American dream. That's investing. Now, I do want to ask you though, and a lot's been said about the situation that occurred in late January. My question to you is, how did you misjudge your capital requirements to prevent people from being able to trade during that period in January?
Thank you, Congressman. I wouldn't say we misjudged our capital requirements. This was a 1 in 3.5 million occurrence event, one that had never been seen before in capital markets. And we had to play this by the book. Robinhood Securities made the decision that we did so that we could remain in compliance with our regulatory capital and deposit requirements. Unfortunately, it required us to restrict the buying of these securities for Thursday and limit it to some degree on subsequent days until additional capital came in that allowed us to relax the restrictions.
It was Robinhood's mistake, though, correct?
Well, Robinhood owns what happened, certainly, and we need to make sure that it doesn't happen again. But Robinhood Securities had limited options with how to address this, and I fully support the team in making the decision that they did, and I believe they did the right thing and the only thing.
I realize you said at the beginning that you're privately held. With that said, is your primary source of revenue from the order flow payments that you receive from some of the players that we've talked about today?
That is correct, Congressman. Payment for order flow is one of our largest revenue sources.
Is it the largest?
It's the largest, yes.
Now, in your testimony, in your written testimony, oral testimony, you talked about the settlement period and what we're probably capable of doing in real time, or instead of T+2, maybe even T+1. If we had real time settlement, would the situation that did occur in January, would that have been preventable? In other words, that wouldn't have happened if we had real time settlement?
Congressman, if we were to have real time settlement, and of course there's some implementation details that would govern this, there would be less of a need for collateral at clearinghouses because the cash and securities transactions would be exchanged in real time. So collateral for counterparty risk would be less necessary. So real-time settlement would lead to reduction, perhaps an elimination in some of these collateral requirements, a reduction in the money that's sort of clogging up the plumbing of the system, and that would have avoided some of these problems altogether.
Thank you very much. Just to be clear, does the same answer apply if I asked you if settlement was T+1 instead of same day settlement? Would your answer be the same?
Congressman, T+1 certainly would be better, but it doesn't. It reduces the scope of the problem. It doesn't eliminate it from a technology standpoint.
Thank you very much. Mr. Huffman, if I could, I'd like to follow up on some of the questioning that my colleagues, Congressman Hill and Congressman Gottheimer, asked. you've done an investigation into Reddit, into Wall Street Bets. You don't see any bad actors. I'm paraphrasing, but you don't see any bad actors that caused any role in the GameStop frenzy. Am I characterizing that correctly?
Congressman, that's right.
You know, the Congress is looking at amending Section 230. What are your thoughts about that as it relates to Reddit?
Sure. So Section 230, I think, is a critically important law to the internet as we know it. And it was created, in fact, to protect a forum in the early internet for talking about stocks. Section 230, I think it's also important to point out, doesn't protect platforms or companies like ours from civil litigation. So there are mechanisms for coming after companies like ours. What it does protect is our ability to evolve the way we moderate our content, and in which we have done in many ways over the last decade.
The gentleman's time has expired. Mr. Gonzalez, you're recognized for 5 minutes.
Thank you, Mr. Speaker and Ranking Member, and I want to thank everyone in the committee here with us today. This is for Citadel. Mr. Griffin, in 2020, Citadel violated regulation SHO, which governs short selling. Citadel is now involved in another short selling problem, and Robinhood routes half of its customers' orders to you. Robinhood halts buying on a position that you're long on, and you own the hedge fund and the clearing broker. What is there to prevent you from taking advantage of that situation and making sure you profit off the confusion and retail investors?
Congressman, I'm trying to understand the question.
Let me give it to you again. In 2020, Citadel violated regulation SHO, which governs short selling. Citadel is now involved in another short selling problem, and Robinhood routes half of its customers to you, orders to you. Robinhood halts buying on a position that you're long on, and you own the hedge fund and the clearing broker. What is there to prevent you from taking advantage of that situation and making sure you profit off the confusion of retail investors?
So in no particular order, I just do not understand the reference to us owning a clearing broker. We do not own DTCC. We do not control DTCC. We are not party to the discussion, dialogue, or demands between DTCC and Robinhood. So I do not understand the premise of the question, because we have literally nothing to do with DTCC other than being a member of DTCC for providing settlement services for us and for doing real-time trade affirmation and clearing. Now, Citadel Securities owes a duty of best execution for every order that comes from Robinhood. And I will tell you that I'm incredibly proud of how seriously my team takes that duty of best execution. Some of the most earnest, hardworking, and thoughtful people that I've ever met in my life work on our retail execution business here at Citadel and take great pride in the execution quality that we give to each and every trader, not only at Robinhood, but at every single one of the retail.
Thank you for your response, Mr. Gill. But I understand that you made your position known on GameStop as far back as 2019 and are lauded as a diamond hands hero by Wall Street Bets community. Have you ever previously experienced or observed the type of restrictions Robinhood and other applications performed on January 28th?
Thank you, Congressman. No, I have not.
Thank you. That's a good question. And Mr. Huffman, I'm not a Redditor, but I do understand the problems around social media and freedom of speech and the tightrope act that goes on where these intersect. In the near decade of Wall Street Bets and subreddit, have they shown themselves to be exceptionally problematic, an exceptionally problematic forum, or just one of the many eccentric communities that call Reddit home?
Congressman, I think your latter description is more accurate. They are an eccentric community. but they're well within the bounds of our content policy. And though we do have difficult decisions to make here and there regarding specific communities, one of the things we look to first is whether the community is trying in putting their best efforts to be a good citizen of Reddit. And towards that end, we've had consistent communication with the moderators of that community, and they've been doing, I think, an excellent job.
Thank you. Well, the last financial crisis was caused when we turned a blind eye to the bad practices of our financial institutions. Perhaps today we've seen a warning about the clearing process, and I hope today can be a jumping off point for us to take a hard look at our markets and the practices of these institutions. In a two-day clearing process, the liability risk and potential financial stress limited trading, but in a key time in market and perhaps in a way that materially affected investors in these recent events. So I'm hoping that we all get to take a closer look at what is happening. And with that, I yield back. Thank you.
Thank you very much. Next on our list, we will have Mr. Hollingsworth for 5 minutes.
Thank you, Madam Chairwoman. Mr. Griffin, I'm going to direct my questions to you specifically, but I'm hoping to talk a little more philosophically about the market writ large rather than just Citadel itself. Certainly, there's been a significant amount of evidence supporting the advantages market makers offer retail investors. Through sophisticated infrastructure and high-speed technology, bid-ask spreads have decreased from 33 cents to less than a penny over the last 5 decades. And according to some research, saved retail investors $1.6 billion just in the first 6 months of last year alone. None of our discussion after this and the questions I'm going to ask are intended to be pejorative to that reality, but I just wanted to pick your brain, given your deep experience, about some of the implications of off-exchange trading specifically. We've seen this year that off-exchange trading has eclipsed nearly 50% of all trading. Can you talk a little bit about what factors have contributed to off-exchange trading's growth versus on-exchange trading? Certainly, I want to talk about the concerns we may have as market participants about that, but first, just the factors that you think are driving that.
I think one of the most significant drivers of off-exchange trading is that exchanges are handcuffed in their ability to fulsomely compete.
Can you talk a little bit more about that? Is this just regulatory arbitrage?
It is, I hate the word because it has a negative connotation. I believe that the exchanges should have greater latitude in setting their tick sizes in the most liquid securities.
Mm-hmm.
That will allow order flow that's currently going to dark pools to go to exchanges and to receive better executions. So let me just be very clear. It's not that we want to inhibit dark pools or market makers like Citadel from competing. It's that we want to enable and empower exchanges to be better competitors. I started my career as a retail investor in the day where I used to spend 25 cents in a bid-ask spread if I was lucky. I know the days you're referring to. We've come a long ways, but to continue on this journey, the next step is to allow exchanges to be more competitive in the market.
Well, so I think you answered this question, but just to put a fine point on it, there is public policy work that needs to be done in order to help resolve some of this challenge that exists in the movement of volume from on exchange to off exchange. That's incumbent upon us. It's incumbent upon regulators to find a better solution. Is that what you're saying?
Congressman, I'm saying that yes, it's legislators or the SEC. I believe much of this can be done by the SEC as a policy matter.
Right.
Think of it as the next step forward in regulation NMS.
Love it. Great. Thank you for all those answers. Just, I want to highlight this further. Can you talk about some of the challenges or deleterious impacts on the market if more and more volume is off exchange versus lit trading? Can you talk a little bit about why we should be concerned about that to make sure we all understand how important it is to make these changes to empower, as you said, exchanges to be better competitors?
I think there are 3 salient points I'd like to make. First, price discovery is the most important part of our capital markets function because price discovery combined with liquidity fuels our free enterprise system. It's how companies raise capital. It drives down the cost of capital. The more trading on exchanges, the better the price discovery we have. That is good for our capital markets. The second is that dark pools are often willing to engage in business practices where they discriminate against one class of investors versus another. I find it very unsettling that we in any way prohibit discrimination against one group of investors for the benefit or at the expense of another in any part of our capital markets. We want our capital markets to represent the values of our country. The third is that the dark pools themselves create a level of concern and apprehension about the integrity and fairness of our markets. And I believe that we should always be taking steps to advance public confidence and the confidence of retail investors and institutional investors that the United States capital markets are a fair place in which to transact business.
Mr. Griffin, thank you for those answers. And I would call upon my colleagues to recognize the deep experience Mr. Griffin has in these areas and how important it is that we take the steps, either via agency or via legislation, to help empower exchanges to compete on a level playing field to make sure that we create a public policy.
The gentleman's time has expired. Mr. Lawson, you're recognized for 5 minutes.
Thank you, Madam Chair, to you and Ranking Member McHenry for this forum today. And I want to thank and welcome the panelists to this great forum. One thing, Madam Chair, I want to clarify for the record. One of my colleagues earlier said that when people got their stimulus money, they went and started investing it. I want to let them know that when my people got their stimulus money, they was trying to pay their rent, trying to take care of their kids, and I don't want the panel to think that when we work so hard on stimulus dollars, you know, that happened, that they that people are running out to invest their money. That's not the norm. My question, I'm gonna direct it to Mr. Plotkin. Wall Street is supposed to be tied to revenue and profit fundamentals. We saw these fundamental changes when amateurs and investors gained control. They publicly stated that this isn't about investing based on their fundamentals, and that this isn't an investment about making a profit in that way. It's about making a profit to demonstrate that they can manipulate the system, and if not, better than professionals such as yourself. The rapid trade won, and Wall Street was losing billions of dollars. Melvin Capital betted against GameStop and was on the verge of bankruptcy. Clearly, there is a manipulation and distrust within the system and inequality in American finances. Mr. Plotkin, do you believe that there is manipulation, distrust, and overall inequality within American financing? And what do you believe are the consequences of big guys like yourself, but also little guys in this process?
Well, thank you for the question. I really can't speculate, in terms of the broader system. I think, Melvin, my focus is on running our portfolio and building a great organization and a strong team. I think some of the issues you speak about are much greater societally, and it's not really my area of expertise.
Okay, well, one other thing, you guys have Series 67 license and everything, but these amateur investors don't have to go through those same standards. And because they do not have to go through those same standards, how are they able to go in and manipulate the market? Maybe someone there can answer. Over people who have been involved in this research and calculation and investing for so many years. Can anybody ask how are they able to go in and manipulate the market like this and cause billions of dollars to be lost?
Sure. Look, I think, as we've spoken about today, the financial markets are changing. There's a lot of new players. I think they saw an opportunity, to drive the price of the stock higher. And today with social media and other means, there's the ability to kind of collectively do so. That was a risk factor that, up until recently, we'd never seen. I think, sometimes with retail investors, you think about, and they've been really adept at this, investing in the internet or software stocks or electric vehicles and, ideas with big opportunities and they chase them because they believe in the fundamentals. I think this was very different in that a lot of the meme stocks, these were businesses with real challenges, but they exploited an opportunity, around short interest and the way that was approached. And I think, us at Melvin will adapt, and I think the whole industry will have to adapt.
Well, I understand that, and so I just, from our standpoint, and I don't have much more time, but what do you recommend to us to try to keep from letting this happen again?
Look, I think to some degrees markets are self-correcting. I know, moving forward, stocks, I don't think you're going to see stocks with the kind of short interest levels that we saw, prior to this year. I don't think, investors like myself want to be susceptible to these type of dynamics. I think there'll be a lot closer monitoring of message boards. There'll be software providers. We have a data science team that'll be looking at that. Whatever regulation that you guys come up with, certainly, we'll abide by. And I look forward to, helping, if you guys want to have future conversations about that.
Okay, thank you. And Madam Chair, my time is running out, so I yield back.
Thank you very much. Mr. Gonzalez of Ohio, you're recognized for 5 minutes.
Thank you, Madam Chair. I want to thank Ranking Member McHenry for his leadership in calling for this hearing today, and also you, Madam Chair, for bringing us together. Mr. Tenov, I'm going to start my questions with you by walking through a series of events from that day in January, just to make sure we're all on the same page. So in your testimony, you mentioned that the automated deposit requirements from DTCC came in at 5:11 a.m. Eastern, and it showed a $3 billion deficit, correct?
I believe that's correct, yes.
Okay. At that point, 5:11 a.m., did you have the liquidity to meet the additional $3 billion deposit requirement?
So as we wrote in detail in my written testimony, there were a series of steps that the Robinhood Securities team took to
reclaiming my time, sir. At that exact moment, did you have the liquidity for $3 billion? 5:11 a.m.
At that moment, we would not have been able to post the $3 billion in collateral.
Okay. So when you said, and you've said this multiple times, that you did in fact have the liquidity and you didn't have a liquidity problem, at that moment in time, that is not necessarily true, correct? You had to take steps to get there.
Congressman, we did have to, the Robinhood Securities team had to work with our relevant clearinghouses to adjust the risk profile of the trading day in order to meet our collateral requirements.
Right. And in order to do that, your choice was to throttle trading to prevent your clients from being able to purchase in certain shares, correct?
That's correct. Robinhood Securities had to restrict buying in about 13 securities.
Okay. And if you had not been able to de-risk the profile or the portfolio, excuse me, you wouldn't been able to raise the money, get the VAR requirement and the excess capital charge waived to de-risk the portfolio, then DTCC would have stepped in and liquidated the portfolio, correct?
I'm not sure what the exact, Congressman, what the exact steps that they would take if we weren't in compliance with the deposit requirements would be, but it would not have been a good situation for the firm or the customers.
So reclaim my time. So the letter that Ranking Member McHenry submitted for the record, I would draw everyone's attention to. I'll just read this. If a clearing member fails to satisfy a margin call, it exposes other clearing members to risk and can put NSCC out of compliance. In a case of non-payment, NSCC may cease to act for the clearing member and liquidate its unsettled clearing portfolio. So that was definitely in the cards. For my constituents who are Robinhood clients, what would this have done to their portfolio if it would have been forced liquidation as a result of missing the capital call?
Oh, well, Congressman, if there was forced liquidation, at the very least, it would have resulted in a total lack of access to the markets for your constituents. Not just to the 13 securities that we restricted buying in.
Right. So this would have been an enormous catastrophe for Robinhood, correct? And the
That's
clients.
correct. And not just Robinhood, but the over 13 million customers that we serve.
Yeah, and I think that's really sort of the crux of the issue. So in a sense, I love your company because it does, when correctly managed, provide investment opportunities for individuals who are currently frozen out of the markets for one reason or another. At the same time, though, I believe a vulnerability was clearly exposed in your business model and perhaps in the regime that governs your capital requirements. And we just can't live in a world where my constituents could have their shares liquidated without their consent because you all aren't able to make a capital call. I appreciate that you were able to ultimately satisfy it, but the amount of time you have from 5 a.m. to 10 a.m. to figure this out is scary for the company, and frankly, I care more about my constituents than anything, and scary for them. And so I hope we'll continue to look at that. Beyond that, though, I also hope that this hearing highlights a very real problem with our financial markets today and how they're accessed by everyday investors. Today, the Melvin and Citadels of the world, as well as major PE and VC funds, have access to the world's greatest investment opportunities on the planet, whereas the retail investor world, of which Mr. Gill is a great member, it doesn't, for lack of a better term, has access to an ever diminishing set of investment opportunities. And so while we're debating these vulnerabilities, we're also serious about finding ways to expand access for Main Street investors. And with that, I yield.
The gentleman's time has expired. Mr. San Nicolas, you're recognized for 5 minutes.
Good morning from Guam, Madam Chair. I've been with the hearing since 3 a.m. The sun is starting to come up out here, but it's always a pleasure to be joining you in these very, very important hearings that you call for the American people. Thank you very much. I wanted to first begin by congratulating everybody who made money on the Robinhood trade. You know, you guys found a low float, low volume, massively shorted stock, and you guys squeezed it. And I think that investors like Mr. Plotkin, large money managers, probably doubled down on their short positions thinking that they're going to win. And in the end, the massive communication networks that we have these days rallied the small to beat the large. And that was absolutely something to behold. And Robinhood made that possible. Robinhood made that possible. Mr. Tenev, you mentioned in your testimony that you've secured $3 billion in funding to address the regulatory deposit requirement situation that you faced. Where did that $3 billion come from?
Thank you, Congressman, for that question. To be clear, we were in compliance with all regulatory net capital and deposit requirements without the additional capital infusion. It was simply to provide extra cushion, allowing us to unrestrict trading and be prepared for other black swan events that might happen in the future. The capital came from mostly existing venture capital investors that Robinhood already had.
So basically, you had to further dilute your position in Robinhood in order to make sure that you secured all of your 13 million customers with that additional $3 billion.
That's correct, Congressman.
Well, that's where I have a serious concern, Mr. Tenev, because not only was your business model designed to profit off of order flow, which caused you to take extraordinary risks in having 13 million customers with access to large margin trading that facilitated the GameStop situation, but you halted buys on that stock and you allowed sells in order to mitigate the capital requirement situation, and you materially benefited from it. You materially benefited from it because it reduced the amount that you would have had to go out and raise an additional capital in order to prevent these kind of crises from reoccurring. You took from your customers in order to minimize the $3 billion from being larger than it probably would have been, because you wanted to protect your position. And that is very troubling. That is very troubling. It's very troubling that the order flow model that you built and the risk that you took on resulted in that halt. And it's very troubling that that halt also materially benefited the existing shareholders and yourself by minimizing the amount of additional capital you had to raise in order to prevent that from happening again. You basically took from the shareholders in order to do that. And that's just, I don't know what to say about that, but I think that this, Madam Chair, presents a very serious situation where we need to ensure that companies are not taking advantage of customers in this way. Mr. Kenneth, you're quoted as saying in this hearing, buying increases capital requirements, selling does not. So it was something that you knowingly did. It was something that you knowingly did. It was beyond just trying to protect the existing customers. And it, at the end of the day, while you had to raise an additional $3 billion, it minimized that from being a larger sum. We have customers who purchased the stock who are now bag holders after the price came down because they couldn't continue going up with buying, with additional buying. And that was willful, that was intentional. So I'm glad, Madam Chair, that we've called this hearing. I'm glad that we're able to put these things on the record. And I'm just very, very concerned with the implications of this. And I really hope that at the end of the day, those bag holders get a lot more than an apology. Thank you, Madam Chair, and I yield back.
Mr. Rose, you're recognized for 5 minutes.
Thank you, Madam Chair. And thank you, Ranking Member McHenry, for holding this important hearing today. And thank you to our witnesses for your testimony and participation today and for the dedication of time that you've made to this hearing. There is still so much for us to learn from this market event. Obviously, speculation has been rampant, and I believe we should not get ahead of our skis, so to speak, and rush to policy recommendations before we understand the full scope of this situation. The committee investigation is barely underway, and I would view a large majority of the policy proposals suggested today as half-baked at this point. At the end of the day, we should all want retail investors to have access to the market and to ensure they have the information they need to participate in the market in an informed way. Mr. Griffin, my colleague, Representative Loudermilk, asked you to explain the advantages of cutting down on the settlement time, but you were cut off before you could complete your answer. Would you like to finish your thought there?
To be brief, the issue in going to real-time settlement is everything has to work perfectly in a world where there's still people involved in many of the processes. We'll get there one day as an industry. I just think it's a bridge too far in the next couple of years.
And then you were also cut off earlier when answering my colleague Ms. Beatty's question regarding the difference between payment for order flow for the options market versus the equities market. Would you like to continue that explanation?
I think we covered that reasonably well. I think the salient difference is that the options market, every trade must take place on an exchange to start with. In the equities market, the current market structure has been arrived at with the blessing of the SEC as the best way to give retail investors in America price improvement as compared to the exchanges. And to be succinct, we should make exchanges more competitive, not make internalization or dark pools more privileged.
Thank you. And then finally, Mr. Griffin, earlier Representative Lukemeyer asked about how we got to where GameStop was short sold to 140%. Given that naked shorting is an illegal practice, how did that happen given current U.S. law?
So clearly, a number of the purchasers of the short sales, of the shares sold short, are institutions that also lend their securities. And it's very important to remember that institutional investors earn substantial returns from participating in the securities lending market. So if you were lending your GameStop stock out, for example, over the period of the recent crisis, you may have been earning an annualized rate of return of 25 or 30% on the shares that you lent out. That accrues to the benefit of pension plans, of ETFs, of other pools of institutional lending that participate in the securities lending market. And keep in the back of your mind, when a bank lends money to a business, that business may turn around and lend money to its suppliers. Just because, in some sense, somebody can on-lend what they've bought doesn't necessarily mean something has gone wrong in the chain itself.
Would you see that as an area ripe for regulatory adjustment, or do you think that that's not a problem?
I think if we were to think about legislative priorities to make our capital markets work better, this doesn't make the top 100 list.
Thank you. Thank you. Despite the intense volume and exposures presented in the markets, the broader infrastructure of our financial markets has performed very well, I believe. My concern, like those of my colleagues, is that forging ahead with new regulations at this point would be harmful and have unforeseen consequences. In the few moments that I have left, Ms. Schulp, can you speak to what the potential dangers are of increased regulation to retail investors?
That's going to take me more than 12 seconds, but there's a lot of potential for unintended consequences here, and increased regulation can drive retail investors out of the market. It can have them have less good prices.
Sorry not to give you more time. Maybe one of my colleagues will give you a chance to complete that. I yield back.
Thank you very much. Next, we will have Ms. Axney for 5 minutes.
Thank you, Chairwoman, and thank you to the witnesses for being here today. I just want to quickly follow up with a question my colleague, Mr. Foster, asked earlier to you, Mr. Tenev. You said that Rule 606 reports detail the arrangements you have with firms like Citadel. However, those only detail the payments you receive. Are you saying that you're prepared to publicly disclose the detailed terms of your payment for order flow with Citadel and other market makers?
Thank you for the question, Congresswoman. The 606 reports do publicly detail the payment for order flow arrangements we have with Citadel Securities and our other market makers.
Okay, well, I'll look forward to seeing those details then. Will you make sure that you get those over to our committee?
Certainly, we can have that arranged.
Okay, thank you. Last month, of course, as we saw this volatility with GameStop and AMC, and the stock started to rally, everybody seemed to get involved. And one survey recently said that 30% of Americans purchased one of those viral stocks. That includes people like my nephew and his two friends who stayed up until 4 in the morning to see if they could get a piece of this action. So one of the most concerning pieces, though, of this whole episode is how many people really felt like that's what they needed to do to get ahead. To me, this just exemplifies the income inequality across America, and it's one that we need to deal with. And I do appreciate the opportunity for retail investing. I want to make sure that it creates a good outcome, however, for the people who are using it. And right now, what I'm seeing is gambling on the stock market, and it's not a real solution to that income inequality. And I don't think we should pretend that it is. Just last June, when Hertz declared bankruptcy, after that, Robinhood was actively pushing the stock on its site. It was trending on Robinhood, and the promotion of that worthless stock, I don't think is good for investors. That's a gamble that they shouldn't have taken. That's just one example. But people having access to the stock market's nice, but if they don't have the money to invest, then really it's not democratization. And that's the real reason that 80% of the stock market's owned by 10% of the people. And of course, those are people who don't have to put all their money into healthcare or childcare or a car payment or whatever it is that's just keeping them going through their day-to-day. Earlier, Mr. Tenev, you said that you couldn't tell us what your client's rate of return is, but generally 99% of short-term traders underperform the market. So, Mr. Tenev, you say Robinhood's mission is to democratize finance. Is that correct?
That's correct, Congresswoman, yes.
Okay, so I want to ask you then, you've invested significantly in behavioral research, and just so you know, I own a digital design firm with my husband, so I'm familiar with what behavioral research can do for platforms and websites. And that behavioral research has really shaped how your app is designed. Is that correct?
Congresswoman, like many technology companies, we employ data scientists, user researchers, and designers to provide a better customer experience and
Okay,
understand our customers' needs.
So on the specifics, when people sign up, they get a scratch-off ticket to see what they get. Confetti falls every time they place an order. They get push notifications. They're encouraged to trade. If a friend signs up, they get a free stock, on and on. Why have you added specific gaming design elements to look like gambling to your app? That encourages more frequent trading.
Congresswoman, as I mentioned earlier, we want to give people what they want in a responsible, accessible way. We don't believe in gamification. We know investing is serious, and that's why most of our customers are buy and hold. A very small percentage of our customers utilize margin.
Well, I appreciate that, but you know, folks like my nephew actually aren't your customers. They're your product. Your customer's sitting right next to you, Mr. Griffin with Citadel. So when you don't pay as much for index fund or Apple or anything like that, your app to me shows me that you're really just trying to encourage more trades, which puts more money in your pocket, not helping people build equity through smarter investing. So I would ask you, Mr. Tenev, I'd ask two things. Who exactly do you believe you're democratizing finance for, and how do you plan to address these conflicts of interest?
Well, first of all, I believe in our business model, Congresswoman. I believe our business model has become the industry standard for a reason. It's because it's good for customers. It's led to the democratization of the markets, and it works. And we're very proud to route to market makers on uniform terms without taking into account any of the payments that we generate from them in the routing, and based purely on the execution quality they provide to our customers.
Mr. Sile is recognized for 5 minutes. Thank you.
Thank you, Madam Chairwoman, and thank you for holding today's hearing. I'm concerned about investors in the state of Wisconsin and across our country to make sure that they have access to the market, access that is fair and equal to the big banks and the hedge funds in Wall Street. And we've seen great improvements in access, the democratization in finance, and I'm concerned that these hearings are going to lead us down the path of additional regulations before we fully investigated the facts. It was stated earlier that may not be the case, and I'd like to have inserted into the record a Bloomberg article dated January 28th titled "GameStop Trades Show Need for More Regulation," Democrat says.
Without objection, such is the order.
Thank you. I think it'll be helpful for everyone to review that, with the concerns being that we're going to drift away from the democratization of our finance systems. Also, a bit disappointed that we don't have representation in our first hearing here today from the SEC or the DTCC, especially in the early days of the Biden administration. I think that that would be helpful, and hopefully we'll be able to have their participation in a future hearing. If I can direct my first question to Mr. Gabe Plotkin at Melvin Capital Management, there's obviously a lot of attention that came pouring in on a stock, GameStop, that you held a short position in. People were tweeting about it, things were building. Do you have any information as to uniquely why folks on Twitter and on Reddit and others uniquely targeted that stock?
First of all, thank you for the question. I think it's a really good one. I think ultimately, I'm not sure kind of how the momentum built around that. You know, there were certainly some signs, you know, as we kind of diligenced after the fact. I mean, there were even website names bought, like, you know, nasty things about our firm as far back as November. So I'm not sure kind of how it started, but I think ultimately they saw an opportunity with a very high short interest stock that a lot of people could relate to, you know, because it was a retail experience, and that's sort of the genesis of it.
Thank you very much. I'm going to shift gears over to Robinhood and Mr. Tenev, if I can. Is my colleague Mr. Gonzalez was talking about, at some point it became clear that additional collateral would likely be needed. How many of your customers owned GameStop stock or options on January 27th?
I don't have the exact numbers in front of me.
To suffice it to say, had it increased? Suffice it to say, had it increased dramatically over the days leading up to the 27th?
Yes, that's accurate.
Fair. And you saw additional order flow coming into this. Did you take any steps, and was it reasonable to believe that there would be additional capital requirements? And did you take any steps, either internally or working in concert with the National Securities Clearing Corporation, to mitigate the risk posed by the volatility before the January 28th collateral call?
We did. So on January 21st, we went to 100% market requirement for AMC. And that requires all purchases for those stocks to be fully paid for. So customers would have been unable to use margin to buy those. So that was January 21st in the case of AMC and January 26th for GME.
But this was still insufficient ultimately as related to the collateral call that came in the early morning hours on the 28th. Is that correct?
That's correct. The limiting margin was ultimately insufficient.
And as you look to your peers, do you know any other brokerages that were putting in place limitations on their buy orders?
Yes, I do, Congressman. I think that's an important question. Many brokerages put in place similar limitations on buy orders for many of these securities.
For the record, I've heard conflicting reports on that. I think it's something that this committee needs to further look into, is to the differential between what occurred under your control at Robinhood and some of the other brokerages. I think it's a question that we should fully investigate on this committee, make sure we have all the facts as we're moving forward. Could you detail, Mr. Tenev, your plans going forward as it relates to making sure that an event like this doesn't occur and that you have the foresight to prevent these late collateral needs?
Absolutely, Congressman. Thank you for that important question. Certainly, the additional $3.4 billion helps provide a significant cushion. In addition, you could see that between Thursday and Friday, Robinhood replaced the PCO, which was a position closing only setting, with much more granular position limits.
Congresswoman Axney.
I'm sorry.
Please, the gentleman's time has expired. The voice that you heard had nothing to do with what you were saying. I think it was a mistake. With that, the gentleman's time has expired, and we'll move on to Mr. Caston. You're recognized for 5 minutes.
Thank you, Madam Chair. Thank you so much to our witnesses. There's a whole bunch of themes in today's hearing, and I want to, if I can, just tie a couple threads together that I think are relevant that we've had corners of. June 2020, Alex Kearns, who was 20 years old at the time, from Naperville, Illinois, killed himself, largely thanks to a bug in the Robinhood system. The bug was that he turned on the app, said he owed $730,000 that he did not have because of options positions that he thought canceled out but didn't appear to. He called the helpline. The helpline, of course, was not manned, as we've discussed. He sent several panicked emails, 3 to be precise, did not receive a response. Ultimately, there was a response from the email saying that, in fact, his positions were covered, but by that point, it was too late because he had taken his own life. This is a gentleman who was 20 years old. Under Illinois law, he was not allowed to buy a beer, but he was allowed to take on $730,000 in positions and exposure that he did not have the liquidity to cover. Now, your mission, Mr. Tenev, is to democratize finance, but the history of financial regulation is to protect people like Alex Kearns from the system. As the old joke goes, if you're playing poker and you can't figure out who the fish is at the table, you should leave the table because you're probably the fish. And there is an innate tension in your business model between democratizing finance, which is a noble calling, and being a conduit to feed fish to sharks. I want to cover a little bit of timeline. December 2019, Robinhood was assessed a $1.25 million fine by FINRA for failing to disclose payment for order flow agreements to your customers. 6 months after that, Alex Kearns committed suicide. 6 months after that, December 20, Robinhood paid a $65 million fine to the SEC for, among other things, failing to disclose payment for order flow agreements to your customers. There's a tension in your model. Now, along with that, according to your 606s, as been reported by CNBC, you attract a higher rate for equity trades from payment for order flow from many of your competitors, 17 cents per 100 trades versus about 11 cents for your competitors, even more, over 50 cents per 100 trades for options. I'd ask unanimous consent to enter the CNBC article into the record.
Without objection, such is the order.
Question for you, Mr. Tenev. When did you start offering options on your platform?
Thank you, Congressman Caston. And first, let me say,
I'm just looking for a
sorry.
date. We're tight on time. When did you start offering options?
Options trading was offered starting in Q1 of 2018.
Okay, thank you. That's relevant because prior to 2018, your revenue grew basically linearly with user growth. Your revenue any year for your payment for order flow interview was about $10 per user per year. 2020, it got to $50 per user per year. So your revenue model went from growing revenue by growing users to growing revenue by growing revenue earned on the back of each user, consistent with taking on options. How many firms do you route options orders to, Mr. Tenev?
Congressman, we have 7 market makers. I can get back to you with the precise number for options under 7.
According to your 606 disclosures, you only list 4: Citadel, Susquehanna, Wolverine, and Morgan Stanley. Are there any others besides the ones listed in your 606 disclosures?
If that's in the 606, Congressman, I'm sure it's accurate.
Okay, so do you route options trades to anyone who you do not have a payment for order flow agreement with?
Currently, we have, Congressman, uniform payment for order flow arrangements with all of our market makers. So they would all be under the same arrangements.
Okay, so how do you ensure that you're getting best pricing if every single firm, you're ruling out anybody who is not paying you for the privilege to trade?
Congressman, we believe having uniform payment for order flow arrangements with all market makers ensures structurally that there is no conflict of interest, because it prevents payment for order flow from being an input in decision making for where to route orders.
Okay, I'm almost out of time, but there is an innate conflict in your model. Let's imagine right now that we are today's version of Alex Burns. I'm nervous. I think I've got an exposure, and I call your helpline now. Let's call and let's listen in the time we have remaining to what I'm going to hear on the other end of the phone.
Thanks for calling Robinhood. Please visit us at robinhood.com or on our app for support. If you have an urgent trading need, please make sure to include details of your order when reaching out. Thanks and have a great day.
Mr. Caston, you may wrap up.
Back my time.
You may wrap up. Go ahead, Mr. Caston.
I have no further questions, Madam Chair.
Thank you very much. I will now call on Mr. Gooden for 5 minutes.
Timmons.
Is Mr. Gooden on the line?
Madam Chair, Mr. Gooden's in Texas and he's unavailable to.
Oh, thank you. Thank you very much. Then let us hear from, I believe it would be at this time, Mr. Timmons. For 5 minutes.
Thank you, Madam Chair. It seems we're here today to try to find culpability in the events that transpired last month. I seem to spend a lot of my time thinking about capital requirements and the time it takes to execute these trades. So I'm going to focus my questions there. Mr. Tenev, you have repeatedly invoked capital requirements that both your company and your clearinghouse are required to abide by in order to explain the restriction of trading last month. My friend and colleague, Mr. Barr, asked you about this earlier, but I would like to hone in on this a little bit. Could you explain what specifically about the nature or volume of the trades being ordered by your customers caused these increased capital requirements to be triggered? And how did the level of collateral required compare to what you would normally have to abide by?
Thank you for that question, Congressman. So to give you a sense for the increase, our capital requirements, our deposit requirements with NSCC from January 25th to January 28th, so a span of 3 days, increased tenfold.
What is the most your capital requirements had been prior to this event?
I believe there was a table, Congressman, that I provided in my written testimony that had the precise value at risk and special charges in the prior days. Happy to
But
refer
obviously,
to that.
it never been close to this amount, and now you have additional capital that you've raised, and so this should not happen again. Again, I think you referenced 1 in 3.5 million was the likelihood of this situation occurring. Is that correct?
That's correct, and that's not a Robinhood number. That's actually a third-party industry number.
Are you aware of the origin of these capital requirements?
I do believe that these capital requirements, and specifically the NSCC deposit, was spelled out in Dodd-Frank.
So the Dodd-Frank Wall Street Reform and Consumer Protection Act is arguably to blame for what happened. You would not have halted trading in this case, but for this exorbitant capital requirement that you were unable to meet. So I think that when we're searching for culpability, we need to realize that the well-intentioned legislation from over 10 years ago is somewhat culpable in this entire conversation. Ms. Schultz, will you elaborate on that? Do you agree that Dodd-Frank is somewhat responsible for the situation that Robinhood found themselves in?
I think the capital requirements in Dodd-Frank can be seen as responsible. I think it's incumbent on us to evaluate those capital requirements and whether they are appropriate, given the business models at issue. I think that's also a question of settlement times and modernizing our system. But I agree that the capital requirements here put into place are one of the reasons that we're having these conversations today.
And you went to the next place I wanted to go, which is the time it takes to settle these transactions. So, 12 years ago, 10, 11 years ago, we never really considered the whole concept of a Robinhood, of an app-based trade platform that democratizes access to purchasing and selling publicly traded companies. So I do think that needs to be revisited, especially because it is unfair. There are other companies that have far more resources that are not in the situation, and those companies have larger investors. So we really are picking on the little guy in this entire conversation. So between reconsidering capital requirements for retail investor platforms, number one, and number two, trying to find a way to settle these transactions faster, those two things seem to be the best way to achieve our objective of making sure this doesn't happen again. I do hope that we can hear from Michael Bodson from the DTCC in the next hearing, or perhaps someone from the NSC. I'm hearing something strange on my computer. I'm sorry, 1 second. Thank you. I'll end with this. One of my colleagues across the aisle said the deck is stacked against the little guy, and I couldn't agree more. But in this case, the very committee that is conducting this hearing has more culpability, I would say, than any of the witnesses that we have brought before us today. So we need to make sure this doesn't happen again. I look forward to working with my colleagues across the aisle. With that, I yield back.
This
Thank you.
time has expired. At the request of one of our witnesses, we will take a short recess. The committee stands in recess for 5 minutes.
Any comments?
It's just like a farce.
It's been a nice break so far. I was hoping to hear Keith Gill speak a little bit more, or people that have good internet.
Look when that one senator said, "No, that's a deep, you know what value."
Right. Guam, the
That's
one
cool.
from Guam.
Yeah.
Testing, testing. Can y'all hear me? Testing. Right on. Guys, real quick, just wanted to pop in here and say, what's up? I miss y'all. How's everybody doing?
Yes, too. We're all good. Just a little, I think, dejected. I mean, I think this is what we expected, but
Yeah, it is a little weird, huh? It's kind of a gloomy situation that we're in right now. But I just kind of wanted to say one thing. What the heck is up with this dude reading off this dang teleprompter? This guy is
oh my
driving
God.
me crazy. Who is that guy?
He's the Citadel dude.
Okay, that makes sense. Okay, I wonder if he's just like that, because people are just kind of weird, right? But I wonder if like who's typing all this stuff out like as the questions are going in, because it seems like he starts off okay, and then mid sentence he just switches it up, and then he just starts talking like this, and then very robotic, weird. But then again, these people are they're all lawyered up right now, bro. Just they don't want to say anything. They don't want to say anything that's gonna incriminate anybody. So I mean, I get it, but man, forget them. I got diamond hands. I'm holding. I got AMC and GME at like 50 something, bro. I'm holding. Forget it. I like this stock. That's all I gotta say.
Yeah.
I like the part where the guy was trying to talk about his son has no job or anything. How could he get $1 million in leverage by accident on Robinhood? Not possible.
Mm-hmm.
Contestant, I'm Diamond Hands too, baby, and I got GME at 360.
Oh my God! You need to. You bought it at over $300 or $3.69.
$300.
I appreciate your question. I thank you for asking. I'm going to stick with my previous statement and tell you to just go fuck yourself.
Guys, can you please not use speakers inside the congressional hearing? I'm talking to you, Vlad. Turn your speakers off. We can hear the echo every time somebody talks to you, buddy.
Will come to order. Mr. Torres, you're
Why is that?
recognized for 5 minutes.
Thank you, Madam Chair. One of the concerns about payment for order is that it creates a perverse incentive for a brokerage firm like Robinhood to send retail orders not to the firms that provide the best execution to retail investors, but rather to firms that provide the highest payment to Robinhood. There's a concern about a conflict between the interest of brokers and the interest of retail investors. And that concern seems to have been vindicated by the conduct of Robinhood. SEC previously found that Robinhood misled its customers about how it makes its money. Both SEC and FINRA previously found that Robinhood failed to ensure the best execution for retail customers, depriving those customers of $34 million, resulting in a $65 million civil penalty from the SEC.
My first question for the CEO of Robinhood: how much of your revenue comes from payment for order flow?
Thank you, Congressman. Let me first state regulatory compliance is at the center of everything that we do.
I want to reclaim my time.
Things
How,
right.
how much of your revenue comes from payment for order flow? The answer to the question is asked, given the time constraints.
Congressman, I don't recall the exact percentage. It's over 50%.
And how much do you know? How much of your order flow revenue comes specifically from Citadel?
Citadel is indeed a important counterparty. It's our largest counterparty in terms of where we route orders to. And I want to explain that a little bit, Congressman.
Well, I want to move on because I do have to, I want to cover the concerns about gamification. The stated mission of Robinhood is the democratization of finance, but I worry that the real world impact of Robinhood is the democratization of financial addiction. You know, Robinhood has gaming features that seem to manipulate retail traders into making rash and reckless and potentially ruinous investments. We all know the tragic story of Alexander Kearns. According to a memo from the Financial Services Committee, there's one feature in particular that encourages retail investors to tap on the Robinhood app up to 1,000 times a day in order to improve their position on the wait list for Robinhood's highly coveted cash management feature. Do you share my concern that a retail trader tapping on a Robinhood app 1,000 times a day is a sign of addiction?
Congressman, that particular feature that you're discussing was to get access to our debit card plus high yield savings product, which is one of the many features targeting passive investors that we've rolled out over the past.
Mr. Tanev, 1,000 times a day? You are encouraging your customers to tap on an app 1,000 times a day? That to me is a sign of addiction, and it worries me that you fail to see it in the same light.
Congressman, we didn't encourage anyone to tap on anything. To get access to the debit card, people were placed on a wait list, and we wanted to give our customers delightful features so that they know that we're listening to them and that we care about them. And this is just one example of how we add great features that customers love to our products.
Look, addictive trading might be bad for your customers, but it's good for Robinhood. Addictive trading means more trading, and more trading means more money for Robinhood. There's a sense in which Robinhood monetizes addiction. You make money from the quantity rather than the quality of trading. I want to, much has been said about price improvement. One of the arguments for payment for order flow is price improvement. According to the Wall Street Journal, Citadel Securities claims to have saved investors a total of $1.3 billion last year. But I'm wondering, how can Citadel possibly know how much it saves retail investors? Citadel does not transact directly with retail investors. It transacts directly with brokers. And even if you stipulate that there has been a cost savings, it's unclear to me how much of that cost savings is being passed on to the retail investors and how much of that cost savings is actually being pocketed by Robinhood as profit. Right? We know that there's no commission, there's no visible fee at the front end of the transaction. But what is the hidden cost to investors at the back end of the transaction? Can you give me clarity about the hidden cost to investors? Mr.
Congressman, I appreciate the question. I think that's a very important question. In 2020, Robinhood provided our customers in excess of $1 billion in price improvement. So that price improvement is measured relative to the NBBO, the National Best Bid and Best Offer, which is the reference price per security on all major lit exchanges.
I ran out of time, so I will yield back. Thank you, Madam Chair.
Madam Chair,
Okay, we were having a technical problem here, but I think it has been corrected. Mr. Taylor, you're recognized for 5 minutes.
Uh, will point out that today and this week has been very hard for my home state of Texas and for my district in Collin County. We have faced a record-breaking freeze across the state, which has crushed our power generation capability, and we have had some really heartbreaking stories of need. In fact, during this hearing, I was called away to help a mayor try to get power back to their water pumping stations to make sure that they had water for their citizens in Anna, Texas today. So for those members of the committee, I encourage you to send your thoughts and prayers to the people of Texas as they go through this really challenging time. On to the topic of this hearing, Mr. Tennant, I just wanted to go in. I know there's been a lot of questions about the margin call that you got on the morning of the 28th of January. But I'm not sure that we really understand how the margin call changed from $3 billion to $1.5 billion to $600 million. Can you sort of go through how did you negotiate the margin call down? And I mean, and these are very sizable decreases, right? You're 50% to 50% again to something that you could then in turn manage. How did you decrease the margin call? I'm sorry, you're on mute. You're still on mute. I haven't been able to hear a word you said, unfortunately.
How about now?
I can hear you now. Madam Chair, can I have 30 seconds back for that?
Okay. Congressman, I appreciate the question. And first, I want to send my thoughts and prayers to the people of the great state of Texas. I appreciate you mentioning that. I'd like to just refer to my written testimony, which gives the detailed tick-tock of everything that happened. I believe pages 9 to 11.
No, I've read that. I don't. But like, did you go in and say, hey, you need $3 billion, but hey, I won't sell these stocks if you reduce it, and that's how you got to the point where people could only sell the stock, not buy it? Is that what you did?
I believe.
Because that's not in your written testimony. So I'm just trying to get your answer.
I don't believe we had made any decisions on PCOing the stocks between the initial 3 billion request and the subsequent 1.4 billion request. But between the 1.4 billion and the roughly 700 million, there was a discussion with between our operational team at Robinhood Securities and their relevant counterparts at NSCC regarding what measures we intend to take to lower the risk of our portfolio.
Okay, so in other words, if you had 3 billion, your customers would have been able to do everything they wanted to do, including purchase more GameStop. Is that correct?
I don't want to speculate on that. You know, if we had infinite capital, certainly. But I think it's also important to note, Congressman, that this was an evolving situation. We hadn't seen it before. We had no idea what Friday would have looked like had we been able to allow customers to buy these securities unrestricted on Thursday. So I think it's difficult to speculate exactly how things would have been different.
But I mean, isn't the reason they said you need 3 billion because your customers wanted to buy GameStop, and then by saying, hey, they can't buy it, they can only sell it, that reduced the capital that you needed? I mean, it seems to me that's what happened, but I'm just trying to get
it. They weren't saying specifically that nobody, I believe, didn't want our customers to buy GameStop. These are regulatory mandated deposit requirements, Congressman, that we had to comply with that were heavily influenced by the concentrated activity in GameStop, AMC, and the other securities.
Well, wouldn't it be fair to say that your firm was undercapitalized to allow your customers to do what it is that you wanted them to be able to do?
I think, Congressman, that in this case, certainly if we had the additional capital, we would have been able to ease restrictions or perhaps with sufficient capital, unrestrict altogether. I think it's important to note lots of other firms did essentially similar things, if not the same thing, in restricting the buying. So this was really more of a systemic problem rather than a uniquely Robinhood problem.
But didn't the fact that you went out, raised more capital so that you can actually answer this problem in the future, doesn't that also belie that you were undercapitalized on the 28th of January?
Again, Congressman, we met all of our regulatory capital requirements and deposit requirements.
Your customers wanted to buy the stock. You wouldn't let them do it because you didn't have the capital to allow them to do it, right?
Yes, we didn't have the deposit requirements.
I think that's really a core problem that I think this committee hearing has shown me is that you were unfortunately undercapitalized to help your customers do what they wanted to do. I yield back.
Thank you very much, Mr. Emmer. You're recognized for 5 minutes.
Thank you, Madam Chair. I appreciate it. Am I right side up? I believe I am. Mr. Gill, as was previously noted at this hearing, one of your colleagues at the witness table has as many as 5 people in the room with him. I guess, Mr. Gill, my first question for you is how many people are in the room with you right now? Mr. Gill?
0, Congressman.
Gone? Right. That's what I thought, Mr. Gill. And I just want to note for the entire committee that Mr. Gill is actually appearing before our panel by himself while many others are receiving significant, obviously underestimating the sophistication and the independence of these individual investors. Now, we've heard a lot of reasons for concern today. Some are legitimate, but also some proposed overreactions by members of Congress that could create even more problems. Attention has been given to the positive sides of this story. Other temporarily limiting its investors from trading, which deserves an investigation. What we saw was a movement of individuals investing to try to make money. I don't see what's wrong with that, even if that motivation is fueled by a desire to stick it to a hedge fund they don't like. Mr. Gill, you're the only retail investor involved in this GameStop situation on our panel today. Why, I don't know, but you are. Yet members on the committee have hardly asked you any questions. We've heard from a lot of the companies and funds involved in this event, but we've barely heard from the people that made this happen. Is there anything you would like to add to this hearing that you haven't been able to add yet, given that we're past the 4-hour mark on this hearing?
I appreciate that, Congressman. I do. I don't have anything to add at this time, just that I would be the first to acknowledge that investing in stocks and options is incredibly risky, and it's so important for people to do their own thorough research before investing. But that said, I tend to agree with you that folks should be able to freely express their views on a stock, and they should be able to buy or not buy a stock based on those views that they may have.
Hey, Mr. Gill, on that note, so how would you feel if these brilliant people that are asking you these questions today decided that you should not take the risks that you're making these thoughtful decisions on? What do you think about that?
I would probably ask for an explanation, Congressman, and to try to understand their viewpoint as to why they might think that, and perhaps we'd be able to talk through it.
Right. I appreciate it, Mr. Gill. I think we need to value the right of the individual to make decisions for themselves. And it's fantastic to see so many people getting involved and participating in the greatest financial markets in the world. We should be encouraging individual participation in the market by you and others. And we should want more people, more, not less, We don't need the people from the mountaintop deciding who's capable and who's incapable. We need more people having the opportunity to develop financial literacy, to build their own portfolios, to secure a safe and comfortable retirement, to grow their wealth so they can send their kids to college. And most importantly, in my opinion, we should strive for individuals to have the autonomy to do all that they themselves would want to do without having to rely on others or, God forbid, their government. I also want to thank Mr. Budd for using his time to mention blockchain technology applications in the post-trade settlement and clearing process. In light of this whole situation, it's important now more than ever that we utilize the technology that we have access to, and we don't have access to technology, and we do, have access to technology that is decentralized and can provide real-time trade settlements. Mr. Lynch and I have a nonpartisan bill that we will reintroduce very soon that concerns this. If we should exercise oversight of anything here, it's to ensure that individuals maintain access to our markets, individual investors, and discussions about over and undervalued companies only continue to increase. Unfortunately, average investors were locked out of the markets at a time of extreme volatility, while institutional investors were not. Well, I understand that a lot of what happened during this market frenzy came down to liquidity issues. Individual investors were in a vulnerable position and were at the will of online brokerages. We should be taking this time to discuss how to move forward in a way that promotes market access to all investors, just like it did last month. Congress clearly does not understand what credit is and how you utilize social media and catalyze the market movement. We've significantly
time has
underestimated the sophistication of America's retail investors, and we've not been focusing on improving market access.
The gentleman's time has expired.
Madam Chair, I appreciate
You're
your time.
recognized for 5 minutes. Mr. Lynch?
Thank you, Madam Chair. And speaking for the families of the 8th Congressional District, we just want the gentleman from Texas to know that we are indeed praying for all the good people of Texas. And hope you come out okay and get the power that you need. I do want to follow up with on Mr. Perlmutter's questions, Mr. Gill. I represent the 8th Congressional District, which includes Brockton, Massachusetts, your home. So I figure I more than anyone owe you the opportunity to respond. But you earlier said that that you began your trading in GameStop when it was around $5 a share, with the hope that it might go to 20 or 25. And I want to say I accept your analysis, your initial analysis that GameStop was undervalued, and I think your belief was sincere, and I think it was fact-based. And in your defense, we are talking about GameStop, right? It's a shopping mall retailer. We all know it. It's a well-known commodity. But at some point, the stock really takes off, right? It goes from $5 to $100 to $200 to $300. It gains escape velocity, as they say, and it ends up almost $500 a share. So we're still in the midst of a pandemic, right? And you can land a jumbo jet in the parking lot of the Westgate Mall in Brockton or any major mall in America, right? So no one's going to the malls. Nobody's feeding this company. And so it's up around $400, $500. Is there a role for someone to play here, for you to play, or the SEC or Robinhood to say, okay, this price dislocation has become detached from reality, and a note of caution might be given to other day traders and individuals, retail traders who might get jammed if they get into this trade. From your perspective, I mean, you've got a unique perspective. What do you think is the proper thing that should have happened? At some point, this thing got away from you and went totally into the stratosphere. And I'm just wondering what your thoughts are on how this should have worked.
Thank you, Congressman Lynch. I do know Westgate Mall quite well. I would say that just to be clear, I had thought that maybe roughly $20 or $25 per share. I had thought that at that time, but investment theses, they evolve over time. As the fundamental events change over time, it's important to update theses accordingly. And I had mentioned that it appeared as though the stock price had got a little bit ahead of itself last month. But there's a lot outstanding. There's a lot that has happened in recent months to suggest that GameStop could indeed turn around its business significantly. And one big element of that is indeed one of the largest investors in GameStop, Brian Cohen, and he has brought in some colleagues that could help him turn around this company. And fair value could indeed. Sorry.
Yeah. Okay, I'm going to reclaim my time. Ms. Schulp, I want to ask you, so we've got this convergence between fintech, social media, and the traditional markets. And if anything, the GameStop incident and the convergence of all this has demonstrated a certain vulnerability in our markets. And I'm just wondering if a loosely association of day traders could cause all of this upset in our markets. Isn't there a wider national security issue that's out there in terms of other people who might be nefarious actors who are actually intentionally trying to disrupt our markets? Isn't there a national security dimension to all of this as well?
Again, I can say that national security is not my area of expertise, but to the extent that the markets.
Something more specific then. So FINRA, you said earlier that you were with FINRA. They're under regulation SCI. Is it appropriate to put some of these trading platforms under that same regulation, which requires them to develop systems and policies that protect the integrity of their systems?
I think protecting the integrity of systems is important for all trading platforms, not simply the Robin Hoods of the world. We need to look to make sure that there is integrity on the platforms. And I would agree with that. Not necessarily SCI in particular, but having platforms that are strong is important here.
Okay, thank you. Madam Chair, I yield back the balance of my time. Thank you.
Thank you very much. We have a few technical difficulties and we'll be right back. And we are back. Thank you very much. Ms. Adams, you are recognized for 5 minutes.
Thank you, Madam Chair. It's been a very interesting meeting. I do want to thank you for organizing this. I think it's been certainly very helpful. Ms. Schulp, let me ask you, first of all, in the case of GameStop and AMC stocks, the prevailing narrative has been that a band of Reddit-inspired folks rose up against Wall Street, forced a short squeeze by professional hedge fund managers who were forced to cover their negative bets or risk catastrophic losses. But according to a JP Morgan analyst, several signs are pointing to institutional investors as big drivers of the wild price action on the way up. In your opinion, and based on historical data on retail investors' ability to move the markets, what is the likelihood that GameStop and AMC's market volatility was largely driven by institutional investors looking to ride the wave?
Look, I think these are questions that we are going to find out the answers to as we get deeper into the data. But I think that it's likely that at some point in this increase in value for all of these stocks, institutional investors were involved. Retail investors traditionally have not been able to move markets in the same way, but it's important to note here that these were not large stocks to begin with. This was not a massive increase in price in Apple or Google. It was GameStop, a much smaller company. So the ability of retail investors to have outsized influence here is entirely possible as well.
Thank you, ma'am. Mr. Griffin, Mr. Plotnick, do you have any thoughts on this likelihood as well?
Congresswoman, I believe you are asking one of the single most important questions posed today. And I believe that the decline in the short interest as reported over the 2-week period of time, that the US updates short interest reporting every other week, indicates that roughly, and I apologize for not having the exact number, but roughly 35 to 40 million shares were bought back by parties that were short the stock. This would be a dramatic degree of short covering that could cause a dramatic increase in the price of GameStop.
Okay, thank you. Mr. Plotnick.
Yeah, hi, thank you for the question. I think, I mean, I don't have the exact answer to your question. I do think it's worth noting that, as the stock price moved higher, there was a 3-day period where it traded almost 11 times the entire float. And so I think that kind of volume gave anyone who was short ample opportunity to cover and probably suggests tremendous either frenzied buying or institutional buying or some sort of combination. We did look at some of the options activity in the stock. And, on Friday, January 22nd, there was options that were expiring that would have equated to 35 to 40 million shares of stock ownership. So I actually don't think the short covering was the biggest driver of the stock. When you kind of look at the volume, I really think the biggest driver was the aggressive options activity, and then whether it was institutional or retail, just the collective buying.
Okay, Mr. Griffin, prior to the GameStop volatility in January, did Citadel have any investments in Melvin Capital? And if so, how much? Mr. Griffin?
So we first invested in Melvin Capital the Monday of the week in question. I want to say that was the 24th of January.
Uh-huh.
And prior to that, we had no investment with Melvin Capital. Obviously, Gabe Plotkin, by reputation, one of the best money managers of his generation, well known to my partners here at Citadel. Gabe actually trained one of my best portfolio managers that worked with me over the course of his career. So well known to my colleagues here at Citadel.
Okay, Mr. Plotnick, can you confirm that you worked at Citadel LLC before?
He trained my portfolio manager.
Okay.
Worked for Gabe at a different firm and then joined Citadel subsequently.
Okay, all right. So, Mr. Plotkin, can you confirm that you worked at Citadel LLC before eventually starting your own hedge fund, Melvin Capital, in 2014?
When I was 23 years old, I worked at Citadel for 1 year.
Okay. Did you solicit or receive any advice from Mr. Griffin during the GameStop volatility that occurred in January?
All my conversations with Mr. Griffin really centered around his investment in our firm.
Okay. And did you reach out to Citadel or 172 for significant investments?
The gentlewoman's time has expired.
Thank you, Madam Chair. I yield back.
You're welcome. Ms. Talib, you're recognized for 5 minutes.
Thank you, Madam Chair. Hello, everyone. I'm so glad that we're having this hearing. I'm super appreciative of the leadership of our chairwoman, of at least having some sort of transparency on exactly what happened. As we all know, the wealthiest 10% own 84% of all stocks. In fact, 50% of American families own no stock at all. I say this to emphasize that to many of my residents, the stock market is simply a casino for the rich whose gambling hurts pension and retirement funds. And when you all screw up, the people end up paying the tab through losses or bailouts. So I want to talk about the high frequency trading. We know about half of all stock trading in the US is done by computers. They analyze market activity and instantly complete trades at a profit. So this high frequency trading allows Wall Street traders to get ahead of transactions done by pension accounts and retirement funds. So Mr. Griffin, and this truly is a yes or no question, is Citadel's trading algorithm programmed to identify and trade ahead of large trades done by pension and retirement funds? Yes or no?
Congresswoman, today, virtually all trades executed by institutional investors are in the form of program trades such as VWAP and other algorithmic trades.
So that's a yes, right, Mr. Griffin? Just
No,
so it's clear.
I'm answering the question. It's a very complex question that deserves an appropriate level of answer.
Okay.
These VWAP trades are not large trades that you can, it's not like there's 10 million shares about to be bought. It is a trade is sliced into small slices, 100 or 200 shares, and executed over the course of a day, a week, or a month.
Well, help me out with this one. Does this increase cost, this kind of algorithm or whatever program to identify and trade, you know, the computer's doing the trading, does this increase cost for people who have pension and retirement funds? Yes or no?
So given that we, for example, manage money on behalf of pension.
Oh, well, I really, because they're so timed, this is not out of disrespect. We just got a limited time.
We use VWAP orders to execute on behalf of our hedge fund and have generated exceptional returns for pension plans and for endowments. So
well, I'm going to help you out. I'm going to help you out, Mr. Griffin. In effect, some estimates indicate that as a result of the high frequency trading, though, pension and retirement accounts pay nearly $5 billion in a tax. This means that Wall Street firms like yours engaging in high frequency trades are actually making money at the expense of my residents' retirement funds. So one way to ensure that this enormous wealth generated on Wall Street actually reaches the real economy, y'all, you know, what's happening right here in our communities and in my district, is to enact and look at proposals like a financial transaction tax. And let me tell you, according to recent polling, the majority of Americans, all of you need to hear this, and it's going to grow, the majority of Americans support taxing Wall Street transactions. Taxing them at just 0.1% would actually raise $800 billion over 10 years, which could fund programs like helping my district expand healthcare, nutrition, public education. I heard my friend from Texas, who we all are praying all the families will be taken care of, talk about access to water and electricity. But guess what? Right now in my community, it's so poor that I have families melting snow so they can flush their toilets because they have no access to water. So this tax to me would discourage risky and high frequency trading, unfair high frequency trading. Mr. Griffin, does Citadel's lobbyist right now been hired to oppose federal proposals to financial transaction tax because it would make high frequency trading less profitable?
So we firmly believe that a transaction tax will injure Americans hoping to save the retirement. I believe that Vanguard has publicly come out and said that we'd have to work about 2.5 years.
Well, I want to make this,
I'd like to finish my answer. I think it's important.
Oh, no. I'm reclaiming my time. The Hong Kong stock market, Mr. Griffin, imposes 0.2% tax on transactions as a result and sees little high frequency trading. But this hasn't stopped the Hong Kong stock market from thriving or becoming the third largest in the world after New York and London. So just to be clear, let's not gaslight the American people. Y'all be fine with the tax. And it's fair because let me tell you, our folks are tired of bailing you all out when you screw up and gamble with the retirement fund. And that's exactly what happens every single moment. And that's the reason why we're having this hearing, is that sometimes you are irresponsible and it's set up in a way that helps only the wealthy and leaves people like my community here with this large income inequality that I feel like never ever gets the bailout it deserves. Thank you so much. I yield.
Thank you very much. Ms. Dean, you're recognized for 5 minutes.
Thank you, Chairwoman, and I appreciate this opportunity for this hearing to get detailed information and to gather the facts as to what happened over the course of these transactions. So let me start by saying, and I saw that members on both sides of the aisle are interested in this question. The core question that I'm going to be asking is, what did the customers know? What did the users know? And when did they know it? That's the theme of what I want to ask, because I believe if we understand what happened and what they knew and what they didn't, we're going to be able to prevent some of the harm in the future. So let's go to the narrative. Mr. Tanev, I want to take a look at your page 9. You said that at approximately 5:11 a.m., Robinhood Securities received the automated notice saying that you had a deposit deficit of approximately $3 billion. You then said between 6:30 and 7:30 Eastern Standard Time, Robinhood decided to impose the trading restrictions, meaning no more purchases of GameStop. And you said in your testimony, in conversations with NSCC staff early that morning, you notified NSCC of your intention. In that time period from 5/11 to the time you were having the conversations, what did you tell your users? What notice did they have?
Thank you, Congresswoman. I believe during that time period, shortly after the restrictions on purchasing of these relevant securities were made, we communicated to users, to our customers, that these securities would be restricted from purchasing. And then subsequent, we issued blog communications and communications on social media explaining the reason being enhanced deposit requirements due to high volatility.
I'm going to ask you to be much more specific, because in your testimony, you wrote that you offered 3 different ways of notification. You said that first, the notification to your customers was what they agreed to in their customer opening agreement. That was your first backstop, which who knows what that boilerplate said or when customers or users agreed to it. Number 2, you said they were notified 2 days later by SEC alert. And we know what that SEC alert was. It was quite general, much more vague. Then number 3, you said you also list a more ambiguous mention of targeted messages to customers. When did you specifically send your customers an alert? This is what we have had to do because we were short capital. When did you do that? What time? What's the clock?
I believe, Congresswoman, that happened at several different points in time. There was a blog post that was published in the afternoon Pacific time.
What
I don't recall the specific time. Maybe it's in, perhaps it's in my written testimony.
Would it be after the SEC notice? It seems to me you didn't notify your customers for at least 2 days. You relied upon the SEC notice 2 days later. Would I be correct?
Congresswoman, that's inaccurate. Customers were notified several times on that day, and they were notified of other restrictions as they happened days prior to January 28th as well.
But you don't say what those notifications were in your testimony. What did you notify them? Specifically, what would I, a user, have heard from you immediately upon your imposing the restrictions?
So, Congresswoman, immediately upon imposing the restrictions, customers would have received communications saying that they would be prevented from opening further positions in the relevant securities. Later on the day, on January 28th, around early afternoon Pacific time, we published a blog post that explained that the decision to restrict these securities was due to collateral requirements at NSCC and clearinghouses, and not on the direction of special interests or hedge funds.
Forgive me, let me interrupt you there. You admitted to making mistakes. Specifically, what mistakes did you make?
I admit to always improving, and certainly we're not going to be public. We're not going to be perfect, and we want to improve and make sure that we don't make the same mistakes twice.
But what were those mistakes? That's what we're here to learn about.
I think that, thank you for the question. It's an important question. On Thursday, we did restrict the buying of these securities. On Friday, we imposed position limits, which I believe was a much better long-term solution, one that we'll have in the future if anything like this happens again. We also raised $3.4 billion in capital to allow our customers to
Thank you. I yield back. I see
trade
my
what they
time
want.
has expired. Thank you very much, Mr. Tanev.
Thank you very much. With that, we'll go to Ms. Ocasio-Cortez for 5 minutes.
Thank you so much, Madam Chairwoman. Mr. Tanev, Robinhood has engaged in a track record of outages, design failures, and most recently, what appears to be a failure to properly account for your own internal risk. You've previously tried to blame clearinghouses for your need and scrambled to raise some $3.4 billion in a matter of days, but you've also, blamed a lack of industry-wide real-time settlement, or rather a lack of that settlement of trades. But Robinhood's requirements for margin have long been far more lax than other brokers for a long time, with in December, just a couple months ago, you bragged about having some of the most competitive rates in the industry. And this is evidenced by your recent decision to raise those requirements. When Robinhood prohibited its customers from purchasing additional shares of several stocks, other brokerages merely adjusted the margin requirements on these stocks. So, Mr. Tanev, given Robinhood's track record, isn't it possible that the issue is not clearing houses, but the fact that you simply didn't manage your own book, or failed to appropriately manage your own margin rules, or failed to manage your own internal risks?
Thank you for this question, Congresswoman. Let me address the margin point, because I think this is an important one that has been under discussed. So in December, when we lowered our margin rates to 2.5%, one of the details that I think was missed is that most other brokerages have tiered margin rates, where the wealthier customers pay much lower margin rates than lower net worth customers. So you'll have someone that has $10,000 paying 9 to 10% for margin, whereas someone with $1 million pays 2%. So our approach was give everyone a uniform rate so that wealthier customers are not advantaged with lower rates than lower income customers. And I think that's a unique approach in our industry and is representative.
Thank you. I have to apologize. I have to reclaim my time for questioning. As many of my colleagues have also pointed out, Robinhood generates much of its revenue from the payment for order flow arrangements with market makers like Citadel, as well as Two Sigma and Virtue. And in 2016, the SEC highlighted ways that the payment for order flow created a, quote, potential conflict of interest with a broker's duty of best execution. And then one of the ideas that the commission floated in 2016 for addressing these conflicts of interest was to require that brokers pass on the proceeds of a payment for order flow. Now, earlier, one of my colleagues, Representative San Nicolas, said that Robinhood owes its customers a lot more than an apology. And I happen to agree with him. I believe that the decisions made by you and this company have harmed your customers. Mr. Tanev, would you be willing to commit today to voluntarily pass on the proceeds of the payment for order flow to Robinhood customers?
Congresswoman, I appreciate that question. When the statement you refer to was made, I believe 2015 or 2016, it was before Robinhood forced the entire industry to drop commissions and replicate our business model, which made payment.
So is that I should take that as a no? You're not willing to pass on the proceeds of payment for order flow to your customers?
When the other brokers dropped,
I'm just talking about today, right now.
Payment for order flow, Congresswoman, allows for commission-free trading. In the context of trading commissions, it's a much larger source of revenue in the past than payment.
Mr. Tanev, I apologize, and I don't want to be rude. I just have limited time. But if removing the revenues that you make from a payment for order flow would cause the removal of free commissions, doesn't that mean that trading on Robinhood isn't actually free to begin with? Because you're just hiding the cost in terms of potentially poor execution or the cost of lost rebates to your customers.
So certainly, Congresswoman, Robinhood is a for-profit business and needs to generate some revenue to pay for the costs of running this business. People were initially skeptical that the model, even with payment for order flow, would work when you remove commissions. And I think we've proven that otherwise by making this the standard model by which brokerages operate now.
I see. Okay, Mr. Tanev, I have to move on very quickly. I have a timeline question here for Mr. Plotkin. I see that earlier your testimony today was that hello. Earlier, your testimony today was that Melvin Capital had not engaged in. Sorry, Madam Chairwoman. I'm sorry. I think you're not muted. Sorry about that. Mr. Plotkin, earlier today, you mentioned that Melvin Capital had not engaged in a naked short of GameStop, and Melvin closed out its position on GME on the 28th, correct?
I'm sorry, the gentlelady's time has expired. But we have to go to Mr. Auchincloss for 5 minutes.
Thank you, Madam Chair, and I want to thank our panel for being with us through a very substantive and long afternoon. I think I might be a welcome face for them because I, as the most junior member, I'm the last one to ask questions here. And I want to talk with Mr. Tenev about options. I agree with what other members of the committee have said in both parties about the value of democratizing access to assets, and that we should give latitude for independent retail investors' judgment. But in fields where there is an information asymmetry between the user of a product or a service and the provider of it, there's always a professional code of ethics around that. When you go to the doctor, when you go to the lawyer, there is a code of ethics wrapped around that interaction that protects someone who doesn't understand as much about the service being provided. And in finance, as you're well aware, there's a fiduciary responsibility to do what's right. In Massachusetts, where there's 500,000 users of Robinhood, we hold broker-dealers to a fiduciary standard, and the Secretary of State's Securities Division filed a complaint against Robinhood for violating that fiduciary standard. And so some of it was premised on options. 2/3 of customers approved in Massachusetts for options trading identified as having limited to no investment experience. And so the first question I would ask you, Mr. Tenev, and please take no more than a minute, is what do you think is the appropriate amount of financial literacy that a user should have before they should be allowed to trade options?
Thank you for the question, Congressman. Let me first say that Robinhood really pioneered commission-free and zero contract fee options trading. And I think our market leadership in this space is due to the fact that we not only provide that access, but have improved upon the safety of our product in several ways over the past few years. Number one, we don't allow undefined risk options trades. So no selling of naked calls, no undefined risk. Number two, we made several enhancements to the safety of the product over the past year, including the ability to perform an instant in-app exercise of an options position, clarifications around the user interface, live customer support by phone for urgent options cases. So we've actually proven and are committed to improving in the future the safety of our options offering.
But to be clear here, options are decaying assets. They're binary in outcome. So they are qualitatively and quantitatively different than stocks and bonds in the sense that you can lose all your money very fast, and you can make a lot of money very fast as well. But this is getting very close to gambling, and especially when you gamify the options buying experience, as your app does, it can very quickly turn into a casino-like feel. And so I'd ask you just to address the question again, what level of investment sophistication do you think a retail trader should have before they are buying options?
Sure, Congressman, I appreciate the follow-up. So I should first say there's strict FINRA rules and regulations governing who gets access to options that, of course, Robinhood complies with. I also should note, we're in a competitive market. You know, several others have mentioned Chinese-based brokerages, other brokerages that are essentially offering similar products, all having to comply with these regulations. So we're certainly willing to engage in a discussion about how rules should change, if at all. And as long as they're applied uniformly and are fair to small investors and not just benefiting high net worth individuals and institutions, we'd be open to having that conversation.
The standard for my constituents in Massachusetts is not going to be what the Chinese regulators think is appropriate. It's going to be a fiduciary standard. I regret that you really haven't addressed the question. And so I guess I would ask a separate one, which is, would you commit here to offering a higher in-app threshold, including but not limited to financial education before allowing people to purchase options?
Again, Congressman, I'd be happy to engage in this topic substantively. I think as long as those requirements are uniformly applied to all brokerages and not just startup brokerages or brokerages catering to small investors, we're open to having that conversation.
Well, the fiduciary standard is applied equally to all brokerages, and yours is the one that was singled out by the Massachusetts Securities Division as having violated that, given the way that your users are using the options. I will cede the balance of my time, Madam Chairwoman, and I thank you for arranging this.
Thank you very much. And with that, Mr. Garcia of Illinois, you are recognized for 5 minutes.
Thank you, Madam Chair and Ranking Member for the important hearing. Long, it's a long day. I wanted to ask some questions to Mr. Griffin. Would you consider, Mr. Griffin, your firm successful? This is an easy yes or no.
Yes, I would consider Citadel to be successful, and I would consider
Yes, sir.
Citadel Securities to be successful.
And of course, I'd agree that you've done pretty well for yourself. As you mentioned earlier in your testimony, your company handles over 40% of retail trading. Did I get that correct?
Citadel Securities is the largest destination for retail order flow in the United States. It reflects the execution quality that we give.
And Citadel is a leading market marker for interest rate swaps as well. Is that correct?
Due to the great work of the House and Senate on the back of Dodd-Frank, where we permitted competition to exist in the interest rate swap market, and I'm grateful for that opportunity to compete in that market. We are now a swap dealer at Citadel Securities and a significant participant in that market. And I'd like to express my gratitude
Very well.
for Dodd-Frank's derivatives reform.
Good. Your hedge fund managers, do you manage over 30 billion? Is that correct?
Congressman, yes, that is correct. We manage approximately $35 billion of assets
35?
for pension plans, for endowments, for colleges, for charities.
Okay. Very well. That's pretty significant. I'd say that's a lot. It seems to me that your company is systemically important to our financial system. Would you agree with that?
I believe that we play an important role in the U.S. capital markets. I believe that our hedge fund would not be in the category of systemically important. With 30-some billion dollars of equity, it is simply not at the scale or magnitude of a JP Morgan, a Bank of America, a Wells Fargo. And in particular, having worked on these policy issues with members of the Fed in various contexts, we don't have to make payroll on Friday.
Okay.
Bank of America doesn't make payroll.
But you're doing pretty well. And yes, you're not one of the big guys that we have visit us frequently, at least a couple of times a year. Is Citadel Securities, you were fined recently by FINRA for trading ahead of customer orders in the past? Is that what I heard from a couple of questioners earlier today?
I believe this was brought up earlier, that we paid a fine to FINRA for trading ahead in the OTC market back in the, let's say, roughly 2012 through 2014. It was due to a systems failure. Now, we have no tolerance internally for having made such a mistake. We have, of course, have taken actions to rectify such mistake.
Okay, but that did occur.
That did occur.
Okay, so it's okay. I appreciate that. It seems to me that the retail investors using their savings are not exactly an even match for a complex, deeply connected firm like Citadel. Would you agree with that?
I don't actually understand the premise of the question. Retail investors who do good research, and one of our fellow panelists said earlier, many retail investors have understood the game-changing technologies unfolding before us, electric cars, solar energy, and have done extraordinarily well investing their assets into these newly emerging parts of the economy.
Okay, and your firm has done, and you've personally done well during the pandemic, right? There hasn't been much of an adverse effect on your firm?
Congressman, we've all been adversely impacted by the pandemic. I think all of us long for the return back to life as it was a year and a half ago.
But you haven't done badly, right?
So there are two dimensions to this. There's the personal impact on everybody, and we've all had to deal with
Right.
loved ones, with family.
But
with
in terms
friends.
of your bottom line, sir.
Our bottom line over the course of the last year has been successful, sir, Congressman.
Okay, good. That's what I thought. Is it true that last year in Illinois, you were involved in an effort and you spent like close to $50 million to defeat a tax increase in Illinois that would have forced the big income earners like yourself to pay more in taxes in Illinois, a progressive tax?
The gentleman's time has expired. I
Thank you,
believe
Madam
that
Chair.
all members on the platform today have been heard and had an opportunity to raise their questions. And so before we get to closing statements, I would like to ask unanimous consent to enter letters into the record from the following entities: Better Markets, Public Citizen, Depository Trust and Clearing Corporation, and Healthy Markets. So without objection, it is so ordered. I now yield 1 minute to the gentleman from Missouri, Mr. Lukemeyer, for brief closing remarks.
Thank you, Madam Chair, and thank all the witnesses for being here today. I thought you all did a great job, and we really thank you for spending time with us and educating us on the market and all the activities surrounding GameStop investing and short selling. I'd like to reiterate the ranking member's commitment that the House Financial Services Committee Republicans stand ready to work with the majority to continue to provide oversight on and investigation of the GameStop activities. And going forward, I hope that we always have an eye towards protecting and giving more choice and access to America's everyday investors. With that, Madam Chair, I yield back.
I now yield myself 1 minute. Today, the committee has heard firsthand from this group of witnesses about their roles in the market volatility in late January. This hearing has allowed us to begin to assess what transpired and whether our guardrails have not kept up with the rapid changes the markets have experienced. For example, I'm more concerned than ever that investors are being fleeced and massive market makers like Citadel may pose a systemic threat to the entire system. The committee is going to continue to examine these issues. Our next hearing will include securities market experts, investor advocates to discuss the policy issues that are involved and potential solutions to problems with our system that these events have illuminated. I will also convene a hearing to hear testimony from the regulators, including the Securities and Exchange Commission and the Financial Industry Regulator Authority, that is FINRA. All of these hearings will inform the committee's role and help us to determine potential legislative steps to protect investors and ensure Wall Street accountability. With that, I'd like to thank our distinguished witnesses for their testimony here today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. So I ask our witnesses to please respond as promptly as you're able. So without objection, all members will have 5 legislative days within which to submit these extraneous materials to the chair for inclusion in the record. And I sincerely thank you. And I want all of us to pay attention to what is happening in Texas and to do what is necessary to be able to give assistance to all of our people, all of the families in Texas that are experiencing this very, very difficult time. Thank you so very much. This hearing is adjourned.
God, wow.
That went past the market close. That's so crazy.
He's gonna talk about Doge.
Doge.
She
Doge,
should.
baby.
She should shoot up more.
Where we at now?
So
Oh, it's looking good. Look at that.
I missed a portion because I had a meeting. Damn meetings. Why am I so
Fine,
slow
I did
today?
too.
So what did they say about blockchain, and did they discuss any like of the strategic fail to deliver?
I don't think that was part of the what they're going to talk about.
They didn't really talk much about fail to deliver, but somebody did mention that with blockchain you could have more real time, so you could have instant settlements. And I would like to do that instant settlement. You trade using Bitcoin, and then you can get in and out of trades a lot more frequently than just the regular cash account where your funds have to settle.
Would it be considered a cash account, or would I guess it would, right? So you're not restricted to that the day trade limit.
So, well, I mean, if we went to T+0, they wouldn't be able to have IOUs anymore. Like that would solve the phantom share issue.
But yo, AOC was so funny. She was like, "You gotta give us some of your profits," and I was like, "What? That's nuts. That's crazy. You crazy, AOC." Because that's like, yeah, I realize like that's how Robinhood makes their money, right? I think like
Yeah. I
Melvin
think your
accounts
speaker's
for.
on in the background. We're hearing an echo. Meaning the
My bad.
YouTube.
Yeah, I was watching the stream. But yeah, so like I was like, that's like depends on how much of the profit they'll give us, because I don't know how much Robinhood's like amount they get from their transactions are, but like that would like basically almost bankrupt them.
I mean, I really don't care about all these payment structure and how they structure all that through. What I want is to be able to see the actual data of what's happening. Like that's where the problems lie.
Yeah, there's no transparency.
Yeah.
And I
If we
feel
have
like
to
that's
pay
kind
a
of
few
like
cents more, I don't care.
But they're skirting around that sort of without actually saying what the solution should be. I think it was mentioned a couple of times about transparency. I think that's what Roaring Kitty mentioned is the answer is transparency. Yeah.
That's what he would like, but the biggest issue that most of like the Democrat or like not even the politicians were talking about, they were pushing taxes. So they're basically like, oh, should we
Yeah.
tax this or should we tax this? I was like, I mean, I don't care about
Nobody wants
taxes.
taxes.
I just want like a better environment to trade in, you know? Like I want an environment that's like intuitive to like us as the retail traders.
I
Right?
don't want it to be taxed. Retail investors should not be taxed. What they're talking about there, like I think Talib mentioned high frequency trades and how they impact the market and how they can manipulate. And I think there's an article out there somewhere that really got into how much pensions end up paying in the long run as a tax because these stocks and the mutual funds and all this are being used by the hedge funds to make profit for themselves. So I think if there was a little bit more research done in that, high frequency trading would not impact or tax on that would not impact the retail investors. Of course, that's what they always try to do is they try to tax the retail investor rather than the people who are up there making the money.
Yeah, but so day trades would be taxed and
No, we
swing
don't want to be
anything
taxed.
longer.
It'll probably
No.
if it did impose something like that, it will probably be like you're set to a certain number of trades a day before you're subjected to a tax rate. The reason why
Right.
like it's a thing is because like a lot of these like larger companies, they don't actually have a person to like look at it and then like determine it. It's just a program saying, oh, if this stock goes up this percent, we'll set a limit, and then we won't do all the trades at one time. There will be like multiple trades throughout the day. So the number of trades, and then they make a commission based on the number of trades that program does per day or whatever. So
That's exactly it. That's how the pension funds are
Hey,
getting
real
taxed.
quick. Dogecoin is kind of going up, right? So,
Yes.
Robinhood just put a scheduled maintenance on any order. Yeah, they say it says Dogecoin trades may not execute right now. We'll be back by February 18th, 2021 at 4:45 p.m. or earlier.
It's 5:30.
I think that's different time.
Oh, are they based in? They probably are.
No, it's just whoever's app.
It's in his time zone.
Oh, okay. Okay.
No,
It's
yeah,
like 2:30 where I am.
Right.
I was like, dude, it's like after hours.
Let's look at the volume on that, and this candlestick's looking pretty.
Of course, you know why Dogecoin's rising, right? I just sold my stake in it, and then it just skyrockets. It's happened all day today.
Wait, was there a tweet? Like, I need to know because I was watching this all day.
No. I sold what I had. That's why it goes up. When I buy, it goes down.
Oh, okay. I thought there was like a. Oh, okay. Yeah. You should sell again so I can bump up some more.
Seriously, I got to my break-even point. I'm like, you know what? Forget it. I'm just going to sell it. And as soon as I do that, the next bar is a freaking obelisk.
Hey, you did say that last time, right, Project?
It's been happening all week, man. God, this morning, I was in a stock pre-market, great position. And during the market, I get a little antsy, so I put a stop loss, which is fine. It's going up. 2 bars later, it seeks out my price stop loss and then continues going up.
Hey,
oh,
Thor.
it's been interesting.
Thor.
Oh, Craig, did he really tweet something about Doge? Is that why it jumped up like freaking 20%?
Oh God. Thor, your mic is open. Thor.
Yeah, Tame. I really think so too. If there was like a high frequency tax or whatever, they'll probably bleed it onto us or other consumers.
The high frequency tax would be directly to us. They trade less than us, generally speaking. There's more of us. There's like more of a tax to us than them.
No. That's not us. High frequency is the automated programs that are doing that. The programs that they're running. That doesn't apply to the retail.
No, but that's not how it would apply. They're way too retarded to get that granular on that level of fee.
Yeah, they'll. No, what Tame is saying is the hedge funds will pass on that tax even if it didn't occur to us, no matter what happens. So
They
that's what he's
always
saying.
do.
Yeah, so like
That's when trickle down works.
yeah, basically yeah, that's exactly.
They
it.
always factor in the
Okay,
fees.
Yeah.
Yeah, that's one thing that I don't think would really go too
Elon needs
well
to
in
do a
our-
little
on our
bit better
part.
with tweets, man, because I need to hit past 6.5. Okay, come on, Elon.
You know, some of the people on that committee, honestly, it's sad for America. Some of the people on that committee, we could have had such better questions, such real, real discussion.
We
They
need
got to the heart and
create our
fix of
own
the problem.
questions and blast the exact same document to all of the reps on that committee.
Should we have you, dude? I think you've like won the audition, right? Because that's what like AOC did, right? She auditioned for the spot. They got her funded, and now she's a politician. You sound pretty good. We could do that. We could fund you, right?
Fun.
Sure, but I want to be governor of Nebraska.
Nebraska? Oh my gosh, we need you somewhere that's like taken over by commies.
California.
Yeah, that's true.
No, we already have the communists. It's communism for corporations.
Well, I know.
Yeah, all corporations are dictatorships.
They get
Oof.
all the tax breaks. They get all the loopholes. They get everything. We have socialism in this country,
That's
just
not
not
necessarily
for the
true.
individual. Oh yeah.
What do you mean they
I mean,
get
if
all
we're
the
gonna- if
tax
we're gonna-
breaks and we don't?
If we,
I got
Go-
kids. I
go
got mad tax breaks.
Go look how much corporations pay in taxes. It's usually 0 or negative.
Yeah.
Or a Lamborghini
So
for
the
tax write-off.
corporations that are doing well provide incomes for like how many potential thousands of individuals?
we're gonna disagree on this. Obviously.
Well, so do you think everything
Yeah, they do. but-
everything can't be a personally owned company? That's what stock is. That's why you're here.
is
You're
not
literally putting
Reaganomics.
your money on that.
The thing is with the bigger companies that pay no tax is that they keep wages severely low and they pay their CEOs more and more.
Yes.
And the line between
Yeah.
what the retail worker makes and what the CEO makes is getting exponentially larger.
You get
Yet
paid in
we are
stocks.
paying the same amount in tax and they keep getting tax breaks.
Well, so here's the thing though, under
The news that
the
went out
last
today about
administration, my wages went up so high that the managers all wanted to do my job instead because the higher ups were getting paid less. Like even the tops, same healthcare, same everything. They were on the exact same.
I
I don't know. It's pretty.
Like, I was making the same that my father was making in 1985.
Wow,
You know,
he must have been
it's the
so
same.
goddamn rich. Inflation
No, but you know
fucked
what
you.
I'm saying that what I'm trying to say is my dad, as an immigrant, at the age of 35, like he came to this country when he was 24, he got married, he worked on Wall Street, at the age of 35 was able to buy a house, right? I am first generation, born here. I am making the same salary as he did in 1986, and that salary does not buy anything.
Okay, but why?
So, and the thing is that, yes, we have that, but the thing is that you're talking about a
Trade
$15
deals.
minimum
Trade
wage.
deals are the key.
You
When
know, like
you squander your entire GDP on a shit trade deal and billions go out the window, it doesn't matter how hard you try. That gets sold out the window.
we're gonna have a difference of opinion on this. Our ideology.
$500 billion a year
Here.
deficit is not
$15.
arguable.
Now, look, I make a decent amount, you know, I got laid off, but like a $15 minimum wage does nothing. Walmart just did that today. Their workers are they're on social welfare programs. The American taxpayer subsidizes the riches of the 1%. We subsidize.
Well, $15. I mean, you don't want a
CEOs.
standard, right? Because you want to be able to have the market choose the price that
You
people
don't
get
want,
paid,
you
right?
don't, yeah, okay, that's what you believe. No, because the market with corporate capitalism, this is what it's
What?
Fuck
You're
the
crazy.
people. They fuck the people. They fuck the people. That's it.
Hey,
they keep taking
So
and
communism? So
Hey,
China?
so they won't.
China's the answer?
So they won't.
Nah.
So they won't get rid of a lot of the more employees. They won't get. They won't get rid of more employees. Like, aren't they? Isn't Walmart going to get rid of a few employees now since they're going to be paying $50 an hour now, like to every employee they have?
There's no way. They got to still stock those shelves.
Yep.
Oh, so I went to Seattle and there's like no more cashiers in McDonald's. It's literally just the machines. So that's what they're gonna do. They're gonna bring it over.
Ridiculous.
So
Meanwhile, in other countries, in European countries, they're paying
False.
more. And no. $15.
European countries don't have a better standard of living. You cannot argue with that.
Yes, they do.
Just can't
Oh, yeah.
argue that.
They-
No.
Yes, they do.
Depends on where
I've
you're at
heard both.
specifically,
I've
but
heard
in
both.
general, no, they do
European
not.
people say
That's
that.
simply not
Yes,
true.
they do.
Ooh, the stocks suck. Yeah. Ooh, yeah.
No. All of those European countries, almost all of them have a better standard of living. They have better retirement.
That's a
They
lie.
have better healthcare. No, have you ever I go to Europe like multiple times a year. I have friends that live there. Like they have way better standards.
Maybe in like half of Europe, but if you look at it this way, half of America is still bigger than half of Europe.
More Americans experience a better life because of freedom than anywhere else in the world. You can't argue. You can't argue.
We have freedom. Freedom doesn't pay the bills. I'm sorry.
We have freedom that
Yeah,
is
but
highly
freedom.
regulated.
It's all in people's grind, and it's all.
Freedom has been eroded,
So let
but
me
you
ask
just
you-
gotta
topic we're going into.
target the eroders.
So what happened in Italy? Their healthcare failed all their old people when COVID hit.
Truth.
What happened
the
to
bigger
Cyprus? What
issue
happened
with-
to Greece, Slavia,
The
Malta,
bigger-
Monaco, Vatican City, Montenegro, Andro, Kosovo? You're only thinking about the good
Shit went
European
down.
countries.
So you're
thinking
talking about
London.
Eastern Europe.
That's
All of you
still
about
Europe.
Eastern-
The biggest issue
Yeah.
with Italy, though, was the fact that they were first, and we
Isn't-
knew little to no
What?
information.
Didn't everyone just get government jobs and not actually be productive shit? That's what I mean.
That's
That's what I heard.
no. So
definitely a
like, okay.
difference
So
when you
here's
look
the
at,
thing.
like,
Look at it. Stupid ass push to talk. If you're gonna hire somebody to do a job, right? Are you gonna hire a private company? Are you gonna hire somebody that's like a government private part, like a government and a private company combined, or are you gonna hire the government? Who's gonna give you the best bid on that job?
Probably a private company, unless it's for me sending mail. Then I go with USPS.
Like almost every time, it's going to be the private company, right? Like almost every time.
Right.
So that's why you don't want the government running your shit. They shouldn't be taking more of your money. For why? Because they're going to spend it better than you. I do not believe that. I simply do not. You should be spending it like we are on this GME squeeze and using your dollar exactly where it hurts the most
So
when
our money goes
when
to
it
like
matters.
offshore accounts and like the Cayman Islands, and like they just funnel it like Eric Prince did, and then go to
become a political
Dubai.
topic.
Like
Let's all calm
really,
down.
come on.
What do you mean? No, if you have your money, they can't
No, we
take it.
have a
That's my point.
difference of opinion.
No, the
Even
more you're
so, like,
taxed, the more of your money
topic,
you
we go
don't
back to
have.
stock. We're gonna.
Well, I mean, it's
like,
simple
I'm
math,
telling
right? You tax higher,
we
you have
have
less of your own money, right?
we have a fundamental difference of opinion. You have yours.
So you
I have
think that
mine,
you should
and there are
spend other people's
differences of.
money more efficiently than
No,
them?
I'm saying that I think we should
This
go
is
back to
basically
stocks
the
because we're
Republican
not
versus
going
Well, that's what
through
you're
all of
saying.
this here.
like
Yeah, I think that we should go back to talking about stocks.
Hey, well, this is
You-
Discord. Hey, well, this is Discord. So I mean, this is part of the game.
If we go back to
Nobody
stocks,
should get mad.
yeah,
It's still, yeah, it's all.
I mean, you guys are both
No,
right. You
I'm
need
just.
both of them, but you have to have some tax in order to support certain people.
I don't
I
know
didn't
if
say
it
no
needs to be a
tax. I did
tax,
not say
but
no tax. That is not what I said.
The biggest problem is that we supposedly are giving tax cuts or taxing the
Well,
wealthy
so
less.
well,
they're
so
paying
under
less
under the
because they're
last
trying to
tax cut that
trickle
we
in.
got, right? The lowest 10% of wage earners in this country got the highest increase in return from that tax cut. So when they say he's getting a big tax cut for the wealthy, that's just simply not true. The lowest income
It's not that they
earners
get a tax
earn
cut.
the
have to
most,
have a
and that's well. But
job.
listen, hear me out. Hear me out. That's how we're in this position. Okay, that's how we got to this ability to have enough people in Robinhood to have this short squeeze. Is because we have enough of the little guy moved up a notch. I'm telling you, I know what I'm talking about. I do this for a living. I know exactly what I'm talking about. We've got enough of the little people up a notch with enough money that you push enough buttons. I mean, you get enough people to push the same button, it hurts. You know, it really hurts. And we didn't have that when they're taxing you so high. You don't have the control of your own money. You can't do that.
I feel like
The
it's also
problem
just due
is
to
that
the
upper
medium is so much
wealthy
easier to get into.
the upper wealthy can afford to hire lawyers to get them out of paying what they're supposed to be paying. They're not even paying what they should be paying because there's this IRS that has so many different rules
I
and
mean, I think
regulations that
if we
no
could
one
just like fix the
understands it.
system, I don't think we got to tear anybody down. We could just move up together.
Like you literally could just do a 10% tax on everyone and be done with it, and it's all fair and even.
I would like to only be charged 10%.
I'd like a flat tax.
That helps the rich more than us.
So let's look at Saudi Arabia, Dubai. In Dubai, you have 0% income tax, and the quality of life there is amazing for the people.
Yep.
Not everybody.
The people from
Not
Dubai.
the
The
guest
people
workers.
from Dubai.
Yeah.
No, there's still poor areas there. We used to stop there. Yeah, it's not great for everyone.
It's not great for everyone. In America, it's not great for everyone. I can go.
Yeah, and that's what we're talking about. That the majority of people don't enjoy.
You're not gonna have like people homeless there though. It's like even in the UAE, it's illegal. It's literally illegal to be homeless.
That's weird. What did it do? Kill the homeless people?
No.
No, they put them in a 5-star jail.
No, the people who are like, if you're a guest worker or somebody who's not from there and you're out in the homeless, they deport you. And
Just
if you're
fly
from
to
there,
Singapore with some drugs. They'll kill you for
government
you.
programs.
But there's a reason people go from poor countries like the Philippines and work in Dubai. It's because the quality of life is better in that region of the world.
Although it's not all great. I mean, a lot of the guest workers who come from the Philippines are abused.
And that's like the biggest problem in America is our tax system is so fucked up that The people who know how to navigate it get out of it, and the people who don't end up paying for it.
I'll pay taxes when they come to me. I know the IRS doesn't have any people. I know none of you are listening. I know the IRS doesn't have anybody there.
I mean, just think about how often we talk about taxes because it's so complicated that we don't understand even what we
What's
have to
your
pay.
opinion, Desnet?
And the people who can afford wealthy lawyers to do their taxes get off a lot better than the people who can't.
Wait, Singapore. It's weed is still legal in Singapore, right? Aren't they like super anti-drug?
Yeah, I think it's illegal.
I'm not gonna lie, Singapore, I've been there on vacation before and for some work, and I think it has really high quality of living standards. Good
It really does.
Great public transportation. So
Super clean.
everywhere.
I-
They're really
I-
tough on
Hanging out at
crime.
all the resorts.
I am 100% in the mindset that wherever there's success, there's always slums. So there's always a black and white to any like economy. right?
Absolutely.
That's why I truly believe.
No,
I
no,
truly
no.
believe-
Go
You
to
guys gotta
Singapore.
go inland.
No, go to Singapore. You can jog around the whole country. Go
I've
there.
stopped there before, and I've walked through some pretty slummy places there. I mean,
It's a melting pot
Yes,
country.
Sensei. Singapore is very, very brutal in their like penalties.
America should be more, because in America we just let drug dealers and thieves walk around. We don't kill them or anything, and they really decrease quality of life. Like, we want to give Section 8 housing to everybody, right? But when you have drug dealers come into
oh god, let's go back to stocks because this is.
So in order to fix things like drug dealers and black markets, you have to be able to remove the black markets. So
Stop the
finding a
war
way
on
to make
drugs.
drugs legal
Yeah, and that's not happening.
way is going to remove the black markets, and then you're not going to have to deal with that.
Exactly. You need to do what they did in like the Netherlands with a lot of stuff.
Or back in the 20s with alcohol.
I don't think a lot of you were on last night when I was talking about it, but I said have like a hotel and you can do drugs in the hotel. Because a lot of people are going to take that way out instead of going and getting who knows what from a drug dealer.
Hey, didn't they just
the
do
thing
that?
is
Hey,
that,
didn't they
like-
do that in Oregon? They like not a couple of months ago during before the election. Like they rented out like hotels and stuff for the homeless, and they were actually
They did that, I think, for
giving money.
COVID.
Yeah, they were they were giving money for them to buy their drugs and their get their fixes and stuff.
I'm not telling you
I'm
about
not for
buying
that.
drugs for people. I'm saying allowing a safe place for them to do it to prevent it from getting to the children and parties and having a regulated
think
place.
It's a very like one perspective sort of point of view to say that it's not part of your culture, so like it's not going to be legal. I think I gave this example once. Like I grew up like not drinking, not doing drugs, not anything, right? And I was out with my partner's family, and like his mom and aunts and everybody, they're out there and we're sitting in a bar and they're drinking and listening to like live music, and I thought like, wow, this is so different from like how I grew up, because my parents don't drink, they don't do this. And if you go to certain parts of the world, like you go to Kuwait, you go to Saudi Arabia, you go like to dry countries, and it is illegal to not only drink but to consume, but to have alcohol on you. But because this country has a culture of drinking, I mean, aside from the 20s, which we just mentioned, prohibition, like it is legal. And yet, like alcohol causes, like, I mean, it's not to say that it doesn't come with its negative effects, but because it's part of the culture of the prevailing group of people here, it's legal. So it's interesting that what'll happen to the country moving forward, like in some parts of the world, like, I mean, marijuana, that's happening, right? In parts of the world, marijuana is part of the culture of the people. So is mushrooms, so is other psychedelics and other things like that. And I think that there just needs to be a little bit more open-mindedness about what is legal and why are things made illegal.
I mean, honestly, if doing something, even if it harms yourself, doesn't directly harm another person, I don't see why it should be illegal at all.
Where are these countries that let you take mushrooms all day?
You gonna move? You gonna move? Yo.
I think like South America and like Mexico, where it was part of the culture, you know. I don't know if it is legal in Mexico currently, but I mean, it used to be.
How much is a flight to South America?
Doge just needs to hit like one more half or 1/10 of a cent on Doge. On Doge.
DMT. We're gonna go back to the DMT talk.
I know, right? Yeah, don't bring mouse in it because that's a whole 2 hours.
I got a dude in Mexico.
Daniel, I mean, at $40 a share, I mean, one share would drop.
You ever
so
done
much.
DMT? You have a dude in Mexico for real?
I'm not gonna disclose where I've done it exactly, but yeah.
According to
I've done it
Travis T on the YouTube chat, Netherlands,
I may have.
you can do the shrooms.
I may have some.
Hey, you did get that? Did you get that rocket trip like everybody does? That straight to outer space?
So because I'm not a smoker, it was always difficult to like get and hold it for long enough in my lungs because you really only have a 20-second window when you take it in. Otherwise, you have to wait an hour before doing it. So the last time I did it, yeah, I was right there. I mean, everything was ringing. I was right at the door, and then like I puffed out all the smoke, and I was like still tripping for like a good like 30-40 minutes, but I was present. I didn't have the out of body like lost, dissociate, and like have the dying experience and going to that space with the little creatures and stuff. But I'm hoping soon.
I'm shaking. I'm kind of shaking in my hands, and my feet just got super cold just from your explanation of it. Because
Man, though,
I guess I mean, aside from marijuana and alcohol, I did do what is there ecstasy quite excessively, and yeah, and I still, even to this day, when I think of it, I get that like my hands get super cold and my feet get real cold, and it's the same, that euphoria that I feel.
Disclaimer: we do not condone the use of drugs in this channel. Do not say anything. This is just fun talk, okay, guys?
Absolutely.
This is
disclaimer. We don't endorse drug use, illegal drug use.
We're
at
not
all.
endorsing illegal
we are
things.
proponents of making it legal.
But I do
not
think that these
doing it
things should be made
illegally.
legal. Yeah, I think that these things should be made legal for sure. Psychedelics, particularly like MDMA, I mean, they're amazing in terms of like what they can do for people with PTSD and just, and we've talked about the stocks that are doing stuff like that. Like MindMed is one. We know Compass Pathways is doing psilocybin as well. That's a great stock. I feel personally, I'm not a financial advisor, but you should do your own due diligence. And another one that's working on the psychedelic realm is Seelos, SEEL, and they're doing stuff with ketamine. MDMA can be categorized in that sensory hoax. Yes, you can look at full reading if you want to do on MDMA and on Third Wave. Just Google Third Wave MDMA and you can read up onto it. Even though like a drug like ketamine that people don't think is a psychedelic, it actually is as well. What's the oh my god. Who makes Adderall? That's the ticker for Matt.
Yeah, easy.
I mean, the thing too with making things, everyone's so worried because it's illegal that they're scared to go and get help. So when you make things legal and they can actually go and ask for help without like prejudice, you're more likely to get help too than just trying to figure things out on your own.
Right. And who's to say that people are going to have a problem? I mean, there's a possibility, yes, but psychedelics and these things that are used in like medicinal plants, there's really not much room for addiction with these sorts of things. It's not like alcohol, for example, that ruins lives.
I mean, I'd rather have my daughter go and get high somewhere in a controlled environment with sober people around where she's getting legitimate drugs than doing the same thing with some random drug she got from who knows where in a place where no one's sober.
Again,
It's all about intention.
Worst kids doing drugs. Okay, guys. Just again, all fun talk here.
Yes, fun talk. Yes, who saw the Mars landing? That was so awesome. We were doing it at the same time, like putting up. It was really. Marduk just posted a. Go ahead, Marduk.
Oh, sorry. Were you guys already talking about it? I had the Discord muted because I was listening in on the stuff. I had a work meeting at 4, so I couldn't. I was able to see the landing confirmed, but I didn't actually get to see them fire it up. So, dude, it's exciting because Perseverance can send samples back, right?
I don't know.
I'm pretty sure that's what Perseverance is there for, is to collect samples, and it can actually like send them back to Earth, little rockets.
That's so cool. I saw that it didn't it land exactly on the spot where it was supposed to land?
Absolutely.
I mean, that's amazing.
They got to be using like LiDAR technology that, like, you know, SpaceX has.
LiDAR. Isn't that the Luokong, that one that's doing LiDAR? That stuff.
I'm not too educated on it. I'm not really up to date, but I mean, it would be really cool if, you know, like NASA and SpaceX and you know, whoever are being transparent with their technologies to a point, right? You know, like, at least working together to be like, this is the way that, you know, this is how you fix this so that we have success all the time.
You ever watch Space Force?
Yeah.
Wait, Space Force. Oh, the movie?
No, what platform was it on? I think it was on Hulu. Hulu? I don't know. The one with Steve Carell.
Oh, I didn't see it.
It's pretty funny. It's about space.
Yeah, my brother-in-law's in space. He is in Space Force.
And so like they're talking about like, oh, it's super secret, and like their biggest enemy is like China, and it's so funny because they slash each other's like moon tires. Space gimmicks. All right.
Guys, I also found a really cool website that tracks coal plants globally. I'll share it. It's pretty cool. It's like it really goes to show you how countries around the world are starting to decommission their plants and how many are still operational in those countries. And it's really sad to see how many exist and are currently under construction in China and in India.
Yep.
Hey, love y'all. Thanks for the chat. Gotta make dinner.
See you, man.
Bye.
Bye, guys and gals.
So Doge over 6. Wow. Back. Makes me happy. A lot of stocks still in red though, but they're on discount. Anybody see good gains today?
I think I've opened my app.
I think my best performing one, oh, well, I don't know. It actually dropped down right now. QuantumScape is still up. That's good. That's that solid state battery one. I think they said that they are building something in California to test batteries or build batteries. Some news came out yesterday. And then somebody invest. That was the news that I posted in. Yes.
I think you're cutting out.
George Soros's firm is now holding $280 million of QuantumScape. That news came out on Bloomberg.
My crypto account looks really pretty though.
I think the second link is a little bit easier to. It's literally like the same type of map. It's not the one that I found earlier in a video. I'm still gonna try and find that one, but it's
wow.
nice to see the States is really starting to and Europe as well. They're really starting to retire their coal plants. And actually, India is making a good effort to cancel and potentially retire their coal production as well, and take advantage of the land space that they have to put up solar farms. So I actually found something interesting. There's a ticker called OEG, Orbital Energy Group. Apparently, the old singer Akon did a bunch of activist stuff in Africa.
Yes, he did.
And
he did like wells and things like that, right?
Yeah, and so apparently him and this new organization called I think it's Black Rising Sun. Oh, 1 second. Oh, Black Sunrise Half Century Fund. It's like a new organization, and like I don't know, there's a bunch of people going in, and they're merging with Orbital Energy Group, and they're going to build solar farms on the land of currently decommissioned coal plants.
Wow. Their target price, 12-month price forecast, have a median target of $13.50, high estimate of $15, low estimate of $12. So it's good, considering it's at like $7.72 today.
It's down considerably, and I watched the video, and the guy was kind of like nervous about their revenue streams, but you know, like I believe that you have to spend money to make money, and with any hope of Biden putting out this $2 trillion stimulus package and like lots of money pouring into the economy, this seems like it would be a really profitable business and a really good idea. But I first still think that we need to improve the technology and capacity of solar panels and batteries before we just go out and start building like a bunch of farms. You know what I mean? So it's gonna be a few years process, but I think this is a good opportunity for an entry point, at least for a small position. I'd be willing to
think that
like $100.
Yeah.
What ticker?
OEG.
Yeah, I'd have to do more reading on it, but it looks like it had popped up. So it popped up at $10. So there may be some consolidating that happens because it was selling for around $3.93 back in January. So just under $4 on January 21st when it like started popping up and did this like meteoric rise to 1068. So again, I think that there is a lot of buy that happened. Well, it was lateral move. It was basically lateral.
I really like the idea of the company's like goal. That's what's really drawing me in. I think that's what drew in a lot of people. But yeah, I mean, their financials are a little wonky right now, so I definitely would like to keep this on my watch list and hopefully do some more digging to find out, you know, if because like I think it's a phenomenal idea. Coal plants take up a large percentage, like a large area of land. I mean, even at the efficient, it's not like we're getting rid of all coal plants. We're just shutting down like a lot of them because we don't need as much of them anymore. I think it would
I
be
would
better,
watch it.
I think it would be better to take the hit now, investing in getting solar to a point that it can be beneficial in the next 5 to 10 years, because it's getting ridiculous. If you look at the map of the world, like that link I sent, you see how many. Like I gotta find the other link because it's still
So
pretty daunting.
OEG was founded in Houston, Texas in 1998. It operates in the United States and the UK, provides engineering, construction, maintenance, and emergency response solutions to the power, utilities, midstream markets, engineering, procurement, construction services, and renewable energy industry. So design, it engages in design, installation, commission of industrial gas sampling, measuring, delivery systems for energy power processing. So I'd look into it more, but just looking at the chart, that's what it kind of looks like right now, barring any other news that comes out.
Just look at the density and percentage of operating coal plants in China. I mean, I think it's it's just absolutely absurd. And China has a lot of hills and valleys. They could really like take advantage of the land space they have there.
So they focus mainly on, it's just clean energy or specific?
So I did a
Is it
little bit
solar?
further digging. They're actually using a company called Renewy for their battery systems, which apparently can hold more energy. Like the capacity's higher, and it's more cost saving, like cost efficient.
Got it.
I'll link the website for Renewy so you can, because I was just reading through their article, and then it happened to mention the company Renewy being the.
I've heard that somewhere. Why is that so familiar?
I looked them up. Apparently, they're still a private company.
Oh, okay, no, never mind that right now. But orbital gas, so they do gas, power, solar, renewables, foundations. How do they do?
So Renewy says that they have a saying.
How do you spell it?
RE. I posted the link in general. REUVI.
So they do electrical power, midstream oil and gas, emergency response sectors in North America. I think we need them. We need them in Texas.
Renewy uses like molten salt to power their batteries, or something like that.
That's interesting.
So let me read it off here. Right. Utilizes readily available materials, operates through an unlimited number of charge and discharge cycles, only limited in life by the structural integrity of the casing, utilizes materials that do not harm the environment, and carries no risk for spontaneous combustion, much higher energy storage capacity than lithium-ion cells, substantially lower manufacturing costs, and projected 3 to 4 times lifespan over competitors. The Renewy battery is a grid-scale energy solution, cutting-edge technology using readily available materials, industry-leading safety, efficiency, and sustainability, and a smaller footprint, higher output, and longer life cycle. Right. Here is the bigger problem. The wind is erratic and solar is inconsistent.
And not that efficient when you take into account all the parts you have to put together to put into them, and the cost and shipping and everything.
So if anybody knows a thing or two about chemistry, salt has an electrical charge that can be harnessed.
Nuclear.
So it's
Nuclear.
the potential.
Thorium salt reactor.
Essentially.
Yeah, the thorium salts, man. I really like that stuff. That's some awesome shit. Push to talk hates me.
Plug power below 50, right?
If the small nuclear power plants they're talking about, I'm actually really for that. I think if you can replace a bunch of this stuff, you don't want to put people out of jobs necessarily, but if you can produce power for cheap, then boom, go for it.
So anyway, yeah. So OEG and like this whole merge with Acon and the Black Sunrise Half Century Fund, they're all kind of going in on this idea to take decommissioned coal plants and use that land space to have solar farms. And they specifically said providing jobs for the Black community. Obviously, like I don't know if that's like the that's it. Like, oh, if you're white or you're Hispanic, you're not allowed to work here. I highly doubt that's the thing. But like, they're solely focused on like providing a workplace for Black people in America, which is honorable for sure. I get it.
Sure.
And yeah, I mean, I'd be down. Like I said,
Tim Scott opportunity zones, they're dank.
Absolutely. I think there's a lot of unused or inefficiently used land space out there, for sure.
You gotta ask yourself, why so many MAGAs? Because of
I'll be back.
opportunity. That's why, in my opinion, it's because of the opportunities.
Is this the battery one that Acon's a part of?
Yep.
I think that's where I've heard it from. But there was something else to it, but I can't really find much on it.
Raven coins up to 10 cents. Told you guys at 2 cents like 2 weeks ago. I mean, you can never call the future, but that one was looking good.
Kata, so this is the video I watched earlier. I think he does a pretty good rundown on what's going on. He like gives you all the news and stuff and the merge.
Is it a YouTube video? Maybe that's what I watched.
Yeah. Like I literally just type in the ticker and then I go by upload date and then I find like the most recent stuff. Pretty much to sum up his video, he gives you the news of the merge, talks about the company idea, says he likes it, shows you a global, like a world map program that shows you all the coal plants that are active around the world. Then he gives you.
Wait, did he say he likes the stock?
He likes the stock for sure.
He better be prepared to get called into House committee meetings.
Right. Absolutely.
The only reason that existed was to protect. The fact that it was them, not the DTCC or the SEC, is disgusting.
Or the New York Stock Exchange.
The regulators are not regulating shit. The stock desks. If you have a minimum wage, you're going to put out. You won't put out any large corporations. You'll only put out small businesses. That's what will happen. Facts.
Small businesses are far more.
Unfortunately, that is the case.
Yeah, Walmart, and any other company that you can, Amazon, they're all putting the small guys out of business.
Yep. The only way they can have their business is if they like sell their product through Amazon. You know, it's just putting themselves under the thumb. Right?
Mike Lindell, man,
What?
he's even having trouble, and he sells those pillows like crack.
What needs to happen is more people need to get on board with unions.
Mike's problem is
get comped easy.
Crack.
What's that?
You talking about the My Pillow guy?
Yeah, he's dope.
He's on crack half the time. What do you mean he's dope? He's on dope.
It doesn't mean he's not right.
He's
Dude's worth. Go look up his net worth and tell me he's wrong.
So you're confusing dollar amount and success with intelligence and whatever. Like,
Not at all. He knows the people. He understands human nature. He may not understand everything else, but he damn
right. He's got this pillow that he sells, which is basically a pet rock, and he just hypes it up and people buy it. But there's no value there really.
No, they support the movement because they know where his money goes. He spends his money wisely on things that are for conservative things. Like, that's just what it is.
Yeah,
it's similar to supporting like a political PAC, but it's just a private corporation and your money's being spent well. I don't know.
And he sounds like a lunatic, just like that McAfee guy.
John McAfee, he's nuts, but John McAfee, yeah, he is nuts. Mike Lindell, I mean, he could be nuts, but what is he specific?
They're two peas of the same pod to me.
What's he wrong about though? Like, what's the specific argument?
What's he right about? I mean, you brought it up. I don't even know where Mike Lindell enters the conversation. This was about like minimum wage and poor people in countries.
I mean, the conversation seems to flow around all over the place.
Look, I mean, if he has a solid product and he's, being a good salesman, like, I don't see any issue with it. Whatever he chooses to do in his own personal time, unless it's unless it's like trafficking children, then it'd be like, okay, that guy's a piece of shit and I'm never buying his product. But, like, you can't tell me that, like, anybody out there is perfect, right? Like, sure, maybe he fucking smokes crack. Maybe he goes to the casino. Maybe he's actually a really good guy. And, like, you might think he's delusional, but that's your opinion.
Some of the most famous statisticians and math experts in this entire country are right on board with him, buddy. Math is some really good stuff.
It's just funny though, because like, although I don't agree with crack cocaine, really all it is cocaine with water on it and then heated. It would really all depend on the purity of the cocaine, which, by the way, is probably like, as long as it's like pure and not completely cut, probably one of the least dangerous drugs that on the market today. I don't even want to get into that stuff because, like,
Similar to caffeine, very similar.
yeah, people can abuse lots of things, and they do. It's just like, well, caffeine's legal, so it's okay if I drink 10 cups of coffee in a day. No, that's not good for you. Like,
Yeah, it has to do with the amounts, but it's, I mean, ultimately, I think people are terrible at like regulating
far
that
worse
specific
opioids
item.
and fentanyl being like kicked around and like all these street drugs like Flocka. I don't even want to like. I don't like. Yeah, smoking crack is not a good idea, but you know, it's like it doesn't define you as a shitty human being. Like Hunter Biden smokes crack, yeah, but him smoking crack isn't. It doesn't make him specifically a shitty human being. It just
No, taking billions of
adds
dollars
fuel
from
to the
other
fire of him
like
already
on
being
backdoor deals, man.
Mike
I think he's
Lindell's
shitty.
like Mike Lindell's just a dude that likes pillows and sells pillows, and he's just a salesman. Like, and he loves God, so like, yeah, fucking all the power to him.
I just mean it's tough to move your product without Amazon. That was the point.
Really, or unless you're like a really convincing salesman with like TV time, you know what I mean? That's really it. It's like it's hard to get public attention these days because there's so much competition. So people just bite the bullet and save money and just put it through Amazon so that they can get recognized. But if they have a solid product, it's typical that they'll, you know, market themselves, like they'll remove themselves from their like, I don't know what kind of contract you sign with Amazon when you put up your business for sale on Amazon, but I would do it long enough to gain recognition for having a solid product, and then I would ditch that and just, you know, go independent.
Does everybody hate Maxine Waters equally now for like not muting her damn mic all day?
what was the answer to the question of the day?
What was the question of the day?
What mistakes did
solves
you make?
this problem? Well, so I mean, what solves this problem? What did everybody kind of sort of mention, dance around, but never really get to? What would have not required
In
them to
blood
have
face
that?
after he asked what mistakes he made.
Well, so the real important point, in my opinion, is same-day settlement. That would have removed the requirement for them to have the whatever $1 billion in front money, and they could have kept trading. And if somebody made a bad decision that breaks something up higher in the chain, well, then we would have been able to see where that was more clearly. It would have been on them instead of down lower on the little guy. But in fact, I don't think you even have any of those systemic risks or problems with same-day trades. If they happen at the exact same time, there's no room for a backdoor deal. So you're cutting out the middleman. They do not want that. But I think there's more of us than they, so I feel like we can definitely win. That was my thoughts for the day. Anybody else have thoughts?
Thoughts? What is free thought? What even are we?
Well, I'll second a need for same-day settlement. T+0.
Patrick Byrne is a really, I don't know, the stuff that he did with his time and money are very interesting to me personally, just because it goes to the heart of this issue. It's, I don't know, pretty cool stuff.
Someone should explain T+0 to me.
So right now, currently, you trade a stock, like the money goes, okay, but the actual stock itself is a file within the DTCC that doesn't actually trade for several days because of what they call the plumbing, which is essentially it has to get through this guy's hands and this guy's hands. It's a bunch of middlemen that have the ability to potentially make money off those trades in different ways. So cutting out that system of their ability to make money and fees and all that crap on all this and do backdoor deals is not advantageous to them, but it is if you would like to have an open and transparent market. So the money and the stock would trade at the exact same time, not money trades and then maybe you get an IOU or a real stock, who knows.
Right now, we're under what they call T+2. Takes 2 days for settlement.
So if you did T0 on a blockchain where it's open and transparent, you can see every
Happen, you can't scam it.
I see. So how would a broker make money? Just the initial one?
Peace. Me too.
Have a good night.